Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and happy Tuesday to you both.
Hello.
Hola.
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 See my man who's on a 5-day bender? Gone out five nights in a row.
I have concerns. He was pawing through the cabinets like a black bear in a Tahoe cabin. And I was like, what are you doing? He's like, I'm looking for my iced tea. And I'm like, okay. And he's like, there it is. And then I look down and I'm like, are you wearing Crocs?
And then you pointed out that they weren't even in sport mode.
They were not even in sport mode.
Yeah, he's completely relaxed.
And every day you're shuffling.
Oh, you got the
There's
cherry.
like the cherry on it.
Stemless cherry. You took the stem
Oh,
off.
I didn't take it off. It broke.
And then he proceeded to make fun of my outfit, which is very well coordinated and super cute.
I didn't make fun of your outfit. I said, what shoes were you
I'm
wearing?
wearing like boots. I'm in my American Girl doll era.
That is like an American doll.
Yeah.
Like baby doll socks.
Yeah.
And boots, real high heels, 8-inch heels.
They're not. They're flat boots, but whatever. You could never.
I don't want to ever.
So what time did you get home last night, girl?
Around 11.
We call that T plus 2, which means they should have been in bed by 9. That's late for you. You were in bed by 11, or you got home at 11, bed by midnight. That's bad.
Yeah. No, there was no traffic, but we had to walk back.
So I don't understand what happened. So I went to bed and the Bears were winning, and I was like, "This is great. Offensive line looks
tell you
good.
what happened. The
Defense
bet
looks
looks great.
good. Caleb's using his legs. We've got good weapons. Saw us a good little bit from
We didn't have any weapons. We should have been up by 30.
No, Roma Dunze, Colston Loveland. He had a couple. It was DJ Moore. Like everything I saw in the first half. I slept like a
Against
baby.
probably the worst team we're going to play all year.
I slept like a baby. I was like, wow. I was like, are the Bears actually good? And then I went nighty-night, and then I woke up this morning, and I was like, what happened?
What happened was...
No, seriously, what happened?
Was the second half they didn't play as good as the first half.
But just, I literally don't understand.
Well, you were there. You were in the midst of everything. Great seats, by the way. So I could picture you on.
But McCarthy, the kid, he grew up here in Chicago.
He did. And
Yeah.
he played so bad in the first half. I'm like, this is what happens with a rookie quarterback, blah, blah, blah. Second half, the kid played good. And the Bears got tired, I guess. I don't know.
Got tired?
I don't know. What else could it be? It was a nice night, too. I mean, they came out fired up to start the game. The second half, they just disappeared.
So the Bureau of Labor Statistics is going to do a downward revision of jobs this morning. Are you going to do a downward revision of the Bears?
He should.
Like what were you? Because you were saying they were going to be like what? The record.
I could just tell you, and he bet the game last night. Him and the other brain trust, Scott, who'll be on the show later today at 9:30. You can hear him listen and commiserate with Sadnoff. You had a chance to take 80% of your bet. Manage winners. We've done a lot of research on this. You had 80% of your bet in your pocket. All you had to do was click on the button. What did you guys decide to do? What did the brain trust, without the bat there, decide to do?
Have you never met Scott? He wouldn't take money off the table if his life depended on it.
No, seriously. How now? Based on everything you've seen, what do you revise the Bears record
He would
to?
have taken the 80%.
9 bid Bears.
You're still 9 bid?
100.
Yeah, I'm 9 bid Bears.
Okay.
Yeah.
I say 100.
I'm not listening to you. I'd be 9 bid.
I say you 500 at 9.
So how were the seats? How was the atmosphere? How was the food? How was the vibe? How was Klink's condo?
How was Klink's brats?
First of all, the seats were great. He has seats that actually split the 50-yard line. Great.
Is he a season ticket holder?
Been in the family for 50 years.
Wow.
Him and all his cousins.
Wow.
So
Is he looking for a Mrs. Klink?
there is
Just want season tickets.
there is a Mrs. Klink. But yeah, he's got great seats, and they're right below, the broadcast booth.
Wow.
So it's nice.
That's cool.
And they're covered. But even though you didn't need to be covered yet.
Sure.
Very nice.
So it's great. But we didn't eat at the stadium.
You didn't eat at the stadium?
No, he
Didn't have to. They were chowing all night.
He smoked some brats.
Ooh.
At his house.
Oh, okay.
And that was great. And then we walked over. He lives like
You did walk over.
he lives 3/4 of a mile.
The dudes on the trade desk were roasting you. I was in the kitchen yesterday, and they're like, Sauce is going to try to drive. They're like, what?
Oh, we tried to drive.
Yeah.
We got DK'd at the door
Okay, good.
because I didn't have Josh with me.
Good.
Yeah, I got into the north.
And that's why you're dragging your leg this
I
morning.
got into the north garage, and the girl Dikembe'd me.
So you had to turn around and then go back with your
Turn
tail
around,
between
yeah,
your
Talk about
legs?
the walk of shame.
Turn about.
Wow.
Yeah, she said.
You thought you could just flex your way into parking?
Yeah. So she's like, we're sold out. Can't get in here.
Oh, the audacity.
And then I'm like, how about cash? And she's like,
How about cash?
Okay, how does cash not work anymore?
and then she's like, are you handicapped? And I'm like, well,
yeah.
a lot of people say I
You
am.
phone my friend and ask him. That's you should have said. I would have vouched for you.
and
Yeah, he's
and,
handicapped.
And then so we had to turn around and drive out. So we didn't get the
How did you even turn around? Like, weren't there people behind you?
because it was early. It was like 4:30.
Oh, okay.
Yeah. And then so we were already on the south side. So
I love the public humiliation aspect of this.
it was a lot of public humiliation.
That's a nice added bonus for me.
And then we had to walk with the public, all the way over the bridge, do the whole deal.
Oh man, you.
Oh, I saw the photo of you in your outfit. Girl, you look like a hot mess. Scott looked nice. He had like the collared bear shirt and the hat, and
He didn't have a bear shirt.
he had a blue shirt. The picture I saw that Mike, the viewer, posted, he has a blue shirt on.
Yeah, he
He had a blue shirt, but not a bear shirt.
Okay, I'm so sorry.
I wore a bear shirt.
Well, they had
Barely.
Bears colors on the. He had Bears colors on the.
Yeah, that's why I thought it was
it's
a bear shirt. Yeah.
Sadov's just not.
Not a bear shirt.
Okay.
But
But you look toe up from the flow up, like.
anyway, so it was fun. Great. I mean, it was great until the second half.
Great. Okay. Well, so then it's not great.
And then it got depressing.
What? National anthem? Great. Went viral. Was trending on Twitter. Good job.
Well, Jim
Does
Cornelius,
great work.
Yeah. Great job. Just chills.
he's the best.
Yeah. And there was a flyover. I heard it at my house.
He is the best.
Yeah.
National anthems.
Yes. Agreed.
But he's, that's what he does.
Sure.
He's a really nice guy. I've met him before.
Oh.
And
Look at you, all of a sudden hobnobbing.
No, I've just met him. Had a really nice talk with him once, and because he runs a production studio.
Oh. Okay. So do you.
And so, super nice guy. I mean, couldn't be any nicer. And got a little gig.
Sweet.
Poor Bears. Poor Bears.
Poor fans.
I was so.
Bears do embarrass things.
I was
That's what the
so
Bears do.
happy last night. Like I was so excited.
Yeah, after the game, the guys they were doing the post game, like 11 to midnight, like Olin Kreutz and all those guys. They were.
What could they say? I mean,
they were just ripping on it. Yeah. If Doug Buffon was still alive right now, he'd be rolling over.
How was the tribute to the '85 Bears? I bet that was great. I follow Walter Payton's son on Twitter. He's been on our
I was
show.
online for the bathroom for the entire time. It was such.
What? Your stupid prostate.
I
you
mean,
had too many Diet Cokes. You had to go to the washroom. How long was the line?
like the whole entire
You
half.
still got the trough there.
Oh,
No,
they-
that's Wrigley.
Oh, no more.
That's Wrigley.
No,
Yeah.
Wrigley doesn't have it either.
Wrigley had troughs.
They had them.
Yeah.
Troughs are gone. The troughs
Okay.
were gross.
Well,
Because the troughs,
men are gross.
the troughs were just one giant splatter zone. troughs-
Oh,
That wasn't even your own splatter.
No,
that was the problem.
troughs were gross.
oh.
Thank God they're done with it. The best thing about the boxes at Soldier Field is a bathroom. Just to get a bathroom. Same at Wrigley.
Sure.
But the bathrooms there sucked.
So you missed the tribute to the 40th
I mean, I saw it on the
anniversary
TV there. but I
Okay.
missed the tribute. Yeah.
of- Okay. Ah,
And I missed the tribute.
man.
Yeah. Those guys, those guys look good.
Yeah.
Yeah, they're still hanging around.
They are. They are.
Yeah.
They look good.
The fridge wasn't there, was he?
No, I didn't see him.
I didn't see him. Okay.
The only one I see that lives in my neighborhood is Gary Fensick.
Oh, okay.
Yeah, he lives like 2 blocks away.
That's cool.
But and he's lived in that neighborhood forever. But he's the only one that I've seen around. I saw Otis Wilson once, and I saw Richard Dent at Harborside.
Richard didn't hit on me once. not mad at it.
Yeah, you could do worse.
I was like, sir.
Richard Dent is a huge shooter.
He is. So.
He's a huge shooter. Like, you don't, like, I don't know if you remember him.
I can't believe you turned it down. I'm calling BS on that.
He was just being nice, but
I don't know if you remember him playing because it's before
So
your
I
time.
hit on you. I'm being creepy. Richard Dent hits on you. He's being nice.
yeah, that's right.
Yeah.
I abide by that.
All right.
I abide by that.
Richard Dent was a 6th-round draft pick.
Yeah.
6th-round draft pick who ended up in the Hall of Fame and used to just take people out.
Sure.
He's a monster.
Yeah.
Agreed.
That's crazy.
That whole line, Hampton, Dent, Michael, they're all in the Hall of Fame.
Monsters in the Midway. Is this going to be your only Bears game of this season?
Ooh, last year I made it to 2. I made it to opening day and
Okay.
I went to one other game. I think I'm going to go to one other game.
In December?
Wow, you're a glutton for punishment.
No, I don't know when. I think
Okay.
I'm going to go to one more game.
Well, it's got to be
Oh, you're
soon.
gonna go for Halloween?
It's got to be soon, though, sweetie, because you were
Thanksgiving?
not built for this.
No, I kind of like the October, November games.
Yeah.
Okay.
December, not really, but
Sure.
October, November, sure.
Sure.
Yeah.
Nice.
So knowing what we've now seen for our division, go ahead and rank all the 4 teams.
We in trouble.
We in trouble.
Are we number 4?
Well, we were number 4 to start with.
Okay,
We did
well,
not make- we did not-
Packers look too good.
Packers are the number 1 seed in the
And
NFC
then,
North.
and then that's it. I mean, the
Okay.
Vikings and Bears and Lions all look like crap.
Okay.
Yeah, the other 3 teams look like crap.
Yeah.
Okay.
Yeah, doesn't matter.
There you
Packers
have
run
it.
away with it.
Packers really look good.
There. But the Bears,
And I
they look.
hate Sam.
I still don't
And I hate
understand.
it too. Sure.
I still don't understand what happened. I went to bed and I was so happy.
That was it. It was because of you we lost.
I
Bad,
couldn't
you didn't
stay
watch.
up.
Nothing worse than driving through Packer country.
I know.
It's so bad. It's so painful. Walking around in Door County and everybody's got their Green Bay sweatshirts on.
Rightfully so.
Oh,
proud
whoa,
of
no,
their good
Will's
team.
Northwoods. They had like their Muskie Fest last weekend.
Yeah,
Yeah.
I can't go back there.
Okay. Well, for a multitude of reasons,
You're
I'm
going.
sure.
You're going for foliage weekend. You're going to drive.
No,
through
Will's. She said Will's. It used to be across the street from my house,
Yeah.
the bar.
Yes.
I mean, they have good food, actually.
At Will's.
Yeah.
It's all fried.
No, they have good food.
Okay.
But, it's a Packer bar. It's hard.
Sure. Yeah. No, thank you.
It's hard.
No, thank you. Well, Bat, how was your evening? You were answering viewer customer support questions.
I was.
You were online.
saw that.
I was doing
Yeah,
work too.
Yeah. 24-hour day man here. Right, Sosnoff. Never
I was
sleep.
answering customer emails from the game.
No way. Liar. They don't even have good internet there. You're lying to me. And I know I didn't pay for your
They don't have good
charges
internet at
anymore.
all.
Yeah, it's hard. Well, there's so many people trying to get on there. Hey, did you see? This is sort of fun. Jason Kelsey, who's working for Monday Night, he was in Chicago
him on the
a
field.
day early. Yeah, he did. He was at Nice Lounge, like hanging out for a couple of hours on the north side, and a couple fans, took pictures with him. And then he did a funny bit where he was touring Soldier Field, and he had a hot dog, and he was trying to be the beer guy. It's online. You could go. He did a good job. It was great. But I can't believe people got to meet Taylor Swift's brother-in-law.
Oh my. Oh my.
I would have died. Anyway.
I would have died. I don't know.
What?
I don't think so.
What? That's cool that he was just hanging out. Nice Lounge, they have a Sport Pepper Malort. And so he had a shot of that.
Sport pepper Malort.
Yeah,
Anything
no
that
thank
has
you.
the taste of Malort has to be good.
Ugh.
Sport Pepper Malort sounds gross.
Malort is gross. The Sport Peppers are not adding anything.
I like a good sport pepper though. I like
Okay.
Sport pepper with a hot dog.
Yeah.
It's not bad with a hot dog, but other than that, I don't really care about.
Yeah, I know.
Yeah. But they were showing him how to make a Chicago dog at
No,
Soldier
it's just
Field.
Sauerkraut and sport pepper, a little mustard.
They were showing him how to make a Chicago dog, and they're like, of course,
Big change at Soldier Field this year is they added a Mr. Beef.
Ooh,
Did they?
did they?
I,
Is that because of the bear?
Yeah,
Yeah.
I didn't see it, but
You didn't see it? You didn't
No,
have it?
I didn't
You're lying
see
to
it.
me.
no, I don't know. It's one booth, but I guess the line was too long.
Oh,
So you
that
did
tracks.
look.
No, I didn't look.
Such a liar.
That tracks. Anyway, well, we got a great show for you today. There is a lot going on this terrific Tuesday. We're just gonna take over under on how sassy Tom's gonna be because he's just been on a bender since like last Thursday of just going out Are you going out tonight?
No.
Will you be
There it
at
is.
2:30 for the show? You want me to get Nick to fill in?
No, I'm good.
All right.
All right.
Say so.
Well, we're gonna see. It's over under. I think our combat pay is gonna kick in today, so that's nice. We got a great show for you today on this terrific Tuesday here at Tasty Live. At the top of the 8 o'clock hour, we're going to do an options jive, and it's just called Controlling What You Can, which is something I repeat to myself in the mirror every day that I start this job.
Controlling what you can, not what you have.
Control what you can, Vanetta.
It's a line I've been using for years. Control what you can.
Yeah. Yeah, that's going to be the options jive at 8 o'clock. And then at 8:40, we have Let Me Explain with Chris Vecchio. What are you... okay, Microsoft Teams, forced update. Thank you for that.
He's gonna explain things to us.
What are you talking about with Chris Vecchio? Did you see a tree hit his house?
Yeah.
Yeah.
Vecchio could be the most unlucky person I've ever met.
He's living under a dark cloud these days.
Whatever could go wrong goes wrong.
Mm-hmm.
Yeah.
It wasn't his tree. It was his neighbor's tree hit his house.
Okay.
Ugh.
Okay, well, still a tree hit your house. I don't think
And I'm not gonna lie, the limb looked dead. Like
Yeah.
it didn't have any leaves on it. Like if you look at the tree that hit my car,
It was your tree.
it was
You
my
know that if your neighbor's tree hits your house,
Yeah.
it's your problem.
Yes, anything that overhangs over your lot line or your fence, whatever you might have there.
It's your problem.
That's right. You could actually cut it straight across. At least that's the
Yeah.
rule in my village. Yep.
Yeah,
Yep.
that's
You
the
can
rule.
give it like a fade if you wanted to.
Wacky. So Chris Vecchio is going to be out. If you are an arborist, then join our segment when we talk about trees. I don't
Help
know.
him out. Help him out. He's looking.
Well,
for
Tony's a
somebody.
professional at this.
An arborist?
Well, his trees falling on
Yeah,
cars.
Yeah, cool.
I can help you.
That's going to be at 8:40 at 9 o'clock. We got a market measures. Why a 3X rally didn't crush sellers. Ooh.
Oof.
I like a description that I can understand. See, that's good. I'm going to tune in for that because that makes sense.
Okie dokie.
Right?
Okay.
And better than some segment titles like Heteroscedastic Outliers and Improbable Shoals Annihilation. What? But this I can understand. A 3X rally didn't crush sellers. Great. And then 920, his triumphant, ecstatic, just appearance. Scott Sheridan's going to be back. His
Yeah.
return. That's the word I was looking for.
Yes, it
His
was back in
return.
Yes, he was not a happy.
He was gallivanting in New York. He did not bring me Russ and Daughters. Where is my rugula?
Yes.
I love Russ and Daughters rugula.
Good.
I like Sabar's rugula too. What? You don't want a rugula or a babka for the high holiday?
Oh my God, he wouldn't turn down anything. You know that. He just
I know.
likes to pick
I know.
to it. He's got to be that girl.
I know. Well, Scott Sheridan's going to be in counting down the top trending tickers over at Tasty Trade, and that is our run of show for today. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Got a lot of news. Let's go.
Our leading story.
today's
Breaking news.
headlines.
Across the wire. Our leading story. Top story. Just in.
In today's headlines,
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's September the 9th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. You know, today is the day that the most people have birthdays on. So happy birthday, everyone, all those Virgos.
Really?
Yeah, September 9th.
I got 3 kids.
September is a month, has the most birthdays, but September 9th
You're paying for the Christmas present.
has the most
Do the math.
most people. So
You're paying for the Christmas present, New Year's, whatever you got. That's it. You're paying for it.
there you go. I will just
What
say,
happens?
not a fan of dating Virgos, but that's just me. Anyway,
I don't blame you.
what is on the earnings horizon, Mr. Bat?
Oracle?
Ooh, I heard of that.
Oof.
That's really about it.
Okay.
Oracle?
Also, as I did mention earlier, there is going to be a downward revision from the Bureau of Labor Statistics for some jobs. I'm just
again?
saying it's just happening today. I'm just putting it out there, and then I'm never going to mention it again. Getting to my first headline of the day, NASDAQ makes a push to launch tokenized to launch trading of tokenized securities. They are working with U.S. regulators to introduce the trading of tokenized securities, becoming the latest major financial player on Wall Street to double down on a boom in tokenization. What say you?
This is going to be good for the good kids, as we said.
Okay.
Because I am a big believer in.
But it's a little murky. It's a little confusing.
Not really.
Okay.
I'm a bigger believer in tokenization than I am in the upside of just cryptocurrency.
Really?
Yeah, I think there's more opportunity for regular individuals. I think there's more opportunity in tokenized securities. Like you might be.
What do you say? What is that opportunity? Like.
Well, you may be able to trade things that like you normally couldn't trade before because they're like
Isn't that what options are for?
No. Things that, let's just say there's a company that that you don't have access to because you're.
Oh, I'm not an accredited investor.
You're not an accredited investor.
Sure.
You can't get access to some.
Making you a peon.
It's giving you an opportunity potentially on a much smaller level to get involved in the markets.
It's giving me opportunities
in a
to lose money.
as opposed to going to a fund me.
Well, these are not listed securities, so they're in some cases they're not listed. So they're companies that just they tokenized rather than
sure. Like if you wanted to trade OpenAI,
as opposed to
at the NASDAQ, as opposed to some made up exchange somewhere in the world.
That's
sure.
correct.
So I see what you're saying.
You're not trading. You're not trading in Cyprus.
Yes.
Right. So if you want to trade OpenAI or SpaceX or something that's not publicly right. Okay, I see what you're saying.
The other thing is that you may be able to trade any security anywhere, any listed security anywhere in the world. Like right now, you can't.
Okay.
If you wanted to trade something, let's just say I don't even know if Revolut's a public company.
It's not.
Right, but let's just say it was public and it was in the UK.
Right.
But let's say you want to trade IG.
Right, yeah.
Mm-hmm. You can't really trade it now in the US because it doesn't trade.
Sure.
Yeah.
But if you wanted to trade it in London using a token, you could. And you don't have to do, so there's no currency conversion.
Right.
And there's no clearing. So because it's on a blockchain.
Okay.
So it's different. So
all right, you made your case.
I am actually a huge fan of this. Every exchange is going to do this.
All right. I'm still a little wary. I think they're just inventing new ways to take my money, but
I'm not taking your money. This makes total sense. This is
you did make your case. I see a case for this now. Okay, yeah. We will see. What are you doing in the regular NASDAQ?
Yeah, what are you doing in the regular NASDAQ?
This is NASDAQ, the exchange, not NASDAQ. The NASDAQ, the index, I'm shorted.
Right, that's what I'm. You.
Mm-hmm. I'm shorted.
Okay, beer me strength. Hey, in other news, why the 10-year Treasury yield's recent drop could be a recession indicator. The decline in the 10-year yield marks a notable drop from the closing level of almost 5% reached in January, after peaking at 4.8 on a closing basis on January 13th. The yield has since fallen to around 4.05%. Let's talk bonds. And is this cause for concern?
117.04, Sadnoff looking good.
I think so. First of all, listen, you can't have it both ways. So I thought the notes were really heavy yesterday.
Okay.
And they're down a little bit today, but let's see what happens.
Okay. What about regular bonds? The long bonds.
They're down a couple of ticks too, but I mean, they've just been on.
Yeah, they're down between 8 and 10 all day today.
Okay. Also, you got stuff like, wholesale something coming out and like CPI tomorrow, I think. Do you care?
Yeah, you have CPI and
PPI. Yeah.
We usually wait for Vecchio to tell us that.
Yes. Okay.
PPI. We have a lot of PIs, don't we?
We got CPI on Thursday, consumer price sentiment on Friday. Wednesday, you got PPI.
Yeah.
Yeah.
We talked about it yesterday. We have a couple of detectives.
Mm-hmm.
I'm a big fan of Magnum PI.
We talked about that yesterday.
You did?
Yeah.
Okay.
We have Magnum PI.
Nice. Bring back short shorts.
He did wear those all the time, didn't he?
He did.
Yeah.
He did. Gold has rallied to a record high above $3,600 an ounce as Fed rate cut bets firm. Spot gold rose 1.3% yesterday. Bullion hit a record high of 36.4629. Let's talk gold.
Gold
up another $11, flirting with 3,700 Southern. 36.98 is the
gold
high.
has been
About to sell my fillings.
Yes.
The other day we bought gold, sold silver. It's really been a good trade. Gold's up another $11. Silver's down 20 cents. I liked that trade when we did it live, and I still like that trade.
Mm-hmm.
Okay. What do you think is causing all of these shenanigans in gold
I don't
and
think
metals?
there's any shenanigans. I think there's just it's a commodity with limited supply, and it's just there really is a lack of sellers right
Okay. All right. Are you doing? What about? How do you feel about the gold miners?
now. I feel like they're untradeable.
Really?
I feel like everybody wants to trade GDX and that kind of stuff.
Right.
And I feel like it's just
So GDX has gone from around 52 to let's just round up and say 68 in the time that gold has gone from like.
and you can't make a dime in there.
Can't make a dime. I'm fine. I'm fighting it. I'm sure like the 60. It's hard.
It's a hard stock to make.
I think Julia manages. I was just thinking. I just think she crushes it. I don't know. Okay. Hey, this guy, Tom Lee from Fundstrat Global Advisor says Bitcoin can still reach 200,000 per coin by the end of the year. There's being a crypto bull and there's being Delulu. What is your projection for Bitcoin, like 2026 and beyond, given the move this year, the regulatory environment, so forth?
I think it trades down to 80,000.
Really? By the end of this year or 2026? Like just.
I don't know. I think
Okay.
the next big move is lower.
Okay. What about you, Bat?
You know what? I hate playing this game, but there are options that if they really wanted to do this, they could significantly benefit from it.
Sure.
So they felt like doing. I mean, they expect.
I feel like they've tried to squeeze it. Remember that stock you were talking about yesterday that went from like $2 to $70?
Yeah, OC
Whatever.
something.
$2 to $50. You know what they do?
I think they buy like Ethereum or something like that. Was that?
It's just another one of those same MicroStrategy
like
scams.
MicroStrategy.
Oh.
They have
It's like a
$75
Bitcoin
million to
treasury.
do it. They create like $1 billion in value.
Right.
So this is a bubble. I mean, let's not.
Bitcoin's in a bubble?
I think so.
Oh, okay. I don't know.
Digital assets. I mean, they're not going away. I think they're here to stay.
That's the
forever.
stock you talked about yesterday. Went from $2 to $75, and you said, "Did they discover cancer or something?" That was your quote. Did they discover cancer? Or
Cure
something?
cancer, whatever.
Sure. Anything in like IBIT or coin or nothing?
They all have IB ranks of like.
Okay.
Coin Ivy rank 3. Tom's right. Earnings October 29th, but it is up $2 to 304.
Oh, okay.
Not a good stock to trade with an IB rank of 3.
No, not the good one to sell premium. Yeah,
I've been down that road.
directional.
Hey, we are on the precipice of an IPO bonanza, eleganza, extravaganza. Klarna is their IPO is going to, their pricing debut is going to be later today. The buy now, pay later lenders implied market valuation is currently about a 50% discount to rival Affirm. The payments company from Sweden is offering 34.3 million shares with more than 80% being sold by early backers. The IPO price is set at $37. Are you excited?
It's really funny. I'm surprised they were letting 80%. Like, if I was a company and I was doing it and I was going to go public, I'd want the money for the company, not to get rid of all my early backers. I mean, you let them out of a little.
Sure, but they've been around for so long. Like, they've been waiting for so long.
You don't let them out of 80% on day
Okay.
one.
Well, the Klarna's IPO market value would be around $14 billion. Affirm currently has a market cap of around $28 billion.
Got it.
Got it. Are you doing anything in Affirm?
I am not.
No. What's Affirm's IV rank now?
AFRM Ivy rank of 3.
Okay.
Directional. You can have a lot of these Ivy ranks that are
Sure.
low.
All right. Well, in other news, StubHub, the ticket reseller, they aim to raise up to $9.2 billion in their IPO. They're starting their roadshow. They're going to price at $22 to $25 per share. What are your thoughts on a StubHub IPO?
I switched to SeatGeek.
Okay.
And
Is that what all the cool girls are doing?
Yes, and I'll tell you why. Because SeatGeek, they give you one price with all the fees in it.
Okay.
StubHub.
I think StubHub. I think
that was a FTC ruling that
go
they.
on StubHub, they do not do it.
Okay.
I can't confirm or deny.
Right. I believe. I think so. I think you're right, Tony.
I was on this weekend. They do not do it.
Okay.
But they'll say.
Okay.
I was on StubHub buying something this weekend, and I was like, you know what, their site sucks. So I went to SeatGeek. Their site's actually pretty good.
Well, they get the ticker of Stub. That's kind of cool.
Not bad.
I don't hate it.
Yeah, but their site sucks, and they don't tell you how much the fees are.
Okay. Hey, cybersecurity firm Netscope is eyeing a $6.5 billion valuation for their IPO. Now we're just running out of companies that I've heard of. The cloud-based cybersecurity firm says that they are seeking a valuation.
I am launching a $1 billion IPO.
Of $6.5 billion. The Santa Clara, California-based company says they would sell 47.8 million shares, priced between $15 and $17 a piece, to raise as much as $813 million.
Good for them.
Good for them. Hey, in other crazy news, 11 Labs is going to allow staff to sell shares at a $6.6 billion valuation. Numbers aren't real anymore. 11 Labs has raised $180 million in its latest funding round, which was in January, and they gave it a valuation of $3.3 billion.
Of course, they doubled.
Now we're in September, and now, double.
Yeah, why not?
Why not? AI.
Double
Boom.
again next year.
Yeah.
Next month.
Like printing money.
I do not
Easy.
understand how these companies can go in 1 year and double value. But
Well, Databricks has closed a $1 billion round, and they project $4 billion in annualized revenue on surging AI demand. Data analytics firm Databricks said they were on track to hit that $4 billion in annualized revenue, and they closed a $1 billion funding round.
$4 billion in annualized revenue is a lot.
That is a lot. Those are real numbers. But you were like, who's paying for these things? Who's paying?
Yeah, who's paying for these?
I don't even know what Databricks does.
Who's paying for this? In the second quarter, they said they served around 15,000 customers. Okay, there you go.
15,000 customers to get $4 billion means you're charging a lot of money per customer.
Well, one of the companies is Shell, so I hope that they are fleecing the crap out of Shell. But those are just my personal thoughts and opinions. Hey, Intel is announcing a key executive shakeup in their C-suite. A series of top executive changes were announced yesterday, including the departure of a products chief that at a time when CEO Lip-Bu Tan is intensifying efforts to turn around the U.S. chip maker, of which the U.S. government now owns a piece of. What are you doing in Intel?
We're
You're sluts? What?
I was going to say we're small long.
Okay. You're schlong?
Not long.
Is schlong?
Small long.
Okay. What's the IV in there?
Hold on.
Small long. Intel INTC?
7.
What are you looking at? Intel has an IV rank of 7, October 30th
Yeah.
as earnings.
Ugh.
Still time to do something in October if you want to,
Wolf.
with expiration of the 17th.
Wolf. Okay. Are you adjusting anything in there? What you doing?
No, because our position's
Okay.
tiny.
All right, it's a good job out of you. Hey, Microsoft has signed a deal with the Nebius Group that will provide Microsoft with GPU infrastructure capacity, and a deal worth $17.4 billion over a 5-year term. The company, I'd never even heard of this, BAT, the ticker NBIS. Stock went up 47%, which is a normal amount.
Yeah, the stock went from 64 to 98 right now. Earnings, obviously, September 9th, which were yesterday.
Yeah.
I can't. Ivy rank of 0.
Sure.
Markets, they weren't horrible in here. I guess 20 to 40 cents wide, depending.
I'd never heard of this company, so I was like, okay, cool. Love that for you. What about Microsoft, Mr. Softy?
MSFT, Microsoft trading 500 on the nose, up about $2. Microsoft does earnings October 29th. Microsoft's been a little weakish since early July, late July.
Are you doing anything in Microsoft?
I am not.
Okay.
I mean, I'm looking for a spot to get shorted.
Okay. SpaceX has bought the wireless spectrum from EchoStar in a $17 billion deal. They will get the licenses from EchoStar for its Starlink satellite network. The company's also agreed to a deal that will enable EchoStar's Boost mobile subscribers to access Starlink direct-to-cell service to extend satellite service to areas without service. Nice. A. SATS is EchoStar. SATS.
Not looking at.
Okay. That's fine. You can do what you want. Hey, Open Door stock is flashing a bearish engulfing chart pattern. Is the rally over? The rally to new highs, followed by a sharp intraday reversal to close lower, could have some chart watchers believing a top has been hit. It is the new favorite meme stock all across the land. What are you doing?
I mean, it's a $6 stock. Granted, it's one of those stocks that went from under $1 to $6 in less than a month.
I mean, you never fade a bearish engulfing.
Nope, never.
Yeah. So
nothing to do there. Buy it or sell it. Hard to borrow stock. Trade at your own risk. There are options on it.
Only thing I like about Open Door is their logo. It's fine.
Okay.
Like it.
Hey, you might have missed this at the top of the show, but I think GameStop has earnings. Maybe today after the bell, GME, maybe?
Yes.
Yes.
I had it on his list.
Yes, GameStop's earnings are coming, and Bitcoin looms even larger for the OG meme stock. GameStop is set to report second quarter results after the market today, with the original meme stock moving farther away from their traditional bricks and mortar video game business, and now they want to get into like Bitcoin custody sort of stuff. Are you going to trade GME for earnings?
No.
Okay.
I mean, it is a $23 stock on its butt.
I mean, I think Ryan Cohn is a complete douchebag.
Okay.
And I would never.
What about his little dog?
I would never buy that.
Okay.
I think they have Chewy has earnings too.
Which one says earnings?
Chewy?
Does it? Not on our list.
I kind of. Chewy's not?
No. I'm just saying it's not on our list.
Oh, I saw it. I think they have earnings
list.
Yeah, sometimes their earnings are close. Yeah.
Yep, you are right. CHWY. You're correct.
Yeah.
Earnings on the 10th before the morning.
Right. So you have Chewy and GameStop. I mean, they both.
Why don't you just do a short the bleep out of Ryan Cohen double parlay?
If I could short Ryan Cohn, I would. He's such.
You can short both of his companies.
I mean, he's just a self promoter, but whatever.
The company's hoard of cash and marketable securities jumped to $6.4 billion from $1 billion at the end of prior year's quarter. It'll be interesting to see how Ryan Cohen plans to use that cash and
I don't know
capital.
How you go from $1 billion to $6 billion. I mean, I don't know where you stole
A
that
gig
money.
if you can get it.
I don't know where you stole that money or who gave you that money.
Do you want to get sued?
Why would it get sued? How do you go from $1 billion?
You can't say that someone stole money. You can't.
I don't know where you're starting.
Right, yeah.
Go from $1 billion to $6 billion.
Just say allegedly. Allegedly.
They're selling convertible debt
Yes.
with no conversion rate and no interest rates.
Mm-hmm.
That is the same thing as stealing.
Okay.
I'm sorry.
Hey, Uber had a nice little day yesterday in the market. The company announced one of their many robo-taxi partners, Momenta, will test fully driverless cars in Germany next year. The news comes as Europe continues to lag behind the U.S. and China, and the number of commercially operational robo-taxi services. That's a mouthful.
I'll tell you, when we were in San Francisco last week, it felt like every other car was a
Oh, a Waymo.
Waymo, not Uber.
No. But there was other Waymo
We took Ubers, but the Waymo was everywhere.
I know, but there was also other driverless cars, not just Waymo.
Okay, I don't.
I didn't see one.
Waymo only uses the Jaguar, right?
Yes.
I saw other ones. Oh my!
I mean, it's San Francisco. It's the
San
mecca
Francisco Wireless. I'm going to tell you right now what it is. I didn't.
Silicon
look,
Valley. So
but I saw.
You didn't see any. Those were white Jaguars.
No. No.
Those were
I don't know where this is.
Jaguars.
Driverless cars.
Can't spell driverless.
You're
You're a pecker. You're a hunt and pecker over there.
in San Fran.
What's Uber doing?
Yeah, go ahead. What is it? Uber's $94 unchanged. But you're right.
It was
48
good up
hours ago,
yesterday.
it was in the low. It was in the mid 80s. Now it's 94. Yeah. What'd you see over
Wow.
there?
I'm working on it right now. I'm looking for it.
What was it popped up? What was the first thing that popped up?
The first thing that popped up was lots of different companies.
You're a liar.
Name one.
I'm working on it right now.
So easy.
Can I move on, or do you want to keep
Really so
proving
easy.
your
Go ahead. You want to
point?
embarrass yourself some more, guy? What do you got?
I'm working on it.
Okay. Hey, Bat, you are a connoisseur of HBO shows.
I've been known to partake in
You
a few,
dabble.
yeah.
Yes, I don't have HBO because I can't afford
Poor
it.
thing.
Yeah, I
Maybe
know.
when you grow
It's
up.
fine. Hey, but if you want to share your password with me, now that'd be great. So I never watched Secession.
Very good. Excellent show.
I never watched it. I'm not against it or for it. I've never had HBO and I never watched it.
Excellent show. Excellent show.
You watched Succession?
Yeah.
You liked it?
Yeah, I liked it.
Okay, well, obviously it was based on the Murdoch family and their drama, and so now we actually have an actual season finale because Murdoch is buying out the liberal children to end the succession battle. Rupert Murdoch's son Lachlan has secured control of the family's sprawling media empire in a $3.3 billion deal to buy out the media mogul's 3 oldest children, and in a long-running succession battle, Fox, the stock, is up on the news. Lachlan Murdoch, the chosen heir, completed an agreement to end the decades-long dispute over the future of the world's most powerful media organization.
So I guess I don't understand what happened. Who bought who out?
So Lachlan.
Dad bought back the.
No, Lachlan bought out the other children.
Who's Lachlan?
Lachlan Murdoch, one of the kids.
And one of the kids.
Yeah, he's not the oldest, though.
Okay. So
So-
who's running the network going?
So there's James, Elizabeth, and Prudence, and then there's Lachlan, and then so he bought out James, Elizabeth, and Prudence. They'll each get $1.1 billion for their shares in the Murdoch Family Trust. That's not bad.
My sister can buy
But
me
it
out right now
includes
for
Wall
1.1
Street
billion.
Journal. It includes Fox Media.
Call my sister. Tell her she can buy me out for $1 billion.
Okay.
Tony's kids, they're all for sale for $1 billion.
Lachlan is considered the most conservative of the Murdoch children. So there was like some people who were obviously pulling for someone else to, get the nod, the coronation. But Lachlan.
Oh, I
Lachlan
didn't know
won.
Succession was about Murdoch.
Yeah, well, read a book sometime. What did you think
Educate
it was
yourself.
based on? What did you
Stop
think it was?
posing.
I don't know.
What do you think it was based on? Okay. There you
Good HBO special HBO show if you haven't seen it.
go. Rupert Murdoch's 94 years old.
Only the good die young.
That's crazy.
His wife's like 28.
She's not 28. I think
Nothing
she's
wrong
like in her
with that.
40s, maybe. Maybe she's in her
wrong with
50s. I don't know. Hey, I'm excited about
And
this.
vice versa.
Red Lobster, after viral headlines a couple years ago about how the endless shrimp promotion sent this company straight to bankruptcy. It wasn't quite true, but they did lose $11 million because all you fatbacks were eating them out of house and home. But Red Lobster
$11 million put you out of business.
Red Lobster, though, is announcing a new spendless shrimp promotion. They're not going to give you all you can eat, but they are giving you a pretty good deal for 3 shrimp flavors on 1 plate for $15.99, a little bit more restrictive than the $20 all the shrimp you can shove in your gullet promotion. But the millennial CEO turning things around. This doesn't look too bad. Little popcorn shrimp here,
It's
some garlic
disgusting.
shrimp, a little shrimp Alfredo. When's the last time you went to Red Lobster?
I've only been there once my entire life.
Okay, you haven't been in the new era then. You didn't do their seafood boil bags. My parents went because they're retired. They don't have anything to do. They said it was good.
It's not good.
You like a seafood boil?
I've never really had one.
Okay.
But I haven't been, the only time I went to Red Lobster was 2002, maybe 20 some odd years ago.
Yeah.
It wasn't good.
Well, maybe it's because your life is the opposite of that Beyonce line in the song. When he F me good, I take him to Red Lobster. Maybe that's why you've never been taken to Red Lobster.
She's got a good point. Possible.
Hey, YouTube announced yesterday that its first ever exclusive global broadcast of an NFL game broke a record for the company, achieving the most concurrent viewers of a live stream on the platform. Over 17.3 million viewers from more than 230 countries. I didn't even know there were 230
I think
countries.
190.
Right, yeah, I was like, that's a weird... Okay, anyway.
There's not even 200.
I'm reading from the press release. I'm reading from the press release. Anyway, 17.3 million people from more than 230 countries and territories. And territories. That's the caveat. Territories. Tuned in to see the Kansas City Chiefs and the Los Angeles Chargers in Sao Paulo.
195 countries.
Countries and territories.
What the hell is a territory?
Like
I have my own territory.
There's territories. So 230 countries and territories.
There are 60 dependent territories.
So 190 plus 60. There you go.
Yeah.
Oh, so everybody from the world.
That's correct. Everybody in the world watched.
Google. I'm not sure what Google's doing, but good job, YouTube, which is owned by Google.
Unchanged.
Google 234 and changed. Sadnoff's right. We could say it's up 9 cents and make him wrong if you wanted to, but we're not going to do that.
Okay. For a lot of jobs in the service industry, sometimes you can compete at an elite level, whether that's like bartending or being a barista. There's even a dough championship where you're making like pizza dough.
Yeah.
This guy, he's just working. He's not at a job, but this Papa John's employee is going viral. I didn't even know this was possible. Watch this. Kid's got some skills. That's impressive. I like how the dude in the back.
SOB for putting it around his shirt.
I love how the dude in the back is just so chill. From behind the back, pizza toss.
I like the whoever's behind them there just serving somebody.
Right, yeah.
You know, they have
no attention.
They have a bunch of people that.
Yeah, they have a dough throwing championship.
Yeah, but they have people that they'll roll it from one arm to the other onto the next person. They way better than this guy.
Who between the two of you do you think would be better at this?
He has no dexterity.
Well, I used to be able to do some of that.
This when you were making your tuna fish sandwiches, you learned
You
how to do
used
that too?
to be able
What
to
can't
do
you do?
some of that?
Honestly.
Well, we had a pizza oven.
Who's we?
Yeah, a long time ago, we had a pizza oven.
Oh, your pizza shop that was just really a front for your meth lab?
Yeah. I was
Where they
testing
learned how to
it.
do the fentanyl fold or
Testing
something
Yeah.
like that?
Made a lot of pizza.
Okay,
I
well,
love testing pizza.
this has been fun. But I have
I don't have a. I have a pizza stone, whatever it is, in my house
Pizza stone or whatever.
outside. You know, like a pizza thing. But I've never used it.
Okay. It's another
use
good
yours?
story.
Yeah, of course. Same with your shawarma, right? Machine, you never use
I haven't
that
used my
either.
shawarma machine either. But I have a pizza oven. You know, one of those big stupid.
Yeah, like a uni.
Uni. Yeah, I have an uni,
Yeah, I know.
but I've never used it.
I hit the
Okay.
uni first.
Okay. Can I go home? Pat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live and Confirm and Send next.
Yeah, I got an uni.
Okay.
You do have an uni.
An uni or an Audi?
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. Before we do, would you like to take a look at the market?
I would love to take a look.
Same as it ever was, Sosnoff. Even the S&P is up 475. Russell down $1. The small bucker. Dow up 25. And the Dow, I'm sorry, and let me do this again. Even the S&P,
try it in English this time.
Even the S&P is up 475. NASDAQ up 36. The Russell is the lone bucker, down 1, and the Dow up 26. Volatility, unlike yesterday, up a small 4 cents. Yesterday, you'll notice the market was volatility was a lot weaker than it's today. Maybe giving itself a little move to the downside. Sosnoff, we will see. Bonds down 10 ticks, 117.04.
Oh, no.
04, the opposite of yesterday, starting to come in a little bit. Bitcoin up 550 and change, over 113, although it was flirting with 114. Ethereum up $34, decent sized move, over 4,600 earlier this morning, falling back to 43 and change. See a little pattern here, Sadnaf? Of course you don't, because you can't see anything. Oil up 69 cents, trading 62 and change, and gold up 8. Silver down 24. Sadnaf, what do you think about the market? Maybe today we get a little bit of softness. What do you think?
With Spruce up 5, I wouldn't call this a crash yet.
No, I wouldn't say that either.
Yeah. I mean, I'm a little short. Sold some more this morning, but we'll see.
Mm-hmm.
I'm just going to scalp them.
Okay.
Mess around and find out. I'm Tom Sosnoff. He's Tony Batista's Tasty Live. Thanks for spending your morning with us. As always, let's see what we got. Confirm and Send. Tuesday, September 9th, as Vanetta said, the day that the most babies are born on. I don't have a single friend born on September 9th.
Was it the day or the month of September? I wasn't paying.
She said the day.
Well, it's Christmas.
September 9th is your big day.
Yep. I'm paying for the holidays.
That's such a stupid thing.
That's the reason.
They're paying the holidays forward?
Well, they had paid for the holidays, and now this is what comes forward. Yes. You want to explain it to me then?
I recently learned from Tasty Trade's live chat that the OCC, the Options Clearing Corp, does not guarantee assignment on short calls, even if they're in the money. I thought all short calls in the money got assigned. Can you please explain?
No, not all. All short calls at expiration, you can say, get assigned, but all short calls that are in the money.
No, even on expiration, you can.
It doesn't have to be all of them, but I would say 99 point something is going to be exercised. You never say never. Totally agree with you. Somebody could do not exercise or something like that.
Right.
But regardless, to answer the question here, during the life cycle of an option, if it goes in the money, it's not going to be an automatic exercise if it has extrinsic value to it, meaning they can sell it for more money in the open market. Why would they exercise it early and not get that extra benefit?
This is sorry for cutting this question, making it shorter. This person, this was expiration, and the option expired. This exact case was the option expired in the money.
And you would think it would be an automatic exercise.
You would think it'd be an automatic exercise, and it was not.
Right. The stock could move in after hours. That's
exactly what happened.
And the person, remember, when you sell an option, the person who buys it has the right, but not the obligation, to exercise that option. So they could put in a do not exercise with their clearing firm, and then they would not exercise those. That's why we talk about getting out of these options at expiration, before expiration, so you don't have any of these problems.
Yeah, because
you could have a vertical spread on that.
You guys remember on Friday afternoon, there was 2 stocks that went into the S&P, Robinhood and App11. I think it was Friday, right? And
yes.
And there was, obviously an option exercise, or the option expiration. And so there were a few people that, that had expiring options. And they thought, oh, this is great. I'm going to be long stock.
Sure.
And it turns out that the counterparty is, put in a do not exercise. And what's interesting about that is that, like, a bunch of people wrote me and they say, can the firms do that on their own without the customer? No, this is all about the customer. Firms can't do anything. Like Tasty can't make a decision for the customer.
Right.
So it's it really is the customer's call, and they can always choose. They could instruct us not to exercise.
That's correct.
Let's go next slide. If you don't instruct us, it's automatic. But if you instruct us not,
if it's in the money, right?
If you put on a position, but it hasn't come in before earnings, do you stick with the position as is, or will you adjust it?
Subjective. 9 times out of 10, I'm going to adjust it. I mean, if it's a vertical spread, tight, I might leave it. 9 times out of 10, I'm going to adjust it.
If I put on a position prior to earnings and it hasn't come in, there's about a 99% chance that I'm going to adjust that position. Sometimes I won't even keep the position at all, but depending on how liquid the underlying is and depending on what kind of volatility it has. But normally I'll just widen the strikes. Recenter, widen the strikes. Let's go next slide. As part of your tasty mechanics, I know you wait for IVR to be elevated before selling an option. What I don't understand is why. Does higher IVR improve your profitability, your probability of making
money? High implied volatility doesn't improve your probability of making money. What we have found from our research is that volatility is mean reverting more than the stock price. So if you have high implied volatility, I'm selling premium. Think about it as selling something that's inflated relative to itself at that point in time. What I'm hoping for is that the stock stays within its expected move, and that volatility, since it stayed inside its expected move, collapses a lot faster than it normally would if the implied volatility was at a normal range. So I'm taking advantage of that inflated option pricing. That's what I'm hoping.
This person said, I don't understand why you want implied volatility to be elevated. And does higher IVR improve your probability of making money? And the answer is no, it does not. However, if you have the same probability of making money as you did when IVR is low or high, then why do you wait for high IVR? And the answer is because when you're right, you make a lot more money. And that's all it is.
Yep.
And so it's not a question. If you're going to take, let's say, X amount of risk to make $1.
You take the same amount of risk when the implied volatility is low or
exactly.
High.
So why wouldn't you just wait until you take the same exact amount of risk, but you can make $2? That's the reason you wait for high IVR. Probability doesn't improve. Let's go next slide. Doesn't hurt you, doesn't improve. Do you do any sort of review of your trading to keep a trading log so you can go back and better understand what you may have done right or wrong with the position?
No, and I can give you the answer for those who are journaling. The market accommodated your assumption. I mean, it wasn't necessarily the brilliant strategy you picked. Now, you could pick a better and good strategy, meaning one's better than the other because one makes more than the other if you went back and looked at it, but it's all going to be by the risk that you took. So no, I don't do anything like this. Matter of fact, I think it's a time suck.
You know, it's funny. You'll find that most people that keep a trading log and review their trading by keeping a log do it as long as they're making money, and when they start to lose, they quit it because it gets frustrating. So it's really just kind of it's kind of self-fulfilling. We do not do
It's
this.
funny to say it like that, though.
But that's really what they do, and we don't do this, and for a billion different reasons, but the primary reason is because we're pretty active in the markets. We also remember all our trades. It's not that hard a thing to do. When you trade a lot, you remember everything, and you don't really need to keep a trading log. I mean, it's up to you. If you want to, sure, it doesn't hurt anybody.
Sure.
Yeah, I mean, if you want to do this, go ahead.
Yeah, go for it. Yeah.
Yeah, write it down. Do whatever you want. It doesn't hurt anything, but it doesn't help us. Let's go next slide. When you talk about underlyings that are correlated, are you simply talking about both underlyings that tend to move in the same direction at the same time? Or are you also taking into consideration the amplitude of the move?
They're correlated. Simply talking about yes. I'm simply talking about the direction that each of them move. Like the E-mini S&Ps and the NASDAQ typically move in the same direction. If you had 10 days, and I'm just making up that number, of inverse relationship, you might say to yourself, well, the one that's gone down for 10 days is cheap relative to the one that's gone up for 10 days because those two have such a high correlation. I'd want to buy the one that was going lower and sell the one that was going higher. The magnitude of the move makes a difference. I mean, I'm not going to look at it as a one-day small blip in the market.
When we talk about underlyings that are correlated, we're simply talking about the underlyings that tend to move in the same direction at the same time. That's correct. We don't really take into consideration the magnitude of the move or the speed, the velocity of the move, unless, of course, we're doing a pairs trade. But other than that, because then we'll adjust for volatility to adjust notional size. But when we're talking about correlation, we're just talking about trades that are highly correlated. So it's really just talking about underlyings that tend to move in the same direction at the same time. Let's go to the next slide. And the last one. You often talk about interest rate cuts and ZB at the same time. But aren't interest rate cuts at the short end of the curve? How does ZB play a role in this?
Well, again, you talk about those things that are correlated. They all move in the same direction, so that's what we're really looking at. But yeah, you could look at the notes for a shorter period of time. Sure.
It is very hard to get a read. I mean, you could definitely look at short term. You can look at the 2-year and the 5-year if you want to, but they're not really tradable. So everything we do at Tasty, it really revolves around the trading aspect of it. So if you're going to trade debt instruments, most people trade the ZB or the ZN. Now the ZN is about half the size of the ZB, meaning risk-wise, same size contract, but about half as much risk. So it really just depends on kind of what you want to play. Most people, the ZN's a little too small for them, so they prefer, as far as movement goes, they prefer the ZB. And okay, I'm with you on that. But we trade both, the ZN and the ZB. I don't really look at them as dramatically different interest rates. So, interest rate cuts are on the short end of the curve, but the street watches the long end. It's hard to explain it, but that's what they watch. Everybody watches the longer end, like the 5s, 10s, and 20s. They're not watching the 30-day, 60-day, 90-day, that kind of thing.
Very good, my friend. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with an option jive next. Back in 90 seconds.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, Visit the News and Insights tab at tastylive.com.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and Tasty Live in particular because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
It's option jive. That's right, so I don't know if you heard it. It is an option jive. I mean, the S&Ps were just down. They're up $1.75.
Oh my God, we're all over the place today. How can we control ourselves? This 10-point move. What's the expected move today?
What do you think the expected move is? I told you yesterday.
$20.
You're right there, 19.
$19. What are we going to do?
What are we going to do? What am I going to do with you?
What am I going to do with you? What am I going to do with you?
What am I going to do with you? I told you, Mom, I would help you. What am I going to do with you? I mean, didn't I? 14 years, didn't I pay my debt to your mom already? Must I carry you some more? Honestly.
What's the expected move? $20. We're currently trading at
65.08.
65.08.
Who would have thunk?
65.30. $20 higher. 65. 65.
You doing a 0 day finally?
Yeah.
I like it. I like it a lot.
I don't usually do 0 days prior to the opening.
Oh, you're dead.
I can't even get filled. I tried.
Oh, you're dead. Dead, Niedermeyer. Oh, no. Oh, you just did a strangle.
Yeah. I did. I used.
Buku cash.
I had to use the ES options
Finding
because
risk using 1/10 the amount of buying power or anything like that. Not you, big dog.
no, I had to use the ES options because the market's not open yet.
Okay. I thought they opened a half hour early. Okay.
So I use the ES options.
Okay.
When we do our live trading show, we do ES options, SPX
SPX
options,
we do them all.
SPY. We do them all. But ES options are half the size of SPX, and they are open 24 hours. But the problem is with ES options, to be fair, they're sometimes they're a tick wider. Anyway, what do we do? 64.80, 65.30, $50 wide on a $20 expected.
Okay, dokie.
Sold it for
$5.90.
$5.90. What's my target price?
You tell me.
$4.90.
Okay, fair enough. That's $1.
What?
That's $1. Remember, it's only 50 cents a point.
I know.
On
but
ES options.
it doesn't matter how much is the point. You're still trying to make the same percentage.
10 to 20%.
Yeah.
I get it. I'm just giving everybody the math out there.
All right. Let's get ourselves started.
All right, let's go.
This is a long one. Get your helmet on. This is a heavy one. It's a lot of text.
I'm just controlling what I can control. Shouldn't be too
I think I've given 50 talks on controlling what you can control. This is a discussion I like to have.
Maybe I should do one so that the people could, really understand it this time. If you've been doing it for so long, they still don't understand.
This is a discussion that you should have with yourself. This is a discussion everybody should have with yourself. In life, control what you can and don't worry about the crap you can't control. Mm-hmm. Successful people control what they can. People that are not successful, let the whole control thing drive them crazy because they worry about things that they cannot control. With trading, it's the same thing.
And try to control it. Like it is controllable.
With trading, it's the exact same thing. Control what you can, and the market after that point, the market takes over. Like, if volatility is low, don't do stupid things. You can control it. You don't have to. You're not making markets. You're controlling what you can. So let's see where the team wants to go with this. Control is exercised at 2 key points: trade entry and trade exit. Yeah, you control those. Mm-hmm. You control all the trade entry. You control the trade exit. So let's explore. Next slide, John. So the future is unknowable. That is correct. You might have a guess, and there's nothing wrong with trading to profit if you're right. So the first thing we're talking about is delta. Delta indicates an initial sensitivity to underlying price movements. Positive delta means long, negative delta means short. The delta will change over the life of the trade, but active management lets you keep it in line. All we know is the delta when we put on the trade. That's what we control. We control our initial delta. You can be delta neutral, you can be delta long, you can be short, whatever it is, but just understand that you control the initial delta, whether it's long, short, whatever. Mm-hmm. Nobody cares. Let's go to the next slide. So then we talk about entry decisions. This is straight up all tasty. High probability of profit. As premium sellers, we can increase our rate by pushing our short strikes further out of the money. And a mixture of historical and theoretical analysis lets us have a pretty good idea before entering a trade how likely it is to work out. Management techniques. Timely profit taking involves setting realistic target goals, and adjusting positions or closing trades in response to market changes can help lock in profits and minimize losses.
Okey-dokey.
Next slide, John. So Now we get into kind of the stuff that you can control. Entry decisions, position sizing determines how much capital is allocated to each trade. Defined risk strategies, such as vertical spreads, cannot lose more than the amount of risk. Undefined risk strategies, just understanding the difference. And they do not have a risk limit, but the buying power reduction offers a good estimate of potential exposure for most trades. And then there's the management side, exiting based on mental stop losses, or mental stops. I shouldn't say stop. We don't really use hard stops because, as you wrote here, they're not foolproof. Options become more sensitive to the market near expiration. Closing trades early based on days to expiration can reduce exposure to sudden underlying moves. That is the key. We live for that. Let's go next slide.
And I think we're taking a look here, another way of looking at what the mechanics are. Really, that's what you're saying here. If you follow our mechanics, you're going to be taking care of what you can control, not what you think you can control.
That's correct. Let's go to the next slide. So frequent trade entries increase the statistical likelihood of achieving desired outcomes. We call that the law of large numbers. Keeping per trade exposure small helps us make more trades regardless of the total size of the account. Rapid trade management gives us the ability to redeploy capital to fresh trades. And there is a tension between underlying selection and number of occurrences. The more picky we are about what looks like a good trade, the fewer trades we're going to wind up making. So this is a big thing for us. And this is one of the reasons we do the live trading show, because we just want you to put on trades.
Yeah.
Less thinking, more trades.
We go through the process of what we're thinking, but we
less thinking, more trades. That is the whole law of large numbers piece. Next slide, please. So market movements and price outcomes are inherently unpredictable, driven by factors such as economic reports, geopolitical events, and investor sentiment shifts. Net profit and loss are influenced by numerous factors, including market volatility and external economic conditions, making those outcomes, making them outcomes rather than controllable events. It's well said. Focusing on controllable aspects, such as strategy and mechanics, this enables traders to adapt to market conditions. Disciplined execution and risk management are the keys to success. A lot of this stuff is kind of common sense-ish, but a lot of this stuff, we just forget about stuff that we can control, right?
Yep.
This applies to anything. It applies to any business that you have. It applies to it applies to students. It applies to people doing interviews. Control what you can control. Don't worry about the stuff you can't. Let's go to the last slide, John. Trading means accepting risk. No one knows for certain what the market will do, but we can focus on what we can influence. Per trade risk is determined by strategy and strike selection, underlying and trade size and exit conditions. Whether each trade is a winner or loser is beyond us, but short strike selection and managing winners can help us make sure that we have more wins than losses. By staying small and active, we can strive for enough occurrences to help reach long-term results. And while we might not be able to say where the markets will go, by controlling order entry and order exit, we can determine how it will affect us.
Look, this was almost like a public service announcement piece from you, and I never thought I'd see the day. I mean, I'm happy, but it's like it's something I didn't think I would say. No, I would bet against this. We're gonna take a quick 90-second break and come back. We got more Tasty Live with the market unchanged. There it is right now with the opening bell next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazon bingo! I won! John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner!
Pounds
winner,
and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. Take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Seconds.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, sounding off with the opening bell. As foretold, the weakest day we've had all week, even the S&P.
The weakest day we've had, S&P's up $1.
Only up $1. Volatility up 15 cents, sound off. Volatility climbing as the market's going nowhere. Maybe a little bit of weakness today. We'll see. Bond down 5. They were under 117, 116.31. They're 117.09. Down 5 ticks. NASDAQ is the strongest of the group, only up 28. Russell down 3, and the Dow up 10. Definitely a tug of war going on. Bitcoin up $680. Ethereum up $24. Both up around the same on a percentage basis. But Ethereum's had a much bigger move, trading all the way up to 4,600 and change today, down to 4,340. Still up $26 or so. 50 on the futures. Oil up 96 cents, trying to catch a little bit of a bid here, sounding off to 63 and change. IV rank of 21, relatively low, although it's catching a little bit of a bid these days. Gold up again, sounding off. This is the umpteenth time since September that gold has been up. It's up 21.
Umpteenth time.
Umpteenth time. Nat gas up a small 3 cents, although that is a 1% move. And your corn, wheat, and soybeans all lower, sound off. What do you think here, my friend? You've got about 3 minutes.
Like corn, wheat, and soybeans. What about my live cattle if you're going to go through the whole route?
I decided not to. I stopped while I was still ahead.
My Japanese yen's up today. I'm just kidding.
What's the euro doing today?
Euro's down small.
Changed, yeah. Down small. Japanese yen is up /6J. Yeah, up half percentage point. Yeah, it's a pretty decent sized move. Especially for somebody who's long yen, as you are.
Oh, it's almost getting to roll day. 2 more days. I'm going to be here this week, today, tomorrow, and Thursday. On Friday, I'll be in New York City doing an event.
Don't worry. I got Nick Batista coming in. It'll be a great show, as always, when the creator is gone.
When the cat's away, the mice will play. Yeah, I'll be doing an Anthony Popliano event. It's a good interviewer. He's an interesting guy.
Good.
It's like a crypto bro or something like that.
Oh, yeah, there it is. Yeah.
Yeah, but he's Fireside.
ProCap CEO, Anthony
ProCap.
Popliano.
He's one of your paisanos.
Yeah, I could see that. I mean, yeah.
Yeah.
Sounds like it.
Yeah. Interesting dude. I think he's kind of like a crypto guy. But yeah, we had a fun.
Is he gonna interview that guy in the picture? Or is he gonna interview you?
That's not funny.
It's pretty funny.
All right. So,
minute and a half before the market opens. Are you ready? I know you've sold a couple of strangles now in ES. Now it is half the size of SPX. I sold it as high as 625, as low as 590. Let's call it a 612 price point, trading right around there.
We'll see.
Maybe in by maybe down 10 cents or something like that. Volatility up 15 cents.
Scoopy.
Scoopy what?
I don't know. Just trying to make some trades happen today.
Got it. I don't blame you.
I got to buy the only order I'm working a couple things. I want to get short the Russell a little bit after the opening if it rallies. I want to get short S&Ps if they rally.
Why the Russell? Because it's already down on the day?
I think so. Mm-hmm. I don't really know yet. I'm just looking for stuff to trade. I'm going to buy back my AVGO strangles. I didn't realize the IV rank was like 2.
AVGO, I know it's a $350 form.
I know, but the IV rank's like nothing.
Yeah.
I got to get, what's it doing pre-market today? Is it up?
It's up around $3.50 or so, $3.50 to $4.
Reddit's up again today.
Reddit Reddit is a volatile one. Even
Reddit's
the
a
Ivy
beast.
rank
It
is
was
only
down 10 yesterday.
Yeah.
It's a freaking beast.
Trading 230, well, 235 on the offer, 234 mid price.
Yeah.
Up around $4.
Yep. Let's get this party
The opening
started.
bell is imminent, Sosnoff. Imminent. There it is, my friend. As they come spinning out of the turn, even the S&Ps.
Imminent.
A little bit of a bid. They're up $3.
Even the S&Ps?
Yeah.
Yeah. Opening bell.
APP, after having a big day yesterday, leader of the clubhouse now up $5 to $7, trading $5.53. CRWV up $5. Meta up $4.50. Your beloved Baba Sadlov catching bids all over the place, up almost $5. That's almost a 3.5% move. Netflix up $4 and change. Microsoft up $3. Tesla up $2. What's your beloved Apple doing? Apple down 73 cents, a bucker. Let's see what's moving on the downside. First stock I really know. Snow down $3 and change. Lilly and Etsy down $1 and change. Apple down 84 cents. Affirm that Vanetta mentioned down 73 cents. That's all I got.
Yeah.
Give me SPs unchanged.
They are. I'm just seeing where this is trading. I think I sold stuff too cheap this morning.
You most certainly did. I tried to explain to you volatility upticking for the first time in weeks.
I most certainly did. How did I do that?
Roll something. You just don't know which side to roll. I don't know either, to be honest with you.
I am.
Give me S&Ps up 4.
Yeah.
Cancel crash.
Cancel crash.
Yes. Uber, which you mentioned, up $1. I'm sorry, down $1.
Yeah, AVGO I thought was going to be
that's just futures.
Oh. All right. I'm looking for
Talk to me, Goose.
nothing. I'm just looking for
I know you went out last night. I know you're on a 5-day bender. I don't expect a lot from you, but I expect something. Don't worry, I got Scott coming in an hour. He'll save your arse.
Let's see, what else do we got here?
You could scratch your whole thing right now if you tried to. Real good.
I could scratch it.
Yeah, I think you got probably a mid price of 610 or so. It's offered at 610 right now. Now it's offered at 605. Give me S&Ps at 4.25. Yes.
Nothing. I'm looking at it right now.
Mm-hmm. We show some intestinal fortitude for
I
crying.
know. I'm just playing around.
Embarrassing.
Let's see what else we got going on here.
I told you not to embarrass me. My mother used to say to me every time we went home from some event, Anthony, I told you not to embarrass me.
Would you short Reddit here?
But I short Reddit here. RDDT. Maybe with a vertical or something like that. Ivy rank of 22. Up $4 and change, 234. Yes.
Nothing. I'm just looking at my positions, trying to figure out what I got.
Nvidia up 40 cents or so. Palantir up around $1. MSTR up around 50 cents. That's been a pig as of late. Apple now down only 50 cents. Meta up $1.80. Netflix up 5.
What's Oracle doing pre-market?
Well, it's not pre-market because the market is open, but pre-earnings, if that's what you wanted to say. Don't listen to what he's saying. Listen to what he's thinking. Oracle's up 45 cents. Ivy rank is 63, going to be one of the highest on the boards.
Yeah.
Google unchanged. I mentioned that earlier. Chewy down 30 cents. It also has earnings.
I know.
Let's see what GME is doing since we're going that route. GME down 14 cents. Coin up $4. Spot down 3. Closed your AVGO?
I did. It's because the Ivy rank was like super low. All right, let's see what else we got going on here.
Mm-hmm.
Bum 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 bum. I don't know.
All right. Well, if you don't know, I don't know.
I don't have anything else to do right now.
Well, you're early. We haven't had too much movement, Sadnov. You do have the Russell and the Dow lower as we had yesterday, and you have the E-mini S&Ps and the NASDAQ higher. NASDAQ held us to the promised land yesterday. Let's see if we can do it today. Although volatility today, for the first time, upticking a little bit to 1650. A sign?
Yeah, it is upticking a little bit. Maybe.
You
Maybe.
closed one of your tranches. Did you close one of your tranches?
Yeah, I had an order in. I probably did get filled. Yeah.
You did.
Yeah, it's funny how this stuff comes in.
Mm-hmm. Yeah. Very nicely.
All right.
Let's take a quick 90-second break and come back. We got more Tasty Live after this with what comes up next, Sadnov? Let me explain with Chris. That's right. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Gee. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Your outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on, no.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your shore.
I mean,
This is moving so fast, and I like it.
Yeah.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Sounds off that music can mean only one thing. It's Let Me Explain with Chris. A nice scalp in your SPX, Sosnoff. You the man.
No, ES. I was just
Same
testing,
thing, ES.
testing out the zero DTs.
Doesn't matter.
I was testing out the zero DTs pre-market because
Worked again. Because you see everybody on Twitter doing it, and you have FOMO, and you're jealous. I get it.
I'm doing it because when we go to New York in 2 weeks, we have to trade pre-market. And I just want to make sure you're up to speed. So you know, I try to do things subtly so you could learn from them. And you know,
That's one I'm going to put up there with, you know. The other one is I really worked really hard when I was young, so I can have somebody like you be my flunky. That's another one I'm going to put right up there. Those are things I'm going to remember for the rest of my life. Something else I'm going to remember is my man Chris. What's up?
A little bit of this, a little bit of that.
A little bit of this.
How's your day going?
Did you just say Dago?
How's your day going? I mean,
I thought you called me a Dago. That's a derogatory term. I was going to have to go to fisticuffs with you.
but you know, it's like pot calling the kettle black.
I know, but he is like he lives under like a dark cloud. Did you see that tree that hit his? The
tree hit both you guys. You talk. Tree hit your car. Tree hit his house. What's the difference? You guys both do. It's an Italian thing.
This is true.
I was hoping that's where you were going to go.
Did you do something horribly wrong in a past life too?
The acts of God don't look too kindly on Italians. Yeah.
No, and what makes it all the worse is that I did go to bed on Saturday night, and the last thing I said to my wife was, "We're going to wake up and win Powerball." So
That
couldn't
didn't
be a
happen.
different wake up call
But
than
your
that.
house got hit by a tree. That branch looked dead, by the way. That's on you.
Well, if it was my tree, it would be on me.
No. If it's on your side, you own that part of the tree.
It's not New York state law, and my insurance company are very clear on this, but I'm leaving it to the lawyers at this point in time.
Oh, maybe. But in my neighborhood, if it's over your fence or your lot line, it's your tree.
I had a tree that
Like
fell.
you own that. You can cut it straight across if you want.
Interesting.
I had a tree.
Not in New York.
Fell in the neighbor's lot. The neighbor.
You had your tree fall on a neighbor's lot?
Yeah, but it was over there. It was hanging over their side.
Mm-hmm.
And so they came over and said, "Hey, you know, your tree fell. That crashed our thing. You got to come and get rid of it." They just asked the wrong Sosnoff.
Because you would have done it.
I probably
You
would.
said, "Oh, I'm sorry. Sure. Yours
I'm
went and
sorry.
found out the rule and said, your problem."
My
Meaning
wife.
their problem.
My wife.
Yeah.
Act of God, your problem.
Yeah. All right, my friend. Well, what problems are you going to present us? No. What are you going to explain to us?
Act of God, your problem.
Pick a topic here. We're going to go one of two directions. There are job revisions coming out in 15 minutes, or we can talk about the NASDAQ trying to tokenize securities.
We've already talked about the NASDAQ trying to tokenize securities this morning.
Okay.
Do you have anything negative to say about that?
Well, I'm curious about some of the, you guys haven't covered all the questions that I'd be interested in asking.
Okay, like what?
Do you think that tokenized shares will actually fragment liquidity, creating two pools of trading, or
No.
will the exchange's structure keep all that consolidated under one roof?
First of all, no, not at all. Why would that happen? I'm just curious. What you think.
I'm just poking questions because this is an interesting topic, and you have a lot more institutional knowledge than the average bear.
First of all, I don't think that you're going to be necessarily able to tokenize. I think it's going to be very limited as to what you can tokenize. I think the tokenization opens up an entire new marketplace for investors. And so for that reason, I'm bullish. I don't think tokenization will impact markets that you can already trade. There's no reason to use, there's no reason for you to trade tokenized IBM, right? What would be the reason?
Well, I mean, to me, that was actually a follow-up question. Retail investors don't wake up asking for tokenized shares of Apple or NVIDIA. They just want cheaper commissions and tighter spreads.
And I don't think they ever will. But retail investors in the UK or in Singapore might want tokenized Apple because they don't want to convert to US dollars. So the problem is that if the US is still going to be the center pool of liquidity in the world, not everybody wants to convert to dollars, especially when the dollar's in crash mode. And so, I mean, there's no question that the current administration wants the dollar lower because that helps, that helps their case, I guess. And so with the dollar, I doubt the dollar is going to rally anytime soon. And so I think that scares people. And I think if you go with tokenized shares, it's just a lot cheaper. I mean, tokenized buys and sells, it's just a lot cheaper. That's all it is. I think it's just a function of cost and access. So I don't think it changes anything we do here. I just think it makes more markets available to more people. But if you tokenize something, you still have to own the underlying.
My follow-up would be if this doesn't change things for U.S. traders, then if liquidity, order priority, NBBO, I know that's being changed. So then really for the U.S. retail trader, this is a story, nothing more, right?
For the U.S. retail trader, what I think it does is it opens up different parts of the world to U.S. retail traders, and I think it opens up non-listed securities to retail investors. Let's just say Tony wanted to buy a piece of SpaceX, and somebody wanted to put together a pool with, $50 million of SpaceX in it. Then he can buy tokens potentially and trade SpaceX, whereas otherwise you can't do it. So I think that in that sense, if you trust who's creating, who's actually creating the underlying, creating the token, I think that's the whole thing. But I don't think it's that simple. I just think it is going to be the future to complement the listed marketplace.
So just one more question on this, and apologies for the chainsawing in the background. And I didn't hire people just to make the noise to prove this story. If tokenized securities really shorten settlement cycles and reduce clearing risk, how do you see that changing the role or profitability of market makers and liquidity providers, Tony? I feel like that's an angle that you'd be interested in.
I don't even see how that applies.
Yeah, I don't see how it applies either.
I mean, there's no, you know, there's no market making. You're talking about non-listed. You're talking, for the most part, tokenization will widen the playing field. It's not going to narrow it. In other words, there's nothing that you currently trade that's going to be impacted by tokenization. I don't think. Everything is that you can't currently trade is going to be what's open through tokenization. They're too smart. They're not going to cannibalize their own business.
But does it open up stuff like in Europe to us, let's say?
Yes, that's what I think it does. But again, it's not really rocket science. So you go out and you buy 100 shares of IBM, right?
Yes.
And then you issue 100
tokens.
100 one-share tokens. Okay, just because you have to back it up with something. It's like a stable coin. That's it.
Yeah. You don't get 1,000 tokens.
Right.
Right.
It's not the producers. You can't sell 1,000 tokens for 100. Like it has to be collateralized. If it's not collateralized, then you're going to have massive fraud. Sure. So that's why you want somebody like the NASDAQ doing it and not somebody like Binance doing it. Or FTX. That was the whole issue. So I think that's the key, is who's ever creating the underlying, who's ever holding the pool of stock, and there's some risk for that person or that company. What happens? They're going to be long the underlying. It's not that easy, I guess, is my point.
Mm-hmm.
Well, let's switch gears here. In a few minutes, we're going to have the U.S. labor market revisions. I know that this is something that really excites you guys, but last August, we saw the economy added 18,000 fewer jobs, than previously anticipated. We're looking at a revision lower by about 900,000 potentially in 9 minutes' time. We've already seen a big bump in Treasury rate cut odds, though, here, Tom. And Sunday night, you were saying that when we're up in this territory, the Fed can kind of go with 50 basis points and really not be too worried about the market not expecting it. Over the course of this week, rate cut odds for 50 basis points have gone up from 7% to about 14%. Poly market, they started the week at 2%. They're now up at 18%. So traders are starting to line up and think this is a possibility. Do you think that this is a buy the rumor, sell the news type of event for things like treasuries and gold, though, which gold this morning ticking over $3,700 an ounce?
Do I think this revision is?
Do you think that the rate cuts when they arrive in September will be a buy the rumor, sell the news event for the market?
I don't know if it's going to be a buy the rumor.
Because of where we are in the market. Not
we're record highs.
Right.
I mean,
has the rumor already been bought then?
You mean for the last year? In 2025?
The
yes.
past 3 weeks, month. Okay.
I mean, in the past for 2025, or let's say since April, the answer is yeah. The rumors, and I don't even know if it's a rumor anymore, but this rate cut is overpriced as far as I mean, I think it is
overdone.
It's overdone.
I think even my neighbors know about it. My neighbors are oblivious to everything. Really, I mean, when it comes to the market, they don't. Not their thing. Even
I'm waiting for my mom to call me and say, "What do you think about this rate cut?"
Everybody's waiting for the rate cut before they do something.
Yeah. I don't know, Chris. I mean, I'm kind of feeling like everything. I'm kind of feeling like whatever moves this market eventually is going to be something that it's what's ever least expected. Like, there's just no way anything that everybody's chattering about is going to have any impact. I just don't see it. I still think there's some really risky areas going forward. I don't think it's the rate cut. I don't think it's the bonds. Haven't thought that all year. But I do think there's, if you want to talk about like where's the most downside, what do you think is the most downside?
What market?
Yeah, what marketplace?
I mean, I think the equity market, but probably the NASDAQ. And I would throw gold in there too, man. I think gold is.
You think gold is?
Yeah, I just think gold is. Again, I am short gold and paying the price, so I've been wrong. But I think if you're going to look for a magnitude of of a news event. I could see gold down, $360, a 10% move. That's what I'm going with. A lot sooner than I can see the market down, 2,300 handles on the NASDAQ.
Well, it's so funny because I think Bitcoin has a lot of risk. And
yeah, I mean, that's going to have the highest volatility. So
I think Bitcoin has a lot of risk. And I think, let me just see.
I mean, when they sell assets, they sell all the assets. And usually the one with the highest implied volatility has the biggest move. So I'll give you a nod to your Bitcoin.
So I think Bitcoin and I think tech stocks.
Ilya's been bringing up an interesting point about Bitcoin, and we keep talking about it as an alternative store of value relative to the dollar. If it was truly that, wouldn't it be trading more like gold and less like equity markets right now? It's been very choppy. It's been moving sideways, effectively tracking the NASDAQ.
What?
Gold is on its own territory. Yeah, Bitcoin. Bitcoin isn't performing like gold is in this, reach for other things than the dollar period of history.
Because it already had its gold movement. It had its time to shine.
You remember, it wasn't too long ago. I mean, basically a month or so ago when it was 124,000. Right now it's under 114,000.
Yeah. I just think about where are the biggest pot odds? Where's the biggest risk in this market? And to me, I feel like there's three areas of incredible.
Meanwhile, this is the first dollar move lower we've had in the market.
I'm not even saying
gold is actually up.
NASDAQ's still up, but I'm just thinking of where's the most hype? Where's the most bubbly stuff? It's got to be digital assets in that whole ecosystem. It's got to be the IPO market, and it's got to be some of these AI stocks. I don't know what else it could be.
You would think.
Yeah. I mean, but
do you guys look at the decline in utilities over the past few weeks as one of these indicators that the AI trade is fading? Right, all these electric companies were doing so well this year.
It sounds demonic. Okay,
what is that?
It's this chainsaw in the background, but it sounds demonic.
The utilities are doing what?
If you take a look at like XLU, the utility companies have been slugged here as this AI trade has come into potential question. We had the MIT study. We have the report that fewer firms are adopting AI that crested about in June. This is a slide that's going on from Apollo Global Management that AI adoption rates are falling off again right now.
Because of the utility usage?
Productivity increases.
I know, but what is the utility story? Like, what is that?
The utility story last year and this year was that there's excess demand without enough power supply within our system to functionally build all these data centers. And so now that XLE is pulling back, it may be an incremental indicator that demand for AI-related services is falling.
Still $82. I remember when it spent like most of its life in the 57, 67 range.
Mm-hmm.
It's still $82, and these utility stocks are still, to me, they seem super rich. Mostly people buy them for dividends, but I don't know. I don't know about that little. I'm not sure, Chris. Your call. I mean, Tony.
Personally, like utility stocks. I have a decent position in EXC, which hasn't been working for the past several weeks. It's up this year, but it feels like there's a turning point right now. I've just been following the news around all this AI talk in data centers, and there's a lot of anger about the cost of electricity going up. A lot of data centers are not being approved now on municipal levels across the country.
And honestly, I don't blame them. I don't blame them because I'm not sure who's going to end up paying for all this stuff. I really don't. I don't get it. But and the crazy thing about these data centers, they're so freaking expensive now. Like the prices are outrageous. Like I don't know how these tech companies are going to afford all this stuff. The prices are outrageous, and you can't even get in. Yeah, it's a constant battle here with our data centers and where they're located, how much they are. The prices are just astronomical.
Even the S&P is back up $1, thousand off cancel crash.
I mean, do you see anything here so far?
No, I see nothing so far.
I'm following Mike Butler here on S&P 500 today. I did a short iron condor for the 0 DTE. let's go, let's see what happens. But the market has no reason to move today, as far as I'm concerned, if we don't get a nuclear bomb here in less than a minute when this jobs revision is released.
Well, we sold some zero ES.
They worked out nicely.
Worked out. I just covered them. Probably down $1 from where we sold it, but let's see. I want to see your big number revision here.
It just came out. Even the S&Ps were up $1. They're up 3. Bonds were down around 6. They're still down around 6. Even the S&Ps up 4. Bonds down 4, catching a bid now, only down 3 or 4 ticks.
I'm not sure that this revision was that
monumental.
Minus 911,000 jobs, which basically means the economy added, we'll call it, 70,000 fewer jobs per month than previously expected, which tips a bunch of the previous jobs numbers into negative territory.
Bonds are down 2 in the S&P 4. Much to do about nothing, so volatility in by 10 cents.
The biggest move I saw from this thing was gold up 34 now, and the notes up.
I wasn't going to mention that because I'm sure gold ends up 1%.
And they took out yesterday's high in the notes. But nothing else. S&Ps are actually down, Mr. Batista.
Even the S&Ps are down $1 now. You are correct, volatility up 20.
But it's a crappy. This is a crappy trade.
Yes. Not too much to do about anything right now. We've been oscillating between unchanged all day.
Yep.
We're going to get our cuts, just maybe not for a good reason.
Thank you, Mr. Vecchio.
I almost made a joke, but I decided not to. It was a crude one. We're going to take.
What do you mean?
Does it really matter? I mean, it's good and better if you get the cut.
Yes, it does.
Yeah, I mean, it depends.
I'll bring this next week, but I have a Excel chart of all the different types of cuts you get since 1980, and when they're emergency, whatever the market reaction washes over, if it's in the context of a recession.
Don't do it after, because you can spin it. Give me it right now. What is the trigger that makes it a bad cut? What do they say that makes it a bad cut? Like let's say they cut a quarter. Let's say they cut 0.25%, not 0.5%, because if they cut 0.5%, I too might think that might be a bad cut for the wrong reason. But if they do 0.25%, what could they say that would make it a bad cut?
They would introduce dramatic revisions lower in their growth forecast that's coming out next week. They'd also boost their unemployment forecast substantially, signaling that the reason why rate cuts are coming is because they are anticipating weaker growth and a much worse jobs market.
Okay.
Now, so last year when they gave us cuts, what did they do? They upgraded growth. They had inflation stuck. And so it's like, well, so they're giving us rate cuts in a good economy? Fine. This time it's a little different.
All right, let's see if they say that, and we'll see what the market does. Maybe they do the opposite. The market goes higher. We'll figure out that. But at least say it beforehand. I love that. Let's take a quick 90-second break. South of even the S&P is having their biggest move to the downside, down 2. We'll be back in 90 seconds. Let's Tasty Live.
Bonds.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with Market Measure, sponsored by the SIBO. Even the S&P is completely unchanged, up $1 now. So they've had
Up and
about
down a dollar.
a $4 range.
Yeah.
Down 2, up 2.
Pretty much.
Pretty much. Pretty much for the last hour and last half hour and 8 minutes, or 38
I've been
minutes.
scalping 4 points in the S&P.
Nobody can do it like you, my friend. Nobody can do it like you.
Nobody can scalp 4 points like me.
Yep.
Bonds, yeah. Nobody can scalp 4 points. You're exactly right.
Yep.
That keeps me alive, I guess. I'm Tom Sosnoff. He's Tony Batista. It's 9:09 Central Time. We are located in the West Loop in Chicago, and happy to have you on board. In a week, the Bat and I next week we're going to New York City. So if you haven't signed up yet, nope, not the Pomp one, John, the next one. We're going to be at Webster Hall Friday, September 19th. Can't wait to see everybody. And we are waitlist only for this event. So, you know.
But please, if you want to come and you haven't, you've been procrastinating, sign up. People are very kind. They always, if they can't make it, last minute thing, or they signed up for too many, seats, they do cancel.
Now, are you still taking Venmos for guaranteed spots?
I am taking Venmo for front row guaranteed spots. I believe the front row is waiting list only. I might have some for the second row. Pay a little bit extra. I might be able to get you in the front row.
A Venmo to Tony Batista gets you special.
Front row.
Front row.
I might even get you backstage, depending on what you look like, right? I mean, we can do that.
Omaha.
I just meant it's a very steep staircase down to the green room, typically. And Sosnoff, you'll notice, stays upstairs because he can't make it downstairs.
Oh, my.
You know it's true. You know it's true.
No, it's true.
Mm-hmm.
After New York City, 2 weeks after New York City, we're going to be in LA at the Fonda Theater. So we would love to see our LA crowd. We're going to be out there doing the East Coast, West Coast thing. So having fun in LA. I'm actually going to stay out in LA for a couple of days, spend some time with my son, who's an LA boy now. I can't believe it. Raised that kid totally as a city boy in Chicago. We never left the city.
He was such a city poser. We can say it now, right? I mean, if he became an LA kid, he was a poser, right? I mean, my kid's more LA. I mean, Nick's more Chicago now than your kid ever was, and he grew up in the suburbs. You got to admit it. Nick would never turn LA on you. Never, ever. He's Chicago through and through.
Well, Cole he born,
he had a silver spoon in his mouth. Let's call it as we say.
He spent his whole life in the city. And then went to.
I wouldn't consider where he was hanging out in the city, but go ahead.
Well, that's the city. And then he went to school in New York City. So he, went that way. And then
he went completely the other coast.
And he went to completely the other coast to live in LA. So he's got the three biggest cities in America, basically.
Cancel crash, by the way. You mean the S&P's up 7?
I saw that.
Bonds down 11.
I just sold some at 13.
You did.
But I've been scalping them all day for
MS.
Yeah, I've been scalping them all day in and out, doing not much. Anyway,
there hasn't been much to do.
Anyway, looking forward to LA. So hopefully, a lot of you guys can get out there. We always enjoy our LA trips. Little lamb neck shawarma.
I enjoy the LA trips, but you got me going East Coast, West Coast, East Coast.
I know you're not a good coast to coast guy either, but I have trained Tony now just to carry a backpack, so he's good that way.
Yeah. You've got.
You don't take your 75-pound suitcase. You don't Dr. Jim it.
I have my hair and makeup in another bag.
Yeah, we're gonna do a little lamb neck shawarma out there. Gonna do a little.
I'm gonna get real food.
No, the lamb neck shawarma, life changing.
I don't believe you.
It's life changing.
You're gonna make me pay again, like you did last time we went out to dinner.
Yeah, life changing, lamb neck shawarma. Anyway, let's do this.
Go for it, boss.
Why a 3x rally doesn't crush sellers?
Why a 3x doesn't?
Why is the 3 times rally doesn't crush sellers? And by 3 times rally, are you talking about? We're talking about like 3 times the expected move, right?
That is correct.
Let's go here, John.
Let's do it to it.
With Palantir and Robinhood up 109 and 195% respectively since January 1st, we're curious to see how the results of selling out of the money calls were affected by these large moves. Typically, 109% move and 195% move would see a lot of calls being tested. Yeah, I think so.
Mm-hmm.
But let's see what happened with both specifically. If they can find a way that this didn't lose money, I'd be shocked. Let's go next slide. So we looked at Palantir and Hood, January 2025 to present, 45-day options, recorded the win rate and max loss as a multiple of credit received. We're selling short 20 delta calls. Okay, I'm a short 20 delta call guy.
You like living that?
Short 20 delta calls and short 20 delta calls and puts. Managed them at 21 days and then redeployed to a short call closest to 45 days.
That's your mechanics.
My mechanics. Let's go next slide.
And they went to these stocks because they had those kind of moves. That's what they're
Yeah, yeah.
right? You had to find the stocks that had that.
Yeah, we had to find stocks that had over 100% move in 2025. So in 2025, short calls were not profitable strategies so far, obviously, with a win rate of 45% in Hood and 56% in Palantir. However, the magnitude of the worst loss is actually quite reasonable from the context that the underlying almost tripled in 8 months. Let's take a look at what the market expects to happen in Palantir going forward. So hold on a second. Go back a slide, John, for 1 second. Go back to 2, can you? No, 3, I'm sorry. Okay, let's take a look. So short 20 delta calls match 21 days, 2025 to present. Palantir, 57% win rate. Hood, 45% win rate. But the win rate doesn't mean anything. So the max loss is a multiple of credit received, 10x and 8x. Okay, not good. Let's go next slide. Adding a short put to your already short call reduced the max loss as a multiple of credit to just over 2.5%. Okay, that makes a lot of sense. This attests to the best way to reduce the effect of outlier losses over time is to add the other side because only one side loses per trade. So it's not. It's kind of a little bit of masters of the obvious, but what the team did here is show you that by adding a short put at 20 deltas to your already short call, your win rate went from 54 to 65 and from 45 to 50, okay? But your max loss as a multiple of the credit received went from 10x and 8x to 4x and 3x.
Much better.
Much, much better. Okay, so the first takeaway from this is we always say, if we're going to do the call, we might as well do the call and the put.
Sure.
And this is a takeaway that shows why we do that. Okay, that's number one. Let's go next slide. So taking a look at what the market was pricing in Hood and PLTR before the up move in 2025, and the current option skew, we see that there's already a huge implied move in both for a while. So the current IV is even higher with 20 delta options skewed heavily to the call side. This is probably, again, master of the obvious here. Biggest up move over 45 days, biggest down move over 45 days, current 20 delta strike distance and current 20 delta put distance. I don't think that anybody would be shocked by the size of the skew.
Not at all.
I'm not. Let's go next slide. The results from selling options in PLTR and Hood, as well as many underlyings, are never based on how much the underlying moves by itself, but rather how much it moved relative to what the market already priced in. So in the case of PLTR, what seems like a huge move was actually partially expected since the IV was trading in the 80s and some in the hundreds in 2025. Going forward, the recent explosion to the upside is now taking even more into account, with short calls having a 20% buffer between now and expiration. That's interesting.
Yeah, I would say that's interesting. I agree with you.
I'm not sure that they made the case why a 3x rally didn't crush sellers.
Right, because it's going to hurt.
Yeah.
I was wondering where they were going with this.
Yeah, I don't think they made the case. Just going to buy back those futures now that we just sold. But let's go to the next slide.
You're going to attempt.
I'm going to attempt. Short positions PLTR and Hood were tested significantly in 2025, but the losses were within expectations given the substantial market moves that were already anticipated for both stocks. Wherever there's a large move in an underlying, the market always prices options to their new potential exposure, meaning the premium must always be justified for the risk the underlying carries. I think what the team's saying here is that although these positions lost money, the losses were not outlier losses.
Sure, not game changer kind of things that push.
If you just sold naked calls, the losses were outliers. If you sold the calls and the puts, the losses were within the range. So it's a little misleading. Why a 3x rally didn't crush sellers, it didn't help them, but it was inside the range of an expected loss. If you're going to lose, it was inside the range. And second piece of this is whenever stocks like Palantir and Hood have these huge moves, then the future, everything's priced in more effectively than it was last time. Okay.
You can live with it?
Yeah.
Nobody's head has to roll?
No.
Even the S&P's unchanged, Sadnov, up 50 cents right now. NASDAQ, on the other hand, is up 22. Both small moves, with the Russell down 18. Sounds like a small move. That's almost a 1% move lower. The Russell trying to do its best to bring the market lower. Dow down 17, small move. Volatility up 15 cents off of its highs, mid-priced. Bonds down 14. That's about as low as I've seen them. I know they said 116.29 is the low. Must have been overnight. 117 right now. Notes are down small in comparison to bonds. Bitcoin up $195. Oil up 94 cents. Gold, which was up $34, is up 10. Sosnoff, maybe you're going to have your first day here with a little bit of two-sided action, although it's been a very, very tight range, kind of toying with the bulls and the bears here. We're going to take a quick 90-second break. We're going to bring back fan favorite. That's right. You know him as Mr. Scott Sheridan. I know him as Mr. Scott Sheridan. We're going to take a quick 90-second break and bring him Tasty Trade World Headquarters. Immediately found these messages back in 90 seconds.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies? Excuse me? I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Yes, we are back, my friend. You know what that means? Enough out of you. We've got this man. That's right, Tasty Trade World Headquarters. Your friend of mine, the very popular from the Scott Sheridan Studios, Mr. Scott Sheridan, fresh from the Who concert, fresh from the Chicago Bears debacle. Talk to me, boo. Talk to me.
Okay, first of all, nice to see you. It's been way too long. Got a lot to cover. All right.
Go.
Okay.
Go.
Thursday lunch. I sent you the picture. I was a little hurt-ass because you didn't know what I was eating, of a beautiful pastrami sandwich from Katz's, which you referred to as corned beef.
It
As
looked
I
like
said.
corned beef. And you know what? You were pretty nasty to me on your text message. If you want me to, go back to it, you were pretty nasty, and I think you owe me an apology.
Oh, I was not nasty at all. I actually held back. What I think I said, I'll read it. I'll read it. What I think I said was, if you want more fat, don't go to Carver number 5. Okay.
No, you said I can't with you. Is what you said.
I said I can't.
Okay, that's where you drew the line. I don't mind you saying what you want to say, but that's where I draw the line.
No, I'm telling you. By the way.
Yes.
Pro tip. See, I don't go to Katz's enough. I'm going to give you a pro tip.
I just don't like your pro tips, generally speaking.
No. I'm going to tell you. You're going to appreciate this one. Okay? Now, you're going to give me a poo-poo. Don't talk to me about this. Tony will listen to me. Now, the problem that I have when I go to a restaurant that I love, but I don't go often, I always get the same thing. Like, because I know I love, you love the pastrami sandwich. You're never going to consider getting anything but the pastrami sandwich.
I like their potato pancakes too, and their coleslaw, and their Russian dressing.
Okay, got the Russian dressing on the side, got the coleslaw, got the potato pancakes. I like the new pickles. I don't like the old pickles. Here is my comment about the potato pancake. It's a little dense.
You got to share it. You got to share an order with like 3 people.
No, there are 3 pancakes, but even so, it's dense.
Yeah.
This isn't the point of the story. Here's the pro tip. Brisket sandwich.
What's that?
The brisket sandwich.
I don't like
outstanding. Oof. Trust me. Side au jus. We brought it back for Levi because we didn't meet us. He's like, get me the brisket. I'm like, didn't even know they had brisket. Because again, my brain just says I'm getting pastrami.
It's Jewish brisket though.
The one that made with Coca-Cola?
What?
What is it, as opposed to goy brisket? What? Okay, just
Coca-Cola. You guys
brisket.
use Coca-Cola.
It's Jewish brisket.
Right. You guys use Coca-Cola.
Jewish brisket is.
It's in the oven and a Pyrex.
It's not
Coca-Cola.
smoked.
Is that what?
I don't know. How'd they cook it?
I didn't ask. I just ate it. Okay.
I don't think it's smoked, and it's not. It's not.
Smoked. It's in the oven.
It's not. It's in the oven. It's not fatty. It's not like Texas brisket.
Okay, it's not like Texas brisket. I just said it's a great sandwich. So do yourself a favor, okay? And if you can't go into the wallet deep enough, I'll pay for it. Get yourself the pastrami sandwich and a side of brisket.
A side of brisket, like just plain brisket?
No, a side of brisket sandwich. You split it, but that's a side.
Well, I'm going to be there with my girlfriend.
I know, and here's the key.
My gumata doesn't like to eat brisket with his pastrami.
I figured out the key to Kansas. You got to go before noon. 11:30, you're straight in at 11:30.
What?
After 12, and as you push 1 o'clock, line wraps around the block.
Yeah, but why would we go? We're
that dinner time for us. We eat at 9:30.
We go at 10:30 in the morning. What are you talking about?
There you go. Okay.
We're 10:30 people.
Stephen Colbert show, outstanding. Really, really an impressive operation. Have you ever been in the theater?
No.
Have you ever? It's impressive. And as I was sitting there thinking about it, I'm like, well, this is crazy. This is where the Beatles first performed.
I don't know what theater
beautiful.
We're performing where Stevie Ray Vaughan was discovered.
He was not
that's
discovered.
That's my story. I'm sticking to it.
No, maybe.
Do you know how many great bands I saw at the Ritz when we were kids?
I'm talking about the place in Austin.
Oh, can't help you.
What?
We're going to be on a stage.
Why did you bring up a random place in Austin?
Because he just mentioned a random place in New York
So,
where he
well,
said
no.
the
It's
Beatles performed.
No. The Ed Sullivan Theater is not random. Anyway, it's a beautiful theater. No idea what CBS could do with it. By the way, Tom, did you hear that Stern is off the air right now because he's in contract negotiations?
Did you see how nasty he is with 5 days of going out in a row? Did you just see that?
No, bad. Yeah, bad.
Did you see that?
No.
All freaking day.
That whole thing with Stern was a hoax, I think.
No, I saw him. He said,
"Oh,
I can't retire." He said, "Because if I retire, everybody that's saying I'm retiring is incorrect. I can't retire now because if I do, then they're going to say, see, we told you we were right." So no, he's come back. He said, "Rob and I are coming back." So anyway, Ed Sullivan Theater, it was awesome. Now, U.S. Open. Now, Tom, I know you sat in the Queen's box. Excuse me, I wasn't in the King's box. Now that we have a king, I wasn't in that box, but. Amazing. These guys, these kids and their kids, 21, 2, 3, 4 years old, they hit the ball so hard. It's amazing to me watching men's tennis. Tom, it actually reminded of you back in the day. But
a little
watching how hard these guys hit the ball today, it's crazy. Now, moving on. I know you had the pleasure of seeing Dua Lipa. You probably talked about that already. I would love to hear about Dua Lipa.
He didn't talk about it, and I didn't press him on it. Even my wife said, I can't believe you didn't tease Tom about going to see Dua Lipa.
Wait a minute. Before I get into the Who show, because I'm going to take some heat for the Who. Yes, I still say the Who over the Stones. Go ahead, get the hate mail going. But anyway,
how can you say that? That's the dumbest thing anybody.
I agree with that.
Before I get, okay, I know,
that's so dumb. It's not even.
Right.
It doesn't even get a response.
Okay, let's continue. So, tell us about Dua Lipa.
What do you want to know?
He was familiar with 3 songs, he told me.
Oh, that's good. That's good.
Yeah. And he didn't have to stand the whole time, which was good.
Did the missus enjoy it?
A couple tequilas later, she was really having fun.
Oh, she enjoyed it big time.
See? Look at the smiles.
I think he might have even slept over in a strange bed or something like that.
See? You got to think about these things when you're thinking
of Uber. Did she send you home in an Uber? I have to know. Did she call the Uber for you, or did you have to get your own Uber? That's how you judge a date.
Not listen to him.
Now, no.
Judge it.
The bigger issue here is if you're still thinking about getting a puppy.
Did you do the walk of shame? Did you please?
Yeah, you got to think this through, because if you get a puppy, you can't do that. You got to go home.
I got a lot of stuff going on in my life, okay? Don't be giving me lectures, you two
I
geniuses.
understand, but you do that, so think about the puppy.
Yeah.
You got it you go like this.
Yeah.
Right?
Yeah.
See,
Yeah,
Tony, you
tough.
with me?
Tough.
Is the puppy worth more than the poontang?
Yeah.
Puppy poontang. Puppy poontang. Puppy wins. You're old now. It doesn't matter.
Okay, so the Who. Now, Tom showed me a video, Roger Daltrey.
Oh my God,
Where-
doing the 2-step back and forth before he screams.
It actually looked a little like Tom.
Tom walking, although Daltrey was standing still. Yes.
I'm looking at this going, now, the Six bought these tickets. Now, I have a self-imposed moratorium. As you guys know, I don't do the old shows anymore. I can't do it. It's just too depressing. But she bought the tickets. So once she paid for the tickets, I had to lean into it because it was a surprise for my birthday. So I had to be like, okay, this is great. Really excited. After I saw the video, I said, look, we might make it 2 songs. Do not be upset if we leave after the second song. I don't care. They crushed it. Crushed it. Now, okay, I'm telling you, find somebody else who's good that went to the show and ask them. They crushed it. Listen, they're 81 and 80. They weren't 30 years old running around the stage, jumping up and down.
The Who 30 years ago couldn't crush it. I mean,
Okay.
I saw them in the
Barbara
Super Bowl.
O'Reilly, what do you listen to?
I saw them in the Super Bowl like.
It was an amazing playlist.
Yeah, well, that's their playlist, but you know.
Did you play Mound Ball or did you guys do something else?
I can't. My problem with the Who is like, what was the average age there?
100.
You didn't have to stand up for the whole concert, right? For sure.
A lot of it, I did. A lot of it, I did stand up.
Blocked the view for the geriatric behind you?
Yeah, it was actually very emotional because I've been listening to the Who for 50 years, and it brought me back to a lot of different times.
You're probably
a lot of
like
different
Pink Floyd
places.
too, right? You're like that guy Who, Pink Floyd?
Oh, I can't handle Pink Floyd.
You love, like Who, Pink Floyd, those fakaktas go together.
Wait a minute.
And Steely Dan, right? Give me a Steely Dan, and I got the trifecta. All you
Steely
people,
Dan.
that's what all you people do. That's your sexy time, Steely Dan.
Okay.
It's so bad.
Wait a minute. How about Hall & Oates?
Oh, I didn't want to go there. I didn't want to diminish you that bad.
Okay. If you tell me the Dark Side of the Moon is not one of the
worst song I've ever listened. I can't listen to it.
It's one of the greatest albums of all time.
Although Sazonov did produce Case after listening to that song because his wife probably likes that song. For sure.
Oh, she's a Pink Floyd freak.
I told you I could pick him out. I
know. All
you
day
are
and night.
so okay. I want to hear all of your minions come out and say now the Dark Side of the Moon because you guys didn't like it. They say the Dark Side of the Moon is one of the greatest albums
Oh
of all
my
time.
God, you Quaalude loving SOBs. I mean, it's
You're
so
right.
bad.
Back in the day, you have any? Because I don't think he got any.
I'm getting. Wait a minute. They're putting the black box over me again. They can't do this to me.
Okay, last one, so that I know if we're ever speaking again. Are you going to tell me? Because to me, if somebody said, "Okay, here, let me ask you a question. You're on a desert island. You get one album for the rest of your life.
Oh no,
one." I can tell you what mine is. What do you think about it?
Because I'd like to spend my life, that life and my afterlife, doing my favorite thing, which is being in bed. Barry White, any album from Barry White. Want to give me the double? You can give me that one.
You didn't say John Mayer. See, I'm shocked.
No.
with that.
I'm going Sexy Time. Barry White. There's nobody better.
John Mayer's not Sexy Time. I thought John Mayer was a guarantee.
John Mayer. There's a reason why he's with the Grateful Dead. I mean, he's the greatest guitarist of this generation.
Oh my God. Okay. I'm not even going there. All right, Tom. Do you want to say what yours is?
This generation.
Oh,
I heard you the third time.
And Mama Bear just correctly said nobody asked about Sexy Time music. So go ahead. Mine. I'm going to tell you what mine would be because I don't want Tom. You could jump on my bandwagon.
Well, I'm not jumping on your bandwagon.
Miles Davis, Kind of Blue. Perfect album.
I don't even know.
If you tell me you've never heard it, we're not talking anymore.
I don't even know if I've ever heard it.
It was a one take.
Sazonov don't roll like that.
Miles Davis? I did not.
To this day, my wife hears Barry White, reminds her back to 21 years ago. She knows. She hears Barry White playing in the house. She knows.
It was 21 years ago before you?
No, 21 years ago was right at me, you SOB. All right?
Do you think the first time she heard Barry White was with you? That girl's been...
She's been Barry White half a dozen times.
She's had 6 guys.
That year.
Yeah. Like, you think that? She waited her whole life for that for you? You're out of your mind.
Hey, Tom, do you have your album?
Well, I didn't think about this before that. It's not Miles Davis, because I couldn't even tell you.
But if you have the greatest...
I couldn't even tell you a Miles Davis song. I don't know. I have to think about it.
Tony?
Yeah?
I gotta give Tom the line I gave you. I can't with you. There we go.
Miles Davis.
Okay,
could you name a Miles Davis song?
No. I'm going to stick with Sosnoff just because I don't want... Oh, they're putting you away now, Sosnoff.
I couldn't...
I have no control over this, but shouts out to whoever's blacking you guys out right now. That is embarrassing.
That's James. That's James taking out his
James,
frustration on us.
How old
Because I
is
said the Bears suck.
Is Miles Davis still alive?
Oh, Miles Davis died 100 years ago.
Yeah, I mean, what year is that album?
59? 58?
58. That is such a... That's almost as dumb. That's almost as dumb as the Who comment from you.
Yep.
Oh, okay, so you're going to tell me Mozart, Beethoven, none of that music's any good?
It's not really. Miles Davis, Kind of Blue.
Well, okay, listen to this album start to finish. Just promise me you'll listen to it. Do you know how to listen to music?
It's a jazz album from 1959.
I said 59.
I can't do anything that I wasn't born for.
I mean,
really?
It's a jazz album from 1959. Not one person that's alive today could name a song from that album. Except you.
Okay, could you please tell me what's going on in the YouTube chat right now, where everybody's saying they agree with me? That it's
right now,
the greatest album.
It's team Tom and Bat, 6-1 margin.
Okay, I'm just telling you, Kind of Blue, 1959.
Yeah, Kind of Blue, BLEW.
Tom, you are nuts.
I mean, you knew this album, James?
James the film buff.
Of course I do. I actually listen to music.
Oh, God.
Thank you, James. James, are you with me on this? One of the greatest albums ever made?
Without question.
Hey, James, go get me more coffee, will you please?
It's a jazz album.
Just kidding.
Nobody ever said one of the greatest albums ever made about a jazz album, ever.
Really?
You don't have good taste, and that's okay, Tom. Just accept it.
Jazz is where people go to die.
Jazz is where people go.
And I own the jazz club, so don't help me.
But here it comes. If there's a Buddy Guy song, then Tom will go, yeah, Buddy Guy, he was great. He was amazing.
Well, Buddy Guy was
that's
not
the
really
blues.
jazz.
That's
that was
completely
blues.
different. That's, I mean, now you're talking.
Oh, so blues?
Blues is okay. Jazz is painful.
Jazz is painful. Jazz really is painful.
Jazz is really painful.
Come on.
I mean, you can sit
there. People that like jazz are posers.
You can sit there for a little bit and you're like, okay. But then when they give you the no talking, drives me crazy. Jazz clubs.
I get. Thank you. Could you put it over both of them? James, you and I'll do the rest of the show. We don't need either of them. Just black them both. There we go. Thank you.
Go to the Green Mill and they go, no talking, no phones.
It's all yours, Scott.
And if we see you sleeping, we will wake you.
I can't. And I thought after all this time,
I think this of all the things you've done over the years,
this is quite possibly the dumbest thing you've said.
All the crazy things you've said and all the outlandish things you've said. Naming this your greatest album of all time, Kind of Blue by Miles Davis in 1959. No.
Okay. Go listen to it.
Unacceptable.
And then when you sit there and put it on repeat because you can't turn it off because it's so good.
Last jazz album I ever owned, ever. I think in college, and I think it was like Chick Corea or something. Remember him? Chick Corea?
Yeah, I do. Yeah, I do.
Chick Corea and Stanley, who's the bass player?
Stanley
Tucci.
No.
Sure wasn't Kenny G?
No. Stanley.
Yeah.
Who's the bass player? James, you know everything.
James, you know everything. Now he's on your ass, James.
Who's the great bass player in the 70s?
And this is Sosnoff up money on the day, by the way, ladies and gentlemen.
Stanley something. I forgot his last name.
Stanley Clark?
Stanley Clark. Yeah.
Wow, John.
Stanley Clark with Chick Corea. That was the last jazz album I owned, and that was the last jazz concert I saw.
I only had $5 to my name, so I didn't waste it by buying anything like that.
So you're right, Scott. 1976, perfect. Great year for jazz.
59. Hey, you can lead a horse to water. You can't make him drink, right? Wow.
It happens.
All right. Well, it does happen. Well,
and what'd you do to the
help
Bears before you go to your list?
Oh, I'll tell you what he did to the Bears.
Are you still 9? Are you at 9 bid? Are you still at 8.5 bid?
First of all, 8.5 bid, we got plus 120, which you were never going to give. Second of all, no. I think the Bears might not win a game. So,
and how come you didn't take the 80%? Manage your winners.
Oh, he didn't even.
It wasn't 80 at the time. It was about 70, 75, and then we said if it gets 80, we got to look at it. See,
no, it was 80. It was 80. You wanted 90.
No, it wasn't. It was 6. Oh yeah, it was close. It was close to 80. So here's what I should have done. My mistake was not breaking the bet up, because on the app you can't choose to settle for less. Like you can't say if you have 5 units, whatever, you could sell 1 unit or 2 unit, whatever. I should have done that. That was the mistake. Going forward, I'll break it up. It was sad.
I could see you two going, oh, look at us. We win this bet, and now we own the Bears for free. Bat's going to have 100%. To pay us. Chucky's going to have to pay us. Everybody's going to have to pay. To I hate myself.
That was no. That was the worst part. Just as Tom was dropping me off, he had to see he's got a message to Chucky. He's like, yeah, let's do a Chucky. Let's do a Chucky's messaging the message. Just because I like you, I'll let you out for less.
Chucky offered to let me out for $750.
Oh, so good.
That's the advantage of betting on an app. The app doesn't talk back.
There's nothing better than fading you two. It really isn't.
It's nothing.
In the first half, I thought this is the easiest bet I've ever won.
I'm sure.
Missed. Oh my God, did they look bad in the second half? Okay, should we do some business?
Sure.
Okay. All right. Top 20 someone's going through the system. First 40 minutes a day, no broad-based indices or futures. Tom, for you, number 20, open at a 39. For everybody else, UNH at a 25, GLD at a 35. Tesla at a 9, CRWV at a 5, NBIS at a 36, PLTR at a 13, NVIDIA at a 3, AMD at a 14, Hood at a 13, BABA at a 24, Apple at a 13, Meta at a 5, Oracle at a 64, Coin at an 8, iBit at a 20, SoFi at an 11, Amazon at a 5, TLT at a 14, TQQQ at a 19, and number 20 for Tom, open at a 39.
Open.
OPEN. Corinne just texted me. Oh, Foghat, she said for you.
Oh, that was Josh. Foghat. Yes, fool for the city or whatever it was. Yes, Foghat.
Foghat.
I get their numbers mixed up. I'm sorry. Cancel crash. I don't know if you mean the S&P's down 10.
Love a little Foghat. Who doesn't love Foghat?
There we go.
Scott, thank you so much for joining us today. I do appreciate it.
Thank you for telling us about all your world travels. We learned a lot from you today. There's a takeaway in the show every 15 minutes. Tony, did you get all his takeaways today? Brisket at Katz's, the unknown brisket. When you get a chance.
Just wait till you try it. And then you call me, you go, you know what? Got to give it to you. It was solid.
You and I have to do a tour of the Ed Sullivan Studios because we've never been there.
Yes.
Okay, what was the other thing we have to do?
Should I go to Rockefeller Center too?
That was fun. I did that last time. The rooftop at Rockefeller Center. That was fun.
I can't believe you.
What was the other
Seriously,
thing
it must be so good. I mean, honestly.
It is.
What was the other thing we're supposed to do?
Is.
Oh, God.
What else were we supposed to do?
Cats is before 11.
No, we done that already.
Yeah, 11:30.
Yeah, wait, what was the
buy
last thing
tickets
I
for
said?
next year's U.S. Open.
Buy tickets for next year.
Buy tickets for...
But you left before the finals.
I didn't have tickets for the finals.
And then find out where the
Don't you were bougie.
And then we got to find out where the Who's playing next, Tony, and go there.
Oh, yeah.
Philadelphia. I think Philadelphia. That's what
two
they
members
said.
that are still around. All right, I have to go. I'm gonna take a quick 90-second break and come back. We got Liz and Jenny next. A piece.
Like, don't forget to listen to Miles Davis, Kind of Blue. Start
I
to
will not
finish.
be doing that. Peace.
Miles Davis, 1959.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
If you missed the live show, here's our cherry on top yearly recap.
So, you know, we're doing the show on Friday, and the bat, you know, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
Oh, and then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
Yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful. It was beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
Oh, that's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was.
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Hello, everybody, and welcome to the Listen Jenny Show. It's Tuesday, and we're live from the Tasty Live studios. We're not at the SIBO today.
We are not at the SIBO. SIBO is busy. Our SIBO crew is busy. We are busy, everybody. We will be back there in 2 weeks, but until then, we are with our home studio, and we do love all the people.
It's nice to come in here and see everybody. It's probably, you know what? This morning, I got in and I realized because I'm wearing all black, I thought I'll put my deodorant on after I get dressed so I don't get any deodorant marks. I got here and I said, I forgot to put on deodorant, which actually would matter here in this studio, but on the SIBO, I would fit right in.
You'd fit right in. That's true. Yes. That is so true. Sometimes I was like, okay, all right.
I don't know what smells around here.
Move along. We got crop dusted the other day when we were down there. And I didn't want to say anything.
I can't believe you said that thing.
We did.
No, like, you know what happens down there? It's like people walk by after just having smoked a joint because you smell it.
Oh, yeah.
That happens.
That happened. Well, the other thing happened too, but I don't know. Your attention because I was about to fall off my chair. I was about to fall off my chair, but I didn't want to draw attention to it.
But do you remember the day where I was like, Liz, it smells like there's a skunk in here? And you're like, Jenny?
I'm pretty sure it's that guy.
Yeah, good times over there. Anyway, we miss it. We're not there today. Our crew is busy, and we're T-minus just a few days until we hit the road and head to Germany.
Cannot wait.
I know.
I think I'm gonna wear my dirndl on the plane just for fun.
You should. You should.
If it were comfortable and not completely stitched in like this, I would wear it on.
I feel bad we're not on the same flight. I'm going a day early, getting the most I can make out of this trip.
I'm totally going to Europe by myself.
You are.
I know.
You are. Yeah.
All right.
I'll check everything out. I'll let you
come
know.
pick me up from the airport.
I don't know.
No, I'm just kidding.
I could.
No, I'm just gonna get into a cab.
No, you don't get in a cab. Take the train. Take the
oh no, I'm
subway.
getting into a cab.
No, it's quicker to take the subway.
I'm not getting into a subway by myself. I'm getting in a cab.
No, in Munich, it's 100% safe. It's so
cabs.
safe.
We took cabs everywhere when we were there. I feel comfortable in a cab. I'm getting into a cab.
It's so easy. The subway will take you right to where you need to go.
Yeah, no, still no.
It's better. Otherwise, you're driving on the Autobahn. You don't know what you're going to be going 120 miles an hour. You're going to be on the Autobahn.
I'm okay with that. I'm actually okay with that. I'm getting into a cab.
It's longer. I'm just letting you know, longer.
Unless you come get me, I'm not getting on a train.
You know what? Just for this. Okay, so I've been to Munich. I have never gotten in a cab. We took the metro everywhere we go. So
well, your husband works there, so he's used to it. We were there. We took Ubers and cabs everywhere, and it wasn't bad.
Okay, but just to give you the full experience, I'm going to come get you. You'll see the metro comes. It's right at the airport. You get right on. It'll take you right to where we're going. I'm going to come and get you.
You heard it here, ladies and gentlemen. I need to be picked up from the Munich airport by Jenny.
I will come get you. And we'll take the subway.
I land around 9:30. You can sleep in a little bit.
9:30 a.m. I'll get you.
You will?
Maybe. Yeah, I can. Sure. Why not? No, for sure I will. I will. I know my way around. I had to furnish an apartment from living there.
Yeah, your son lived there.
So I went everywhere on the metro shopping for him.
I did look a little bit. The hotel is not far away from the airport. Our hotel is not far from the airport.
It's not?
No, that's why a taxi is it's not.
Oh, okay.
I don't think there's an Autobahn, although that'd be cool.
There is the Autobahn.
I know, but I don't think I'd have to get on the Autobahn to go from the airport to our hotel. I think our hotel's pretty close.
I will say, going to the RMC, and the RMC, anyone can go to. It's not a free event. It's a SIBO event. It is not free, but people can go.
Yeah.
And but it's not free. But they have these cool experiences, and one of the experiences is the BMW experience. And I don't know if they give you a BMW and just let you loose on the Autobahn.
They're like, here's the keys.
I'm not sure.
Well, we went to the BMW museum. Have you ever gone to it?
No, I didn't.
We went to that the last time we were there. I don't really know why, because it's not like we're a huge car family. But JD wanted to see it, so we went to the BMW museum, and I think there's a track around there. I'm gonna assume.
Oh, okay. So the BMW experience is driving there.
It's and the BMW museum was really cool, and it's right by the Olympic Park. So we went to the Olympic Park and the BMW museum.
So there's so many you could choose. The BMW experience. You could go
the market.
To the market. There's quite a few experiences you can choose, and I think our crew, they're all doing the BMW experience.
Are they? That makes sense.
Yeah.
Yeah. The girl we're with, Jenny Fortino, we love her. She works for the SIBO. She's been there so many times, so she said she's done all of them except the market trip. She said she's done the BMW experience. She's done all the other stuff. So she's like, I'm gonna.
And the two of us working hard, we said, no, we're just gonna be practicing. We're just gonna be practicing our presentation. Yeah. We're not going on any tour.
Well, because we don't want to drink beer before our presentation. I think you'd be proud of.
And I don't want to drive. I thought I had to drive on the Autobahn. I don't want to drive on the Autobahn.
We saw the Autobahn when we took the Sound of Music tour, but we weren't on it.
Okay. Well, trying to think. I don't know.
No, I did get on it for the Sound of Music tour. We got on it. We weren't going that fast, because I remember being like, is this the Autobahn?
You don't have to go fast. Not everyone drives fast on it. All right, let's talk about what the market's doing. SPOOs are down 10. Did you know that?
I did, because you just said it. Other than that, I did not, because it's hard. When we're driving in here, it's hard to look at the markets. I know we were up when I was driving very slowly when I looked at the market. SPOOs were up 9.
Okay, and now we're down 9.
And that was around 9 o'clock. So we're saying 9 so many times.
But you said, so last night was the Bears game. Did you watch it?
I watched it, and then I went to bed, and then they lost.
Okay, yeah, I know. It was a little bit disappointing. But
Beautiful
you said
night,
on Twitter you're seeing some good picks.
Oh, yeah. If we could pop into Twitter, I want to start here because I love it. So, number one, Jackie, thank you for posting this. Look at this. Mikey, our Polish warrior. Bears kicking butt on Monday night and getting a picture with Tom and Scott. Priceless. This is awesome.
And, okay, so here people, number one, get to see a photo of Tom without his beret on.
There he is. That's facts.
And there's Scott and Mikey. That's awesome. So I love that they must have run into each other.
So here's my question. Are you watching the live show?
No.
You can't see my mouse, can you?
No.
Oh, because I'm circling everybody's head. I was like, here's Mikey. Here's Scott.
No.
I was like, there's Tom.
Yeah, I love that Mikey ran into them.
Mm-hmm.
That's awesome.
That is so fun. I mean, they are easy to pick out. Tom and Scott.
I guess so. Especially, Tom looks like he had a haircut. Doesn't it look like he has a little feather thing going on?
Yeah, I think Corinne cuts his hair. I'm pretty sure she's his hairstylist.
Funny. So anyway, Bears game, want, not what the Chicago fans hoped for. And you remember how I told you I was betting on the Detroit Lions to make it to the Super Bowl?
I remember.
So when I looked it up. So when I placed my bet before the weekend of Detroit Lions making it to the Super Bowl, the payout was $600 or 6 to 1, like 600. Yeah, 6 to 1. So like for every $100 bet, you would get 600. After the weekend, now it's almost 1,000 to 1. Like not 1,000 to 1. Like for every 100 bet, you'd get 1,000.
Yeah.
Doesn't look too good for that.
Well, odds are going to change as the season changes.
But I contemplated waiting to make my bet until after the weekend, but I made it before.
Well, your risk is defined at order entry.
And I am learning. I'm taking
your odds. Your deltas are changing just like this. Just like this. When you put it in, the markets move. Things change.
Yeah.
You've still got time on your side. You've got time to be right. You've got time to be wrong.
It's kind of like selling a put. It's like if I sold a put last week for $1 and today it's $2, and I say, well, geez, I sold this put for $1 last week and now it's $2. Would I sell another one, or do I just leave my initial trade? Risk is defined at order entry. I like it.
Yeah, risk is defined at order entry. It goes for gambling as well. You heard it here.
I'm not going to double down. I'm not going to go double down my bet on the Detroit Lions making it to the Super Bowl because we'll see.
Who won our pool?
Not me.
The train conductor.
What were your numbers?
I have no idea. I didn't even look at it. I never even opened them.
I didn't win.
I don't like to open them because I just like somebody comes and hands me money and I have no idea what I'm writing.
Oh, we're not going to be on the train for a while. We're going to be in
Neither will
Germany.
he.
And he's on vacation. He's going to Bozeman golfing. So anyway, yeah, the numbers change every week. I was 1-1. I don't know what the final score was, but it wasn't 1-1.
Wasn't 1-1. I honestly didn't even open mine up to look at it.
What are you looking for?
I'm just turning my ringer off because it just was beeping.
Oh, it's probably JD.
It is not. It is one Frank the Great. Hold on, let's see what he has to say.
Frank, manning our YouTube. If you're on YouTube and you want to post something, Frank will share it with us on Twitter. What are you laughing at? What's going on, Frank?
Nothing. Just Frank and I having fun together.
All right. So yeah, go back to Twitter. Let's see what's coming in other than Mikey's picture.
Okay, so we got Mikey's. I'm going to go top down real quick just because. Okay, so, Death Sneeze. That's an interesting handle. I like it.
Death Sneeze.
Death Sneeze. Okay. Capture the ES at 0, change today. Also, my favorite feature of Tasty Trade besides the goofballs at Tasty Live is the grouping positions feature that helps you focus. I like it.
Yeah. Yeah, people have asked us before, like, why don't we group, right?
They do. So if you want to pop in, we can show, let's pop in the platform. We can take a look at that.
Okay, so yeah, if we pop in the platform, now here are all of our positions, and we have them in alphabetical order. It starts futures first and then alphabetical order. Now group by, I have them grouped by symbols. We've had some people say group them by order chains. How does it do it?
Open up something with order chains. Yeah, there you go. It says ratio.
And this says calendar.
Oh.
Option. Etha. What will it say? What's the one where we're like, we got to keep track of this?
Etha. It says custom for Zebra.
No, what was the one where we're like, okay.
It was Etha, but we closed the one, so it's fine.
Where we had the call and we said, let's wait for a bounce to sell another call.
Yeah,
Don't you remember that?
It was Etha.
Okay.
We tried to get out of that call and we couldn't.
All right. And so that's order chains, and you could...
Our Galaxy looks good. Just click on Galaxy and tell me what it says, because we sold a put spread and then bought a call. I want to see what that one says it is.
Okay, I'm going to close all these up. Galaxy...
I mean, it's looking good. We're up $88, 44%, but what does it say it is? Are you grouped by...
I just put it back to custom.
No, I just want to see what they think
it's a custom. So we sold this put spread to cover some of the extrinsic value on this call we bought. So all we did was buy a call, remember? And
we did the combo and then we bought something.
Yeah, right.
So the combo, what we bought is down $4. The combo is actually winning. So 17 and a half.
Right. Yeah. I mean, basically, we wanted a long position with unlimited upside potential.
Jazz hands.
It's the jazz hands. And we bought that put to define our risk because it was going to use too much buying power. So that's up $95. I guess we take it.
I don't know.
You don't know?
What if Galaxy's going to the moon? Of course we take it.
I mean, some people might not take... Okay, here, let's talk about this. We bought a long call. Sold that did the combo to wash extrinsic value or sold the put spread to cover some of the extrinsic value, however you want to look at it. Now, if we did a zebra, we might ratchet it. Now, is there a way to ratchet a long call and take some risk off the table? I'm going to look.
I think if it moves up a lot more than this, maybe.
I'm going to look. So if we have this and we took $100 out of it, if we close out, I'm just curious, if we close out this combo.
And just buy the 125 call.
And buy that, so basically, hold on one second.
Yeah, you're getting no. Just do it. You're just.
If I close the whole thing, I'm getting $3 in credit. If I close the whole thing, I'm getting $3 in credit.
And then you're buying the other one for less than $3.
So then we're just moving it.
You're just moving it up.
By even, because we paid for it. What did we pay for it? $2.
Yeah.
Just trying to see, like, if you have a long call.
It's not. It's hard to do.
It's hard to do. You can change it to a zebra where you buy one more and sell one, but then you're paying. You're paying
an
for
additional
that too.
debit. And I think if it's significantly higher, and if it pulls a Robin Hood and up 14%, you can maybe do something with it. But when it's up,
Yeah.
$1.
I mean, you could take your put spread off and take the risk of the put spread off, and then you could sell a call against it, and then you just have a call spread. Let's just take our $100.
Yeah, I agree.
And hope that, do you hear Tom complaining about some of these products today?
I didn't hear Tom say anything today.
Oh, yesterday.
Okay.
No, what's today? What's today? I guess I had him on for a little. About just, and I don't know what Galaxy is, not Galaxy in particular, but the products,
UPXI, they're just
the products that are similar to
MSTR.
the MSTR, that they're just, buying these cryptos. All right, I'll take it off. Is UPXI up too? No, down.
Down goes Fraser.
All right, I'll take off this custom Galaxy.
All right, while you're taking off the custom position,
we paid $2. Now we're gonna get
we're getting
$3.
So let's pop back into Twitter while she's closing that. And
might be wide markets could take a little time.
Yeah,
to
could
fill.
take a bit. So there we go. We're back in our Polish Warriors.
We're already filled.
Wow. Wide markets? I don't think so. Thank you, Galaxy. Okay. The Polish Warrior comes in. Happy Tuesday, ladies. $100 in my pocket. Starting to love the 0 DTE iron flies. Well, I try to get my free SPX or XSP butterflies. Yes, here we go. Love the iron flies. And look at how fast he got it. Look at how fast he took it off. How wide is this? He's $15 wide in ES, right?
At 9 o'clock, he took in $14.75, and at 9:55, he got it off for $12.75. So $200, he cut a 50% multiplier. So he made $100 in 52 minutes.
But how wide is it? So he's got the 65.05 as the shorts.
So it's $25.
$25, which is technically
$12.50.
$12.50. That's not bad.
I like it, Mikey. Liz and I were talking about SPX, ES, whatever. You can do whatever you want with it. And I don't know that it needs to be, like, some days I might do one thing and some days another.
Oh, I don't think it matters.
Like on Friday I sold the Iron Condor, like 20 Delta short Iron Condor.
You used SPX though, right?
I used SPX for Monday. And then by the end of the day, it took a while. It took till the end of the day.
So I do think sometimes, so I've seen these ESs, Mikey. I mean, just because I've been doing it with my son, I feel like sometimes the ESs, I don't know if it's wider markets. Is ES, well, I'm just going to ask this, an existential question because it's not to you. I think there are wider markets in ES, and that's why sometimes you get weird, like you can get filled. Because 50 minutes is quick for an iron fly.
That's fast.
That's quick. But I've seen them where we put them in, and then they're gone in like a couple hours in the ES.
But I'm trying to see, like, is VIX coming in? Yeah, no, it's actually, VIX is actually up 32 cents.
What?
Yeah. Yeah, up 32 cents.
It's crazy. Hold on. Fabio comes in. I love Fabio. Oh, wait. First, I got to retweet all of this stuff because I'm reposting Mikey stuff. Fabio comes in. He lived in Munich for 2 years, and the U and S-Bahn are super safe. Yeah. Getting on the Autobahn. Is that what it is?
I mean...
Or is that the train?
U-Bahn, S-Bahn. I think those are the trains.
I believe they might be safe. I'm just worried about getting on the wrong train. It happened once already in Munich.
No, it's very easy. It's very easy.
We got on the wrong train going to...
Austria?
From Austria to Munich.
You got on the wrong train?
We got on a train that we didn't have tickets for.
I told you they're tough there. You have to if they randomly.
My husband instantly started sweating because I remember you saying like you could get arrested if you get on the wrong train.
Well, they'll randomly ask you for your. It's an app. It's all on an app. Your tickets are on an app. So they might randomly go up to you and say like, "Can I see your ticket?" And if you don't have a ticket and you're trying to ride that train for free,
we had a ticket for the next day, or we had a ticket for the following day. So we were on the right train, wrong day.
Wrong day. Okay. So that's why you're afraid of the train and afraid you're gonna have the wrong ticket?
No, I'm just getting in a taxi because it's not that far. I looked at the hotel and I looked at where it is. I feel like there's no way there's a train from point A to point B because the hotel's that close.
I heard the self-driving cars are coming to Germany.
Ooh.
I don't know if they're there yet, but Fabio.
Fabio.
Where's Fabio now? Italy. Right? Yeah.
Italy. Yeah. Love Fabio. Okay, now Eric Blue Wackadoo comes in. Done for the day. At the market, T minus the market open 65.10. Collected 20,051 and 1851 before and after fees. Okay, there we go. That's
so
before
we
and that's
made
after.
2025 and after fees 1851. So there's a hefty amount of fees, but
I'm willing. So here's the deal. I'm willing to pay those fees.
Yeah.
That's fantastic, and I like that Fabio. Or I love that Eric puts it out there. That's wonderful.
Now where my tacos at?
Oh, you know what?
What's for lunch, John? What's for lunch today?
Oh, I'll tell you. You don't want to know.
What? Lou Malnati's pizza?
Yep.
Oh.
Pizza.
I walked by. I was like, oh, this isn't gonna end well. But there is Sweetgreen too.
I mean, all my work on my diet, and then one day in the studio.
I was really looking forward to tacos today too.
I don't like tacos.
I like tacos better than Lou Malnati's pizza.
I don't like tacos because then there's a big thing of chips.
Oh, you do hate the chips. You think the chips? You hate the chips.
I'm not a taco person.
You hate the chips because you like the chips.
I like guacamole. I won't allow myself to go to a Mexican restaurant because I don't want a bowl of chips in front of me.
Because you'll eat the chips.
Because I'll eat it.
You hate the chips because you love the chips.
This is how it goes. Here are the chips, and then they're all gone. Would you like more chips? I guess so. Sure. Then eat those chips.
Then they're all gone.
Then they're all gone.
I
can't stop eating the chips. That's why I don't like the chips.
I know, but you say you don't like the chips. You don't like the chips because you love the chips.
Exactly. I guess. Yes.
Okay, Ash Finn comes in. Went to MNQ again. Let's go back into Twitter real quick. Went to MNQ again for my overnight fly. Oh, that's good. So this is good.
Yeah.
Okay, works well as I closed it for a $30 winner. Max loss would have been 82. That's great. So he went overnight with it, Ash Finn. So you can do these.
But now here's where I will be cautious of fees because if you're only making $30, be cautious of the fees. I will say. You have to be mindful of them.
And so do you remember we were looking, and this was a while ago, not a while ago, maybe like a month or two ago, and we were looking at SPX versus ES because I had my son doing the ES, and I have to monitor it. And then they took the fees down, so they now match SPX.
Here, I'm going to go to MNQ and take a look, okay?
Let's take a look.
MNQ. These are the micro E-mini NASDAQ. And he's doing a spread. And again, when you're doing a spread.
Can we go to the platform so we can all share with the class?
23,810.
I got it. 23,810.
I'm just going to go to the one day, okay? So
yeah, just go iron fly because he's just doing iron flies.
Okay. How wide was it?
So this looks like it's $90 wide. Is that right? 23,810 to 23,700. No, that's $110 wide.
Yeah, I'm just gonna go here. I'm gonna go.
Just do 100.
23,790.
Just do 100, just for math purposes.
Yeah, 100. And then 100 on this side, 23,790.
So do you know what's interesting? Wait, before you touch it, look at the bottom. See how it says max profit $2 and it says max loss? They doesn't give a max loss?
Yeah.
It's because you're so close to the expiration. It should give you a max loss.
No, because I still have a naked call.
Oh. Okay, I didn't know you had the naked call in.
23,790 to 24,790. What? 23.
What's your?
Wait, 790 to 23,890. Here we go.
Yes.
Okay, so here.
Oh yeah, here you go. Your max profit's $150. Your max loss is $44. This is a $2 wide. $100 is $2.
Okay, so if I go, I just want to see. So my fees are
free. I mean, I'm laughing just because it's zero.
It just took a second. So $3, $4, $5.
There you go, yes.
So like $484. So just to be aware, like $484, and then So 44 on the way in. Just check them on the way in. Like, look at them to be aware. So you're good. You're good because even, $30, $40, you're good. You're making more than
you're paying in fees. Yeah. That's what we were just checking on.
Yeah, just double checking.
Okay, let's pop back into Twitter real quick.
But so that's like a $2 wide. But so Emma, when you're doing a spread.
Okay, back into the platform. She wants to show us something.
Oh, sorry. I just want to say when you're doing a spread, you don't necessarily have to use the minis. Like I'll use the minis if you're going like naked options or something. But if you're doing a spread, you can do a spread in the big dogs too.
So this was very, very small. So you might take a look at that. So if you want to make it a $2 wide.
Like here, you can just do $5 wide, $5 wide, where you hear it, same thing. Max profit 150, max loss 45.
It's exactly the same.
Yeah, it looks exactly the same. So you don't have to, if you want to, this is just the NQ.
Do you know what's crazy is looking at this, the MNQ had more volume.
Did it?
Look at how little the volume is at this.
Maybe
Ashvin's onto something.
Maybe they're tighter markets. Now, for a while, TP was selling put spreads in NQ.
Yes.
He would do his dailies in NQ.
In NQ. He liked it because it was bigger. And then every time he did that, I would get an email saying it's illiquid.
Yeah, he did like it because it was bigger, but then he would complain that it was illiquid. And the markets are wonky. Look at this. I mean, not wonky, but just wide. 75 cents at 225.
But if you're doing sometimes, I like a wonky.
If you put in,
you can get out sometimes.
You put in your price that you want, and like here, 50 cents.
I mean, it's jumping from 150 to 90. If you're looking at the bottom, like it's literally the mid price is jumping by 60 cents at a crack.
So let's say I go to like $2. Okay.
Because she wants her $2.
Yeah, I want my $2. Now I feel bad that we made John Cusack take a picture with us.
Why?
Because he didn't really want to.
Oh,
he did about that.
He did not want to at all.
So if someone came up to us and said, "Can we take our picture with you?" and we're like, "No, we don't really want to," and then they were like, "Come on, come on, come on." No, we shouldn't have done that.
I don't think we said, "Come on." We said, "Well, we host a show, and every day we say, I want my $2."
No. You have missed. No, that is not how it went. No, we asked him for a picture. He didn't want to. Then we saw him again in a different spot inside the club, sitting at a table.
We're like, no, you got to.
Oh, we're on the same club. How about a picture now? And then he took the picture, and we were like, great, we host a show. Our viewers will love to see this. And he's like, what? This is going on a show?
Oh, we went backwards with it?
Yeah. Okay, so anyway, I'm gonna put in $2 just to try to get my price, and then I'll try to put in $1.50 to buy it back. I'm gonna try this.
You're not gonna get filled at $2, but.
And I want to see multiplier. Okay, estimated trade cost $250 plus $175. So you do the math, and.
$425. Same
did you know? Did you know this was like a 50% multiplier?
MNQ?
Yeah.
Yeah.
No, NQ. We're in NQ.
No, but it's the same thing as ES.
Oh,
yeah.
I don't really trade these NQ options. I'm just pulling a TP.
You're not going to get filled at $2. I like that you're just sitting there 50 cents away.
Just trying to.
You're going to get a gold star. If you get filled, I want you to run around the studio singing, I want to be an Air Force Ranger.
No one's going to see me. The camera's right here.
I bet
James might get a glimpse of me when I come past this other
if
camera.
She runs by, James, can we follow her around the studio?
I'm not doing it. Thursday, do we have Glenn on Thursday?
Yeah, I think so.
Let's take a peek at our Tasty FX, just so we're prepared.
And then we do have to get back into Twitter because I've got a Jeet coming in and Bob on fire, but not yet. Let's take a look.
Okay, let me see what our positions are looking like. Nothing's changed.
Nothing has changed.
Euro, US, okay. So I want to see, let's take a look again, see what's going on. US dollar, Canadian dollar, US dollar, Euro, US dollar. Let's look at this. Euro, US dollar, trade page. How has it been moving? Do you think, should we get short a little bit here?
So getting short is saying you think the US dollar is going to get higher because the first one's going to go down. I mean, a lot of people are long the US dollar, and this isn't a bad way to play it.
Should we? And then when Glenn comes on, we'll say, Glenn, look, we put our trade on ourselves.
Sure.
Just throwing it out there. Let's look at. We can check other ones. We'll look at.
No, I like that. I mean, I'm looking for US dollar strength, so I don't mind the euro dollar US.
All right, US dollar, Japanese yen. Now you look at this and you're like, it doesn't look like such an extreme.
No, do the euro.
can that hedge our spending? Can somehow we hedge our spending in Germany with these Tasty FX?
The only thing that I do know is I'm coming with a pocket full of coins because sometimes you can't go to the bathroom in Germany without coins.
Oh, I already have my coins. I already have them loaded.
I did not know that.
If you're on the subway, I'm surprised you ran into this since you never took the subway. If you're on the subway,
We did it in Hallstatt. We were in Hallstatt in the middle of nowhere, and they're like, "We need it's $1 to go to the bathroom." I was like, "What?"
Yeah, the coin to go to the bathroom, but they keep them clean.
Mm-hmm.
Yeah.
Yeah.
I kind of wish the metro station ran the same system.
People just pee on the train in the metro system.
No, the one at the LaSalle Street station, behind the bar. So there's like the bar.
Oh yeah.
If I can call it that.
It's like the bar.
They are only open certain hours, and then around the corner.
Wanted to drink in the morning.
And around the corner, there's a bathroom that I'd rather they charge people to get in there and keep it a little bit.
I don't know
nicer.
that I don't know that I could ever walk in there.
Oh, I went in. Liz was like, "I can't believe you're going in there. I can't believe you're going in there." And I went in like ready to see rats.
But you had to go that bad.
I didn't see any rats.
Did you keep your eyes closed the entire time? Because I think I would. In that bathroom, I would have kept my eyes closed the entire time.
No, I only went in once, never again. But we do go in the building to go to the bar was closed. I wanted a drink of water. I tapped my credit card so many times to get one bottle of water. Charged me $28.
Yeah, $28.
I'm tapping my credit card that many times.
They never give you water. They give you 2 Sprites and a bag of M&Ms.
All I wanted was one bottle of water. $28 later, 2 Sprites, bag of M&Ms.
Yes.
Peanut M&Ms.
Peanut M&Ms. So funny. All right. That being said, walk down memory lane is super fun. Let's pop into Twitter. We got to get to Bob on Fire. And I want to get to Ajit because we have a lot of earnings today. Not a lot, but enough that I want to look at it.
Oracle. GME.
So thank you very much, Bob. We appreciate you. Oracle, GME, AVAV, SNPS. Don't know what that is. And Chewy. We don't have positions in any of them, I don't think.
I wonder what SNPS is. Like Great Clips? SNPS?
I don't think so.
Synopsis.
And then while we're in here, just pop back in and take a look at this.
Let's look at it.
Ajit's putting up graphs now. Look at this. Okay, so this is a Roblox call ratio spread. Expiration is 10/17. Earnings are 10/30. Look at this. Ajit spells it all out for us. I love this guy.
He's got it all right there.
Okay, and then the 140, 145, 1x2 call spread for a net credit of $2. Max profit 7 per spread. Income and cap appreciation potential and before earnings can be done with further out of the money strikes for a decent credit as well. As well. Oh, as well, with high probability potential.
Look at that. Wait until you see the assumption trades for tomorrow. Ooh, Ajit.
I can't wait for your Sosnoff surprise. So let's, do you want to take a look at Roblox?
Yeah, sure. Let's pull it up.
So Roblox, I've got his strikes up, call ratio spread. He's in 10/17 expiration. It's pre-earnings, and I really appreciate you putting that in there for us, Ajit.
Okay, pre-earnings, October.
Yeah, 10/17.
Got
and
it.
He's got the 140, 145, 1x2 call
so he's
ratio.
gone pretty far out there.
Yeah. He collected $2, I think.
Yeah, $1.84.
Yeah. So this is pretty good. It brings your break even to, a little over 150.
Here, I'll pull it up on the curve view on the analysis page, even though we don't need to because Ajit already put it out there. But here it is. Looks like his. Now, I'm moving this if I want to. Here's your $1.87. If it goes down, you keep that no matter what. Here's your sweet spot of 145
which is
at
$7.
expiration. This trade is using $3,900. If I want to use less, I'd have to buy something. Let's say I buy the 160, 165. Now I go from using $4,000 to $1,300, and then it looks like this.
And using less of a collection, but you capture.
But then now I have a risk definition to the upside.
Yeah.
Getting you over 150, that's not bad.
It's not bad in Roblox.
No.
No, to his point, he says you can probably bring it closer because he was a little bit farther out. He had the 140, 145. If you brought it closer, you would take an even bigger collection.
So let's say I shift this to the 135, 140, and shift this, and let's say I want to get there. That's 123 again. Now I'm using 877.
It's not bad.
It's a little bit further down. No, it's not.
It's not bad.
And if we want to use less buying power and we're not playing for this 140, make the most we can make here, and we're just playing for that 50% of $1.22, we can just sell the 140, 145 call spread for $1.34. And then we're only using 366. So you can scale this based on the size of your account.
Right, and that, I mean, technically what you're playing for. Now, Ajit is very, very good trader. Like, he's well aware of what he's doing. But for me personally, if I'm doing the ratio spread, I want it to be a little bit nearer term, because if I'm playing for that peak, this is a long time to wait for that peak, but a $2 collection is pretty good from that ratio spread that Ajit got.
Yeah, right. So most of the time when you put on a ratio spread like that and you're collecting $2, you're going to take it off at 50% of that $2. So you're going to take it off for $1. So you're going to make $100 out of that trade. So if you're playing for 50% of the collection, you can just turn it into a call spread. But if you're afraid, the nice thing about the ratio spread is then if it goes up, you're like, okay, I never got off for 50% of my credit, but maybe it'll hit my sweet spot, and then I have to leave it. But then you have to leave it to expiration.
Right.
So if you're not planning to leave this, then I tend to switch to like just a spread instead of the broken wing butterfly. It depends.
But if you do put the ratio spread in, I really do thoroughly enjoy putting ratio spreads on and then butterflying them off.
Oh, and then shifting, yeah.
And then butterflying them off. That's my favorite thing to do. But you have to be able to hold the risk of $3,000, $4,000 worth of capital.
You got to take enough risk to take big enough credit, so if it moves in your direction, you can butterfly
it off, and then you sit on it.
Then
it's off to the races.
Roblox, what does it look like?
It's not bad. 27 rank. I like it, Ajit.
Wait a second. I'm still on the 1 minute. We're still on the 1 minute, 1 day. All right, hang on. Now I'm going to go to 1 day. And
you're 1 day, 3 days.
There's 1 day, 10 years. Okay, so now it makes a lot more sense. Let's just, so to scale this down for us, to not put too much buying power into it.
Broken wing butterfly.
I was going to go to the 140, 145 for
perfect. Ship it.
$366. And I'll put in a 50% GTC for it.
Yeah.
Okay. So that's in and filled.
Oh.
All right. So now.
Here, push all that stuff through. I'll do it on the side.
Hold on 1 second. I'll go to this trade. Where is it? RBLX. And I'm going to put in our closing order to take 50% out of it. Review and send. Now, if Roblox goes down and we make money on this trade, we could also try to turn it into a free butterfly. If you always, like, instead of taking your profits, you can turn it into something else. You have the option. When a trade's profitable, you have the option to turn it into something else.
You do. It's just easier to butterfly it off when you have a naked option, but there's still, where there's a will, there's a way, Jenny Andrews. Did you push that through?
Not yet. Okay, today so far.
Yeah, and throw Galaxy out there too.
We got out of Galaxy, published, send that to the follow page, and we got out of Roblox. And I want to, while we're here in the office, I want to go talk to someone, because on the follow page, it says that we're short, like Delta's short. And I know that's not true. I would say neutral. We're usually pretty neutral.
I would say pretty neutral too. We're actually very neutral. And we have a little bit more money than that, but that's okay.
I do want to tell them, like, whoever is in charge, change this to neutral. I'm curious to see if everyone in here is neutral except Tom and Tony from Mexico.
And us.
But we're not. That's why I have to fix that. So, all right.
Okay, so do you want to let's take a look at Oracle? Let's take a look at some of those earnings plays.
Got it. Oh, RCL. Oh yeah, are you back in Twitter?
I did, but no, we can. I was just looking at it for my purposes, so we can go into the platform.
Would you have ever guessed that Oracle is $237?
No.
Me neither. No.
And the other thing too is GME. I have a GME position.
All right. Well, here's Oracle. $237, $20 expected move. Anything?
No, you almost have to avoid that like the plague, except there is a 217 calendar if it were bearish.
Or I would just say, $2.50 wide for $1.
That's not bad. That's almost a chicken. Bad. You're getting $2.50 wide iron condor on both sides. It was 50 cents and 50 cents. That's pretty symmetrical.
Right. We're out of the way they expect to move on both ends.
Yeah, go for it. 63 rank. Checks all the boxes.
Yeah. So that's working. And
these are the original 0 DTEs, the earnings trades. What? I think you got filled each leg separately.
let me see. Here we go. Here it is.
Yeah, push it out.
Publish to follow feed. And yes.
So we're in. You don't put a GTC in for those, but isn't this funny? Because those are the original 0DTs, earnings trades.
Earnings trades. Yeah. I mean, it's not, and it expires Friday.
Yeah, but it's the original, like, I want to take it off the next day.
Earnings.
Yeah.
I want vol to come in. I want vol to come in so fast. The original 0DTs.
The originals, the OG. Can we take a look at GameStop, GME?
Okay. I don't have anything in GameStop.
I do, because JD bought some, so I bought some in mine. $23. I don't think it's gone. It hasn't done much.
No,
That's
it's good, nice for premium selling if you've been selling puts in here.
No, it would have been nice for premium selling. He just bought some, so I actually wound up just buying it. But it hasn't hurt or helped. Do you know what I mean?
Mm-hmm. Okay, so 219 expected move.
So here around my stock, I'm probably gonna sell a strangle.
And if I had the stock and selling a strangle, I'd just look for 50 cents and 50 cents.
That's exactly what I'm gonna do.
So you get $1. Now, $2,315. It's completely cash secured.
Yeah. I think that's why I own the stock instead of selling puts.
Yeah. Maybe, I'm curious what this big lizard will go for. $1.80, not enough.
No, the big lizards you can never really get over the
No.
collection of the call on an earnings trade.
I don't know that there's anything to do here.
And GME, I mean, I'm telling you, when there was a meme stock, it was the craziest thing I've ever seen in my entire life. Because I would drive by them and there would be like flashing bulbs. It looked like.
Oh, it had nothing to do with the value of the company.
I know. And now they're getting into more crypto stuff.
Okay.
Like everybody else, we'll see.
I don't know. I mean, I don't have any. I don't know that if someone wanted to get long it, here's a real.
I don't know that anybody needs to get long it. I'm just saying
But if you're long it and we wanted a bullish trade through earnings, we could buy a call spread for 82 cents. Basically, you're paying 82 cents, risking 118. Or you can make 118, you're risking 82 cents.
It goes, there's always been 0DTEs. It was called Expiration Friday. I was like, okay.
once a month. And when we were young,
there was only Friday expiration.
Well, and when we were young, don't you remember how brutal that Saturday morning was after Friday expiration?
Correct.
We had to be there at like 5 in the morning.
Oh yeah,
6 in the morning.
I think it was even earlier than that.
It was crazy. It was a crazy hours. Like, oh gosh, our friends would all be going out on Friday night, Friday of expiration, and we would say, sorry, we can't go out, it's expiration Friday.
Or we'd just go out and go straight to the ACEBO the next morning.
No, never.
I'm telling you, I was in charge of the clerks for a long time, and 9 times out of 10, they would come rolling in from the night before.
Straight from being out.
Oh, and I was like, this is not going to end well for me being in charge of you guys.
Are you kidding?
Uh-huh.
I just remember my whole youth living in the city. Sorry, can't go out, it's expiration Friday. Got to be up at the crack of dawn on Saturday.
Yep. I always laugh too, because then our friends, the Rosslers, we were in Naples the one time when we were on a boat, and there's this huge yacht, and the name of the yacht was Third Friday. And I was like, that's an options trader.
That's funny.
Yeah.
We still have to figure out, we saw a car in the parking lot at the train station, and what did it say?
It's going to be a while. I have
Said
so many other pictures.
Said SIBO or...
It's SIBO, and then it had an acronym. We got to figure out who it is.
Right, so we took a picture. We're going to find out who owns this
We'll get
car.
to the bottom of it. I just have so many pictures on here, though.
Do you want me to put on a bullish trade in GME for?
No, I don't. I actually don't. I just wanted to look at it because I've got it in there, and I don't think
it's only
anybody
risking 82 cents.
Oh, sure, then do it.
$82. 82 cents is $82. We're in solidarity with JD. So here, all I did was I just tried to wash extrinsic value. Like I bought a call, I looked at the extrinsic value, and then I sold a call which had close to the same extrinsic value. Basically, if GameStop goes up, this would make money, but we, can only make 118.
Yeah, not a lot. I don't know. I can't find that picture.
No, but it's fine. I'll have this on. We're only risking $82.
Okay.
And that's sent.
Okay, now let's pop back into Twitter. I just want to make sure we get to all these just because. Okay, so Jack Tucker, the OG, comes in. 2 tranches of 0DT SPX collected $5,575 in premium.
Which is lower than his usual.
It is. Close to taking it off, just watching it right now.
Okay.
Love it, Jack Tucker.
T.
So he's got, what is he, a 5 lot? So he's always $25 wide. Only because I want to look at what deltas he's got. So he put it on.
Isn't
you
he
put him on
on
it.
the 20 delta?
He's got him at 9:51, so he does it right wrapped around, like give or take 5 minutes, like the Jacob studies.
9:51 or 8:51?
8:51.
Yeah.
8:51. So right after the open, before 9 is what I was thinking in my head, and it's $25 wide.
Yeah. And what's he collecting on each? $5.
$5 on one, $6 on the other.
Yeah, that makes sense.
Yeah. So you're risking $2,000 each trade to make $500. That's not bad.
No, I mean, hey, there's a reason the SPX 0DTEs have like surpassed the regular SPX trades in volume.
They have surpassed them in volume. Okay, then Ash Finn comes in. Commissions on NQ are more than MNQ.
Oh.
Oh. Okay, so that's it. That's why he's in MNQ and MES, because NQ has more commissions.
Okay, that makes sense. Ash Finn, you already know what's going on.
And like I said, I'm really leaning towards Ash Finn, only not for my purposes, because I'm a psycho. I'm in my account all the time. But for my son, I like the 7 p.m. instead of like the day trades.
Because he's home at 7 p.m.
Yeah, or it's easier to be. Yeah, you're not.
He's not in school.
You know, it's really hard. Whatever time your classes are, you can't plan your classes around a 9, which is to be 10 for him because it's an hour later.
I mean, a lot of people are at work. They're not gonna.
Yeah.
It's so funny because I don't know, like. My son, he won't go on his phone at all at work because he doesn't want to think. He doesn't want when he had his job over the summer, like he didn't want his boss to think he was on his phone. So
I agree. That's a good work ethic.
So they couldn't be like, oh, I'm going to make this quick trade because I'm at work.
That's why I really like Ash Finn's style. I like the night, just thinking from that perspective and being like, hey, but I would love for Jacob to maybe do some studies on the nighttime trades, because what time is the right time to do it? Because it's open 24/7.
No, I agree with you. So we live in a world of traders, right? We're surrounded by traders. And whether we're at the SIBO, it's people trading. Here, it's people trading. We're surrounded by traders.
Yeah.
Where most people are going to a regular job and they aren't just like surrounded by traders. So what doesn't seem, they might not have the opportunity that we have to trade throughout the day. So I get it. I get the late night.
Yeah.
Yeah. I get it.
I do like it.
And Frank Walsh posts this comes from Stephen Bivens. I did my first 0DT iron condor today on SPX and was able to close it for 15% profit in 30 minutes. Nice. Stephen Bivens.
How is he getting 15% in 30 minutes?
It must have been very wide.
It must have been wide.
Or 15% is...
He didn't say iron fly, he said iron condor. That's pretty good.
Yeah.
Because the iron fly is getting the 10% takes a couple hours.
The iron fly takes longer because you're right there.
Starting with the straddle.
You're right there. And if you're not very wide, if it's only $10 wide and you're risking very little, the less you risk, the longer it's going to take to get out of it.
Yes.
This is 10:46. I don't have my phone today, so I don't know what time it is.
So yeah, those are in there. We already got to death news, which is good. Okay. Wait, hold on. So look at this. Okay, so Mikey, sorry, I almost glazed right over this because I thought we went to it already. So inside scoop, Tom and Scott were sitting in the highbrow section, so I had to sweet talk my way past the security guard to get down there to take a pic with them.
Aww.
Scott was kind enough to share where they were sitting when I found out they would be at the game.
Oh, nice. I'm glad.
Mikey.
I wonder how, okay, so my neighbor went to the game. He said he paid like an outrageous fortune for those tickets to the Bears game. Yeah.
It was a beautiful day, though. Like, you couldn't have had a better day for football.
I know, but it was rough because the Bears lost.
I know.
It was rough, so I felt bad for all the people who paid like a crazy amount of money for those tickets. Although it was cool in the beginning and when the planes were flying over and it was exciting. And did you see they had the Blackhawks singer sing the anthem?
Yeah, he's really good.
Yeah.
Yeah, he's always good.
Yeah, just too bad.
That's his only job, though. He's the singer. Just always reminds me of when my daughter auditioned to sing for the Blackhawks, and they did a great job. The three of them went out there, and they harmonized the entire thing. It was wonderful, wonderful, wonderful. Then they asked him to sing the Canadian national anthem. I don't know why they did, but for the Blackhawks, apparently.
Well, you would think that they would have told them ahead of time. Like, if you're coming here to audition for the national anthem, you've got to know the Canadian national anthem.
Oh, they didn't know it? One girl thought she knew it, and they just kept getting closer and closer to her face as if that would help them. I was like, this is like watching a sitcom. I had it all recorded.
Oh, funny.
Yeah. But that Blackhawks singer is amazing. Okay, oh my God, Mikey, you gotta go back to Twitter real quick, and then we'll do this. It's fun. It's fun to do bad things. Listen to Jenny about going to the bar on Expiration Friday.
It's fun to do bad things.
It is, Mikey. I love it.
No, I couldn't go out on an Expiration Friday if I had to be there Saturday bright and early.
I did, Mikey. I did. Guilty as charged.
Because you can wake up in the morning.
I'm always an early riser. I was up that early anyway.
last night, went to bed as soon as Bears game ended. I hit snooze 3 times today.
You did?
Yes, I hit snooze 3 times every day.
I love early mornings. I always have.
So Liz's alarm rings and she jumps out of bed, starts dancing in the room. No, I hit snooze a million times. And even the dogs are like, I hope we're not getting up right now.
Really?
Yeah.
Oh, that's pretty funny. Yeah, that's why you don't make sense, I don't make sense, but together we make sense. All right, let's see if there's anything else we want to do. We only have a couple more minutes left in this show.
Okay, I kind of think it was our Marvel. I think it was, remember when I said, what is that trade where we talked about waiting, and I think it was Marvel where...
It's just a calendar. Oh, no, it's not a calendar.
No, you see, we have that 65 out in October, and then we have that short 72. And I want to say we looked at like rolling that or moving that.
That's the weirdest thing I've ever seen. Is that a poor man's covered call?
Yeah, it's like a diagonal. It's a diagonal where we bought the at the money. It was the 65, and we sold the 72 call in the 10-day. So there's... let me take a look. But I guess there's still 50 cents in 10 days. If we moved it out the same week, just 1 week, taking 37 cents to move it out a week.
I mean, it's not bad. What did we pay for the whole package?
$367. That's not bad. Or do we just leave it? I think I said the best case scenario is it goes to 72 in 10 days, and then we roll it out.
Marvell's taking a crack at it, 88 cents at a time. It's up.
It's getting a little lift. Look at that little lift Marvell's getting.
Yeah.
Oh, I don't have that big of a Marvell position. Do you?
Yeah, I do. I always have.
Mine's not that big.
Mine's bigger than it should be. It's not the biggest position in my account, but it's bigger than it should be.
I went from having some shares and some short puts to...
Just shares? After you got put the stock?
Well, now a lot of my positions where I had shares and short puts, now I'll have like shares and then the downside ratio spread for even.
Oh yeah, that downside ratio spread is protective.
That is nice. I'm starting to use that a lot more against shares put on the downside ratio spread.
Can you do me a favor? Can you take a look at NG? I want to make sure we're in that account.
NG?
Yeah, it's up at the top. I just want to go through something with you. So, NG, not NQ. Here, we have 220% open. I just want to walk through something. We have the butterfly on. We butterflied it off, right?
Yes. Yes.
So we have a free shot.
Yes.
But the free shot will only be 50 cents.
No, it's 10 cents wide. 275, 265.
But our collection, because this is all going to be out of the money, will only be 50 cents. So we have free 50 cents unless it goes in the middle of that butterfly.
Right.
If we're up 230% right now.
So it says it's worth 0.07 cents. So if we took in a 5-cent credit to put it on, and if we could take in a 6-cent credit to take it off.
That's what I'm saying, because, and I'm not advocating closing it. I just wanted to talk through the scenario, because that percentage open gets really wonky with this. We have locked in a 50-cent profit.
That's this 0.005 is our 50-cent profit.
Yes.
And then, so we locked in $50 to put this on.
Yes.
Now we can take it off for 0.006. That's $60. So if we put it on and took in a $50 credit, and we could take it off for a $60 credit, there's the 110.
There's the 110. That's what I'm saying.
So it's saying 210% of
50 of 0.005.
50 cents.
Yes.
Yeah.
But I just wanted to clarify that. So there's two things you can do here. And this is sometimes when people leave profits on the table. Like, we have a free shot of making a lot more than
$1,000.
Yes. You have a free shot at $1,000. Or you can take it off for
110. If we leave it and it expires and it's worthless, we'll only make $50 on it instead of 110. In 16 days. So 16 days, 265 is our level. So way down here, maybe we just take the extra $60.
So it's interesting. Natural gas, I have a tendency to, you should see my natural gas positions, especially when it's down like this. My natural gas positions are this big. And it's ratio spread, butterfly, ratio spread, butterfly, ratio spread, butterfly. And I leave them, but when you look at it with the percentage like that, you're just like, is this stupid to leave them when you can take it off for 200% of it?
We need it to end up at 265 in 16 days, or we make $50, but right now we can make 110. Maybe we just take the 110.
1,000.
I want the 1,000. I would like the 1,000 too.
What? Like, open it up. Let's see the 265. I want to see the delta on 265. So you got a 20% chance of it getting down there. 20% chance of it getting down there at some point during the expiration cycle. That's not a lot. You see what I'm saying about the 210%?
I know.
Well, I mean, honestly, this is a high-class problem because you can just leave it.
Look at this broken wing one. Where we're taking in $100. We're taking in $100. If it goes to, let's think about this. We're taking $100. If it stays above it, we keep this $100.
Go to the curve view. It'll put them in together. Yeah, and then you gotta scroll.
Analysis. Let's see if they're all there.
They're all there. So here, can you pull your, put your mouse over 3, just the 3. The mouse over the 3. No.
Wait.
$3.
Where?
Other way, $3. Take the price up. I want to see what that says. Okay, so here, anywhere up to the top side, you'll get $150.
That's the $100. I
just wanted to show where you're getting
it. It's $100 we're taking in for this.
Anywhere to the upside, you're getting $150. Okay.
That's the $100 we're taking in here plus the $50 for the other trade.
Yeah.
Okay, and if it goes down, we have this.
Wait, give me the peak there.
The peak here is 2.9, $650. Okay.
Okay.
Then we have this little dip area, between 270 and 284, where we would lose $350.
As Tony from Mexico likes to call it, the Valley of Death.
Valley of Death. The Valley of Death, $350. And then it would pick back up here, and here's where it'd be $650.
I can guarantee you it would land at 2.7.
At expiration in 16 days, we'll be like, oh, you're never going to believe it, but
277.
Natural gas is right in between here.
It's the Valley of Death. It's just, I don't want to close it. I just wanted to talk through it because it is profitable. I do like putting them on top of each other. It's hard to have the broken wing on top of it. If it's a ratio spread, it goes right into it. Do you know what I mean?
I want to see something. I want to see if I could get our Valley of Death less. Now here it's 300 instead of 350. Wider though.
Yeah, it's much wider.
Wider and a little less.
Yeah, no, we can't do that. This is very quiet airtime.
Okay, look at this. Look at this. Look at this.
What'd you do? You're not taking anything. You're paying for it.
1 cent.
Do it.
Okay, so now here at expiration, if it's above everything, we only make $60. But what we currently have is if it's above everything, we only make $50.
Correct.
Then we go into this peak area where we can make 1,000 at 2.85.
Ooh, like it?
Then
no Valley of Death.
We have no Valley of Death.
$40 there. Fine. I'm willing to give that up.
No, we make $40
That's
instead of 50.
It's 40 instead of 50. I'm willing to give that up.
Then we have this peak here where we can make 540. So it changes that 1,000 to 540. Okay?
Yeah.
But so we got the 1,000 up here at the 285.
Press that button, Jenny Andrews.
And then our risk down here, then we have 460 in risk, which we had no risk. But our 460 in risk is below this 260 level.
Let me see your strikes on the table page.
I thought I could do it.
Let me see the table page.
Dun, dun, dun.
I just want to see the table page. I want to see what you've crossed over.
So I made this wider. So we have the 295, 285. That's $10 wide, and then we go 295,
yes,
285.
Because in mine I have
75.
to put if you leapfrog those butterflies on top of each other.
And then so 295, 285 instead of 275 broke one wing, but giving up a little bit of our credit, paying the 1 cent debit here.
And then these we can just sit back and enjoy the ride because they're like SBIs.
Right?
You don't have to, like I would never do this in something that I had to close.
No, we don't have to close it. It's all in cash settle.
Hit it.
And I'm paying 10 cents. See, $10 debit. I'm paying $10 debit.
Yeah, I don't know what you're waiting for.
With the fees. But whatever. This has got too much profit potential to worry about the fees. Work it. I hope it gets filled.
I know. As soon as that, we're going to leave that 1
cent debit. I don't know. I'm going to put that on every day until we get filled.
It's a tight market.
Is it worth paying $20?
Just leave it. Hold for 1 second. We'll see, because we are out of time.
Do you know how happy I'm going to be if that's our P&L in natural gas?
You should see my P&Ls in natural gas. They always look like that.
All right.
They look like that
I
until
know
they
we're
don't.
going to a photo shoot.
First, we have a meeting.
I apologize right now for forgetting to put deodorant on today.
First, we have a meeting. I brought deodorant. I was like, arms up, and I sprayed her down.
Everybody have a wonderful day. We will see you all tomorrow.
Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
All right, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, definitely not the Chicago Bears, but whatever else. Come hang with us for the next hour of the day, my favorite hour of the day. Spend it with my buddies, Mike and Thomas. Thomas, good morning, sir. How are you?
Good morning. I'm doing good. You know, it was a good weekend after, we're getting through the week now after the short week last week, but it feels like we're going. So, got some nice weather here in Chicago.
Fall is here.
Yeah.
It's nice.
I've got the rubber legs going on today because I went and did a hike out at the Indiana Dunes with my son.
Oh, nice.
Did a nice 4 mile, but it was mostly sand. So it's doing it. Then I came home, I felt fine. I haven't done a hike in a while like that. And so I'm like, I'll do my kettlebell workout. So I did legs. I'm like, I already got the legs warmed up. Did it the next day. I was feeling it. Today I'm still feeling it. So walking funny.
Being sore, this soreness is a good feeling, unless you're too sore, then you're
Yeah. And unless it's perpetual and it's your lower back and you feel like
here we go,
blowing your brains out of it.
Here we go.
It's like, what the hell? I didn't know I got so old so fast.
It sneaks up on you.
Yeah.
Time flies.
The expiration or the
warranty.
My warranty has expired, as my chiropractor would say.
Cartilage is wearing thin on us.
Really sad. I hear John laughing at me out there.
I can hear him too.
Yeah.
I love it. It's
I
my
am.
favorite things.
Yeah, thanks, John.
I mean, we're still youngins compared to some generations. They're probably sounds like we're complaining, but
just a little.
Oh,
Yeah,
come
just a
on,
little
John. It's okay.
Did John win his fantasy matchup? Is that why he's so cheerful?
Ooh, maybe. That's because I'm not in the league anymore.
I won big.
Ooh, nice.
Ooh, there we go.
Yeah, I won all of them except for.
Very nice. Very nice.
Yeah, the Bears. I have some deep concerns about Caleb Williams' passing ability after last night.
There's a lot of concerns. We're just gonna ignore it.
Yeah.
And just
hope for the best.
Hope for the best. Yeah. We'll just say it was jitters. It was just first game under new system. But yeah,
But next week,
got to put the clown makeup back on and go to work. Be like,
DeAndre Swift revenge game, 2 touchdowns.
oh, we got the Lions next. Is that a primetime game too?
I think it's 3 o'clock. I think it's noon.
I know we have like an absurd amount of primetime games, which is also just not good.
Scary.
Yeah.
UNH up 6%.
That was a big move.
Love to see it.
Yeah.
For those that have been buying the dip, hodling.
Yes.
Feels nice, but yeah, big move there. Rest of the market doing nothing. The
Chop fest.
0-day Iron Condor thesis is working.
Did you put another one on this morning?
Yeah.
Did you take it off already?
No, not yet.
Probably
I put it on
can.
too late. I put it on at like 9 a.m. But it's still up 60 cents. We're pretty close. We're like 30 cents off of my GTC order for 90 cents. But
You do it 5 points wide? $5 wide?
5 points wide, yeah. $1.80, $1.90, just nice and simple.
Mm-hmm.
Nice and small. And yeah, I got Vecchio in last night. I guess I was on overtime, and I was like, this is what you do. And he did it this morning.
Cool.
So he's out.
Awesome.
He got like 75% profit. So
Good for him. Good for him. That'll help fund his new deck and railing and repairs on his
stuff.
I feel like he has every single week. He has like a new tree. Like,
Well, it's funny. I was in Minocqua over Labor Day weekend, and I learned that they do the same thing. They have a person come out and cut down like 10 trees a year, because if one of those trees topples onto your house, you got problems.
Yeah.
Yeah. So you might as well pay the fee of getting the trees out.
Yeah.
Versus risking it.
Yeah. But he was saying this morning that there's some gray area in whose tree is who.
It's tree law.
It's like on the landline.
That's what we have. My dad was saying, like, it's just, you have your property line, and anything that goes over is yours, and you chop that part off. Chris was saying that it's not that easy.
I think state to state.
Yeah.
I know there's like a big Reddit sub, tree law, where it's, very nuanced and spirited debates, but
Tree law Reddit.
Yeah, the 2,000 person Reddit thread that they have for tree laws. That's
it's like bird law.
Yeah.
Birds are spies, so there's nothing else to know about.
No, they're robots. They're robot. Birds are fake.
Birds are fake spies. They're robot spies.
Yeah.
The perfect vector for.
Really?
They really are. When's the last time you caught a bird?
It's true. I don't really try all that often. I mean, they're rats with wings, so I try not to touch them.
They're just little bubbles of air filled with computer stuff on the inside. Yeah.
What a rabbit hole. What a rabbit hole.
They do have T-shirts. Birds are spies T-shirts. They do have them. I've seen them before.
Yep.
Bumper stickers, all that. You can deck it out.
But yeah. What else is moving here? I haven't done anything in this portfolio except for the 0-day Iron Condor today.
Nothing much is moving. The E-minis are down 3 right now. They've been chopping up around a 5-point range. 6,500 has kind of been our magnet today. In terms of the overnight session, we've had about a 34-ish point intraday range. So very much in line with yesterday, not seeing all that much movement. You did get a little bit of a bid in volatility this morning. Volatility up 10 ticks right now. It got up to 1676. So it was up like 30, 40 ticks at one point, but it has since come in with the chop fest that we've seen today. NASDAQ up 2. You got the Dow up 31 and the Russell bucking the trend here down 19. That's actually a really big move in the Russell, considering everything is basically unchanged here. In terms of single name stocks, I know Mike mentioned UNH, that's helping the Dow today, as well as the E-minis as well. That's a big move to the upside. The big tech stocks haven't really been going anywhere. I think Amazon's been basically unchanged all day. Apple is down $1 or $2. Meta has been chopping around. Netflix has kind of had a nice little bounce here. You got some of the smaller stocks like Palantir is up $5 and change, but it's been a very choppy couple sessions here to start the week. Oil catching a little bit of a bid. It was actually up about $1 and change earlier this morning. 63.67 was the high of the session. Some things happening in the Middle East. Maybe that's why we got the little bit of a bounce. That was a shock. Purple flash. Bonds down 14 ticks. Big move in bonds, but they've had just an astronomical move over the last week or so. They're up about 2.5, 3 full points in just the span of a week here. So this is just a minor pullback. Maybe the reason that the Russell is kind of the weakest today is this move in the bond market. Gold up $9. We're at 36.86. We got up to 37 handle. 37.15 was the high of the session, up about 35.40-ish. So huge move in the metals. Silver giving it up a little bit, down 50 cents, but it too is just off of highs. It's been a massive move in gold and silver. Bitcoin was up earlier this morning. It's now down. Futures down 1,200, spot down 800, and Ethereum down $17 here at 4,200 and change. So choppy market is kind of how I would describe this.
Yeah, and we do still have some futures move in. Someone in the YouTube chat, Bob, pointing out live cattle down 2% today.
Oh,
that's the profit-taking move. I mean, the feeder cattle are down too. It's pretty interesting because I don't want to touch this until it gets down to its probably the 100-day moving average, somewhere around there. It's a big move. So
probably mid.
We said the air would eventually come out at one point, and when it does, it's going to be a big move because you got all those speculative longs that have built their position that we've talked about in previous weeks. Now is the time where they're taking out their positions.
Is the screw worm still a problem?
I think so. The last time I checked, it was, but I think this is just profit taking. It's had a really good run. You know, it's outpaced the S&P by a lot. So this is just a place to take profit.
Yeah. Makes sense. That is a big move.
Yeah, it looks like there's still screw worm stuff on the internet, so
still happening.
Still happening.
Yeah, some of the other bigger movers like the currencies. You got the euro down a little bit today. The dollar itself has just been super weak across the board here for 2 or 3 weeks. So some big moves in the currencies. I think I had a euro short that I might be able to take off here.
Yeah.
$15. Yeah, I might hold it a little bit. I still have the call spread on from the Iron Condor that we put on like a week or two ago.
Yeah, the short euro dollar trade is what we're in. But yeah, it reversed its whole move from yesterday. Still on the upper end of that range though, so I think I'm gonna hold mine too. And then the long dollar yen trade coming in today a little bit, but bouncing off of the lows, right in the middle of that channel. So we'll see what Glenn says tomorrow. How about
Yes, we'll have Glenn from Tasty FX on tomorrow to put us in a couple more positions.
I've got the Cherry Picks newsletter pinned in the YouTube chat. If you want to join us on YouTube, we're streaming live there. Just go to Tasty Live. You'll see this video streaming live, and you can throw in your trade ideas and questions along the right-hand side chat that we will get to shortly. But first, let's talk about some futures stuff. We can pop over to the slides and knock that out real quick and get back to your questions and trade ideas. September poses risk to a rally. Ooh.
Yeah, so I mean, I was going to talk about this last week, but we weren't on air for the start of September. I think it's still applicable, even though, we still have a few weeks left in this trading month. It's particularly important right now because we're going into the contract roll, and I believe it's Monday from the U to the Z. So starting, maybe tomorrow, you're going to start seeing that roll activity impact the indices, and that's when you could get some heightened volatility. And this roll comes at a time when we're getting PPI data tomorrow. We're getting CPI data Thursday. So when you sometimes see this higher volatility on these rolls, especially with PPI and CPI right now, with the backdrop of it affecting these Fed rate cut bets, I think that could be a potential trigger for some more volatility to come in, maybe some downside action in prices. So I think it's really good to be cautious throughout the next few days at least until the end of this week with this data coming out.
And that roll is triple witching. So next week you have all the expirations of the futures, equity, and indice options all expiring on the Friday. Quarterly expirations, so big, usually a big one of the bigger there.
Yeah, and so, the roll is contango now. We're priced about, I think, 55 something higher in the next contract around there.
Yeah, about 54. That price is in the dividend too. So, that's part of it too. And some of the carry, but that can change with rates. Like that's another thing that's coming up next week too. So that's Wednesday of next week, I believe.
I think so, yeah.
The FOMC meeting. Yeah.
17th Wednesday, 1 o'clock Central.
1 o'clock.
So that's another
Chicago time.
So there's a lot of events next week.
Yeah.
That's kind of
and
no vol. We have no vol.
No vol. You got PPI tomorrow, CPI Thursday, retail sales Tuesday, Fed decision Wednesday, jobs Thursday. That's it.
And then you got expiration.
Okay.
Yeah.
So we got some stuff.
Yeah, certainly.
We got some stuff. But yeah, let's check it out.
Yeah, so the PPI tomorrow, we're expecting, I think, 3.4% year over year. That's 3.3% last month, so a little increase. I think if we hit 3.5, 3.6, that's going to send some warnings to the market. Definitely might start off whatever selling we've been seeing over the past few years. So this chart is seasonality. I just did it since 2020, so capturing, the recent market dynamic that we're in. But if you look back 20, 25 years, September is also a down month. But just looking back the past 4 years, we look at that September, it's 3.61%. So that's the biggest downside move by far. It eclipses April, which is the only other seasonal down month that we've had since 2020, which is 1.4%. But 3.6%, it's a big number. So for this month in ES to date, we are up 0.44%. So we're counter trending this seasonality so far. But that brings it even more into the spotlight that,
The
things
bigger
can go
move is-
south. It's not necessarily saying, this isn't saying it's going to go down. This is just looking at history.
Past performance not indicative of future returns.
Right. So
Favorite phrase.
it's something that warrants caution, and
Yeah.
especially like we talked about these event risk we're going into starting tomorrow all the way up into the Fed meeting. This is going to be big, and now there's people calling for a 50 BPS rate cut, which, if you do that, it's typically not a sign of confidence from the Fed that they've not fallen far behind the curve. So I think there's a pretty good argument right now to say the Fed has fallen behind a little bit. And you can especially see that when you look at the moves in bonds that we've seen over the past 2 weeks. I mean, they've just ripped. Anyone who's been long ZNZB, you've done very well.
Yes.
At the same time, I think that's a lot of what's holding this equity market up right now is we're in an environment where these rate cuts are finally coming. The one thing where you have to be wary of too is it could be a sell the news event. All right, the market's been expecting these rate cuts for a while. We've rallied up on the expectations. Now you actually get it. Is it going to be a sell the news event and people are going to start saying, all right, the party's over. Rate cuts have started, especially if it's a 50 basis point cut.
Yeah.
So
I've seen, and Tom kind of mentioned it too, the argument of like, just doing the 50 basis point cut just to like be done. Instead of just play the charade for the next, couple months, just do 50 and just be done and call it a day. You think it would be taken as more of like
I think it would be taken as the Fed seeing the equity or the labor market deteriorating faster than they expected, and now having to price this in to their policy.
Okay.
So we had the annual revisions data for the BLS, the NFP reports. It's like -9.11 something. It was expected to be a downward revision.
Yeah.
And they do that off like tax data and stuff. It's not the final one. I think the final one comes in February or something. But this is, it did support rate cut bets. It pushed up those odds for even, that 50 BPS cut.
That's actually come in a little bit today. So looking at the CME Watch tool has it at 8% versus 10% yesterday, which is.
So outside chance, I don't think we'll get that. So it's, does this inflation data come in hotter and kind of suppress that 50 even more? Because if inflation's going up, labor market's going down, then you're in a tough spot of which side of the equation.
You can't do too much because
Right.
you gotta, you gotta kind of stick to the line.
You do a 50, it injects, some more confidence in the market. More people are getting jobs, spending more.
Yeah.
People are more confident in the labor market. They say, I'm more secure that I don't think I'll be laid off. That way we're going to make this big ticket purchase that we've been holding off on. Home buyers could say, all right, let's jump into the market. And actually, we've been waiting for 2, 3, 4 years in some cases. Let's jump in, buy that home, and then, do stuff like that. The good thing is, if you want to be a dip buyer in September and you do get this pullback, say you get a 2, 3, or even 1% pullback, you could look at seasonality October and November very strong. You're going into the end of the year, you get this rate cut, you think, all right, the labor market's going to recover, corporate profits are going to continue to expand with, earnings season starting again in a couple weeks. It could be
easy money,
Yeah, it could be a good dip buying. And, let's go to the next slide. This is the percent of the moves aggregated by if they're over 2% up or down, going back to 2020. So if we look at September, the down moves over 2% are actually the highest also of any month. Up moves, which is the bottom bar, green, it's on the lower end, but it's still not the lowest. So you still get these big up moves, but you get these bigger down moves. And if we go to the next slide, we'll see how that affects the VIX seasonally. In September, we go from August where the VIX is trading 17-ish. You go to September, it's trading above 20. And then volatility continues to expand in October before dropping off into November, where you get that really big seasonal up move. So that makes sense how volatility works. So if you're trying to be a dip buyer and you're waiting for this pullback this month, maybe you're waiting for it to happen on CPI, maybe you're waiting to happen on the Fed, you get better volatility. So if you're doing things like selling premium or something, you could get a level that comes down in the S&P. You could sell something like a put spread. You get that, extra volatility. And then you're expecting prices to increase October, November, and then get that volatility decrease also. So if you're doing something like 45 to 60 days out, that strategy kind of aligns with the movements of what you're seeing in pricing and volatility.
It's cool to see the VIX from going from August through October. It continues to increase despite October being that really, it kind of the most bullish part. If we can flip back to the first slide just to talk through this quickly, because it's that the range from September through November,
right,
that is volatility. Like that's, you're seeing it in both directions.
Right.
And that's why that vol, the VIX tends to stay elevated despite it being, net upside. And that's because that range, if you take any other, 2, 3, 4 month period, it's relatively tight. And that's, what is typical for volatility. Here, you have that big wide range where you go from, down to a big move higher. That's volatility.
Yeah.
So it's interesting to see in practice.
Yeah, and what we're talking about with a potential pullback, I think, is even more interesting with the big bid in gold.
Yeah.
Because this gold move has been insane, and it feels like it's coming from a place of, we don't know how the market's going to react with this rate cut. Let's just move things into something that we trust more, like gold.
Yeah, and I think it's really being driven by rate cut expectations and how the Fed's going to handle policy, because we have the trade stuff. It's kind of calmed down a little bit.
Yeah.
You had a pretty good earnings season, so some relief from our corporate profits continuing to expand, things like that. So, I mean, the underlying economy, it still looks good, but it's how are the rate cuts going to impact inflation? How are they going to impact the labor market? So we're getting into like an inflection point or a period of uncertainty coming in here. So say we get PPI, CPI, they're actually good. They're at or under expectations. Maybe that will, take some of the weight off of selling. But if it goes the other way, regardless, I still think we have to wait for the FOMC and see if that is a sell the news event. I think, I mean, personally, it's not quantitative based, but I put like a 50% chance on us selling off after that, and just people taking it off.
Yeah.
So that's I'm going to be trading pretty risk averse up until that event, but I still want to be watching to see if volatility expands, and then putting trades on to take advantage of that once it does happen.
Do you feel that's consensus? Because I feel like that's, like people are waiting for a dip.
Yeah.
Like I feel like that's what, we all kind of had that same thinking. Like we've had this great rally up, rate cuts are coming. We've chopped around at 6,500. It's everybody's, all the targets are getting raised. Like it feels like,
Yeah, and I mean, so look at gold, like Mikey was talking about. Look at bonds. They've been moving big. The equity market hasn't really been, doing that. So is it, equity traders, are they holding on? Should they listen to what the gold and bond market are saying? Because gold's acting like, rates are definitely going to come down. Deficits are going to go up, and, they're both moving like that, bonds and gold. So I think when that happens, you have to definitely be aware of, why are those moving so much? And the equity market has just really done very little.
Do you think there's a similar sort of downside in gold too? Just kind of the fact that it has had its move, like
I think
kind
so.
of like
I think I'm looking for a dip buy in both gold and ZB. I'm waiting for them to come down before getting back on, because I think ultimately the trend does prevail higher.
Yeah.
And I think if you've been getting in the past couple months, you've been positioning yourself pretty well for, what's happening in the future. Like I said, rates coming down, deficits going up. I mean, I think it makes sense to be long those. I think at these levels, you just be strategic, wait for those pullbacks, whether it's a pullback to, a round number you like, whether it's a pullback to an EMA, an SMA, whatever it is. I think you got to give yourself a little better of a position here.
Yeah, we even mentioned the other day, like, this move in gold over the last 2-3 weeks from 34 to 37, about a 10% move. I mean, that's pretty much what the implied volatility expects over a year time frame. I mean, this is your, that's your move.
This is the Valhalla move.
Yeah. You got most of it. It's hard to play it for more, at least in the short term.
Yeah.
Yeah. And I mean, all these, this, when a big move happens like this in gold, it really affects like the supply, the demand, because ETFs that, they have to store a certain percent of the physical gold to underwrite their product. You need to take all that gold in. So, I mean, all these retail investors in your IRAs, your Roths, things like that, you're buying these gold ETFs. That increases the physical demand. It's not just simply a financial price going higher that tracks a product.
Yeah. The futures are, though. The futures are paper.
Right.
So.
Interesting moves.
You bet.
For sure.
What about in silver, too? You think that, that's another, rate cut sensitive product there. You look at the Russell kind of being weak today is kind of an odd situation. Does that say anything to you, or is that just rotation?
I mean, like silver, you're seeing kind of like a bull flag pattern. I think, it's maybe at a little better of a consolidation over the past few days than gold, where you're expecting more to come out of it.
Yeah.
But the Russell, I mean, technically the Russell has really improved its posture. Since August, it's resumed this uptrend. If you draw those lines and everything, it's holding above its, the SMAs and EMAs that a lot of people look at. So, generally, Russell is something that once it starts joining the rally from tech and stuff, it signals like the late stage of the bull market in a lot of cases, not always, but so it's something good if you want to get long and you think the rally is going to continue, but it's also a signal that we're in the later stages maybe, and that aligns with the Fed about to start cutting rates and stuff.
Yeah, you're going to the frothier stuff. You got the, open doors quadrupling over, a week or two. That's usually the point where like you have the kind of dispersion that we've seen in E-minis and NASDAQ type stocks and all the big name stocks where they've kind of just chopped around. They've had, big single day moves, but really haven't gone anywhere. And then, naturally you look for the stuff that has some volatility, which is the lower cap stuff, the IWMs, silver, maybe the, open doors, that sort of stuff, where you get some volatility because nothing else is really moving net. That's usually, kind of the peak froth.
Yeah. And I mean, rotation today, if you're looking at only today, I mean, it changes day to day. So it's like a hard signal to look at. You say, oh, rotation's happening today to defense. It's just portfolio rebalancing in long-term accounts a lot of the time.
Yeah.
I mean, you look at today, you got energy up, you got utilities up, you got materials down, you got, technology really flat. So it looks like a defensive rotation day. So again, that's happening ahead of expiration, ahead of the triple witching, so definitely a time to be cautious, I think. So I mean, for a trade that I'm doing here is not today, but saying that I'm waiting for some kind of pullback, and it doesn't have to be as deep as 3.6% where you see that on the seasonality chart. It could be 1%, it could be 2%, it could be to a level that you're more comfortable with defending. Say you set your price somewhere where you give yourself enough time, it dips under it, you're not going to panic, you're going to give yourself some time to come back. Let this seasonality expansion that occurs later in October and November play out.
Yeah, 3% is 200 points. Yeah. So that just brings us to like the bottom of the range we've seen in the last couple of weeks. which is not out of the realm of possibility.
Which is wild to say.
Yeah.
200 points. It's a lot.
Yeah, and I mean, just so for September, going past the past 4 years, 2024 up 2%. That's the only positive year in the past 5.
Okay.
2023 negative 4.9, 2022 negative 9.3. So big one there. That kind of maybe skews the data, takes down the average.
Sure.
2021 negative 4.8, 2020 negative 3.9. So excluding last year, it's been a pretty consistent story of September, making a downside move.
Question for H. Montero. If U.S. interest rates are moving lower, does that generally support U.S. equities, and how do tariffs factor into that dynamic? I think it's all priced in already. I think the market has moved in a way that suggests rate cuts. But now
we had that, but then you have, J. Powell taking the stand 2 weeks ago, telling us everything we already knew, and the market's up 100.
Right. And we haven't moved since then.
Yes.
I think the market pricing in a small probability of a 50 basis point cut, which would not be good for equities. I think we see a big sell-off if they actually did that. But it would be wild if we got a 25 basis point cut and then the markets just rip higher. Because it feels a lot more ominous than the last time. But vol's low.
And I mean, you got to think about it. Is the Fed right or is the market right? Only one can be right. And, the market, this move in bonds, this move in gold, it's saying, the rate cut's coming. And up until, really a month ago, this September rate cut hasn't been a sure thing. Mm-hmm. So we're really operating on a short timeline here where the market has moved into a very confident state where it's saying, yes, we are getting a September rate cut, things like that. The Fed has, been very careful saying things like data dependent. You have to take them 1 month at a time. But again, we have risk ahead of the FOMC meeting and PPI and CPI, so this could change. I mean, you get a hot CPI print, it could bring down these rate cut bets to where the market is now. If the market has to go, wait, now it's rethinking a September cut, then you're going to see a lot of this move come out.
Yeah.
I mean, so I think that's the risk right now is the market has moved into a slightly overconfident state versus the Fed.
That would be you think you'd see bonds back to where they were? I mean, if that happened?
I don't think not to where they were, because ultimately these cuts looks like they do have to happen.
Yeah.
With the way the labor market. So if the Fed's tackling one thing, if the labor market's falling apart, but inflation's moving higher, I think they're going to go with the labor market to avoid, you get that recession, you get a lot of people without jobs. It's just, it would add a lot more political pressure than they already have on top of them, because people are going to be looking to someone to blame. The Fed's an easy entity to say, hey, you're effing up the economy.
Yeah.
So let's say the numbers tomorrow and Thursday come in hot. Do you see TLT selling off a little bit?
Yeah.
Maybe that's the trade. Maybe the trade is a put zebra and TLT.
I don't know. You'd think the equities would be the bigger move, I would expect.
I mean, I think it has to be. I think if it's just a little bit over expectations, like 0.1%, I think you're seeing like maybe a little sell-off to begin with, and then people coming back into the market, buying the dip. I think if it's, 0.2, 0.3, 0.4 over, then it's like a red light is going off.
Yeah.
People are really, volatility would increase.
Yeah.
Not sure what the market would ultimately take from that, but it would create uncertainty that would create price fluctuations.
Does the no vol movement today kind of tell you anything?
I mean, it's kind of weird, right? I mean,
you would think if there was, because we're talking, it seems there's a lot of ifs. There's a lot of things that could move this, and you got nothing really happening.
So a good question to ask is, why is volatility, doing what it's doing? Why is it doing that when the bond market's made this big move, gold's made this big move, equities have stayed the same? There's definitely, there's unaccounted variables that we're not seeing.
Yeah.
That the market is being priced into, so.
Or complacency. I mean, you've been chopping around highs like, nothing's really moving. It's
Yeah,
kind
and
of
really we've been on this fueled bull market, besides for a couple of corrections for quite a while. So all this exuberance, at some point, for a healthy long-term market, it needs to come out.
it can't go up every single day. That's probably not good.
Yeah.
Maybe this is it. Maybe this is the lever we needed.
I mean, if you're thinking like, when would it be? Now is maybe a better time than any.
Yeah.
I'm not saying it's going to happen, but this time is probably, the point where you would expect it the most.
I just got filled on my SPX 0-day Iron Condor, 50% profit.
There you go. That it helps when the market literally doesn't move for 2 hours. That's as good as it gets.
It's quite nice. Literally a point.
Yeah.
1 point range. But this is what we talked about.
Yeah.
Just chop until we get the decision. I think that's what's going to happen.
On
Or we get a big move tomorrow if the numbers come in hot. That could be interesting.
The 1 minute chart, it looks like it's a wider range than it is, but this is just 20 points.
Yeah, it's nothing.
Which is nothing, when you look at this.
Nada.
Nice job.
Lovely. That was the last slide, I believe?
Yes.
Yeah, that was all of it.
All right, I'm gonna do this put zebra and TLT.
So you're playing for
Just a small little
a contrarian tail event.
Yeah.
Hot CPI and PPI
I like it.
or both.
Just a small little. What's a point?
Yeah.
Between friends.
Yeah.
Small little. I mean,
It's a $300 trade. If you're in October, you could even go. You can go to September and make a super cheap one. Maybe that's what I'll do.
All right, I like it.
Yeah, $1.75 in risk for a put zebra at 90.89 with 20 cents of extrinsic.
What could
85
go
short
wrong?
deltas. Well, what could go wrong is I lose $175. But I kind of like I'm playing for this move to happen tomorrow or Thursday.
Okay.
So I think going to September makes sense. You could even go to the weekly, but September 10 days gives you a little bit more time.
And are you guys accounting for this triple witching at all? Do you guys, on those triple and quads, do you do anything different?
You typically do see more volume, so that's and if you have volatility, that can go hand in hand.
Right.
I don't know if there's anything like trade wise that I'm going to do differently, but I think to your point at the beginning, there's a lot of things happening, and so there could be wider ranges. I would expect wider ranges, but the last 2 days and volatility itself have kind of contradicted that.
Cool. I was just filled at $1.77 in September. Bought 2 of the 90s, sold 1 of the 89s. Basically removed all extrinsic. 10-day expiration, so literally just playing for tomorrow or Thursday. Move to the downside, TLT.
Beautiful.
If it's a $100 winner, take it off.
Very good.
Yeah. I'm going to post that to the follow page right now.
Cool.
And we can get to the YouTube questions here. All right, let's see.
We got a mixed bag which is good. That's a market. Some of the people are like, no way, it's going higher. I agree.
Yep.
We're going lower. I like that.
I mean, you have to express a view, and your view is going to win out sometimes. Sometimes it's not.
Sometimes both win.
Yeah.
A little bit.
Little sell off, a little rally. ETH Butterfly followed from here. It looks like the shorts are worth 6 cents, maybe worth closing in the off chance of a rally. Did you put this on?
I have a upside crab trade. I think you put the butterfly on.
Yeah. I had the 30, 40, 50 call. Yeah, I have the 30, 40, 50 butterfly in the
Take that.
10-day, and I have the, sorry, I have the 35, 40, 45 in the 10-day, and I've got the 40, 50, 30 in the October, November crab cycle.
So you got a cheapie.
Yeah, so the 40s in September are worth 6 cents each. So yeah, if you wanted to just buy them back, you could. Doesn't
Yeah.
hurt you. Sure, I'll buy them back.
Yeah, why not?
Increases my risk by 12 cents, but if there's a big ripper, it will. I just have the 2 longs on.
Are you guys doing anything on Apple for the event day or whatever it's called for them?
Is that today?
I think it's today. I think it's at I think it's in like 15 minutes or something.
Ooh, Apple down $2. It's had a huge rally. I mean, we've gone from 200, 235 here.
It usually sells off on on these days, right? Because it's like the expectations for some cutting edge product are high,
Yeah.
and then you don't get it. You get like software update, and
Or a slight change to the camera.
right.
Or a change to the charging port, going back to the other one.
No, they can't go back. I think they,
Oh, they
that
can.
was.
And
No,
they will.
they're not going back.
Please don't go
They
back.
will
They
go back.
can't.
We have so many different cables in our house.
Yeah.
They got sued. Wasn't that like a lawsuit? That was a
I think
whole,
in
like,
Europe, yeah, they all have to be
EU.
the same
Yeah.
charging
You
standard.
can't have your own enforced monopoly on your charger.
Yeah. Smart though. I mean.
I just bought back those 2 shorts for 7 cents each. So now we need a ETH ripper in the next 10 days.
All right, if we're gonna get this in the next 15 minutes, should we do a 1 day? A cheapy butterfly of some sort?
I like it.
Maybe like a broken wing butterfly for 2 cents into the end of the week. Break even at 230. Yeah, we'll play that. We'll play for a small down move.
Perfect. Brett looking at Costco. 29 IV rank, lower IV on option strikes. Maybe a good place for an IV Iron Condor. So they have earnings on the 25th. So I'm going to wait till earnings. But I don't mind the idea of an Iron Condor in October for earnings. Like a 900, 1050, something like that.
I've
10
got
points
one
wide,
on
5 points
September,
wide.
so I'm with you.
There you go. But yeah, I'm gonna wait till earnings. If you're replacing an Iron Condor now with earnings looming, it's not gonna move that much until earnings are done. Unless you get a huge move against you, then it will move against you. So I wait for earnings. What are we doing in ZB? Did we do anything in ZB? I did not.
At ZB, I'm waiting to get long on a pullback. So
And volatility relatively low. The IV rank at 12. It's kind of a surprise considering the move that we've had.
Yeah.
Like it's almost like
I mean, that's not too terrible for a bond's future, but it's you'd expected maybe the high teens, low 20s to be,
into what has been probably I don't know, that's got to be over a standard deviation.
Oh yeah,
2,
I
3
would
standard
think, yeah.
deviation move.
Yeah. Crazy move. But yeah, I'm short TLT. That's as close as we're gonna get to the fire. Super small though. Spot. 690, 720 strangle for October. 690, 720 with a $5,400 net credit. Stock close to the call strike. Curious at what point do you consider adjusting?
$59.
$54 net credit.
Yeah, I would probably close this and just start fresh. You're at a scratch. Buy the guts, sell the wings.
Yeah. Yeah, if you buy this back for $5,500, which is basically a scratch.
Yeah.
You can adjust delta however you want, really.
Yeah, 640,
There's a lot of call speed
800.
here. Yep. Yeah, 650, 800, 640, 800, 660. You're rerouting that for a scratch. So you're basically shifting your straddle-like position into more like a strangle in November. But yeah.
You probably needed this move too.
Oh yeah.
Because I mean, into the move lower, you're probably rolling down these calls. Now you're right, in the middle of your strikes.
But yeah, it's a decent position.
Yeah.
And your resulting delta for whatever you decide is just how you want to lean. And there's no wrong answer. Nothing wrong with leaning bearish or bullish here. You just got to be comfortable with it and move on. But yeah, I think you're close to making that decision, especially with your narrow range being out of the money right now. You can make the biggest adjustment if you're moving those strikes out of the money because you're only dealing with extrinsic value right now. If there was a big rally or big sell-off, it becomes a lot harder to make the adjustment we're talking about.
Talk me out of an iron fly at 6,500 in SPX.
For today?
Today.
I can't talk you out of it because I think it's going to be great.
It's really not going to move all that much, but do I gamble $300 into the next 3 hours?
7-point move up or down that you can absorb.
Yeah.
What's the worst that could happen?
I lose $300.
Yeah.
I think we're going to play for it.
I think you have to do the 0 day. I don't like doing the 1 day into the CPI.
No.
I think that's a tough one. But tomorrow morning, if there's whatever the move is, I think tomorrow morning's 1 day iron condor or iron fly could work, or the 0 day, I should say. But if there's a huge move in either direction, I probably will not do it tomorrow. Uh-oh.
I'm in. I'm in. $7. This is a sub 50-50 shot. Because the expected move is 9 points.
Mm-hmm.
Which is silly.
It's disgusting.
Small.
And it makes sense that the move is so small today ahead of, what we're...
All this stuff that's coming up.
Yeah.
Just the pending non-move. It's just...
Yeah. We're going to let that. I'm not trading that. It's not going to move at all, probably for the next
Are you going to throw in a
2
little
hours.
GTC?
I don't think so. What would you do it at? $100?
$200? Because you're going to have to hold it till the end of the day anyways.
Yeah. I'll do it for $100.
All right.
So I got 705 credit. I'll do it at $6.
There you go. Is there ever a good time to go narrow on the downside wing of an out of the money put butterfly? So just like removing downside risk or having an asymmetric butterfly?
Maybe moving the risk portion.
Yeah. Like if you get a
Closer.
rally, bringing the risk up, or if
Yeah.
you get a sell-off, bringing the risk down. Yeah, you can do that for small adjustments. Especially if there's a big move and now your out of the money option's worthless and you can move it up for a couple pennies. Yeah, totally makes sense. It's all just risk management, risk adjustment. That's all it is. Let's see. What do we got? $5 wide put spread in ETH A, October 17th. Sure.
Yeah, I've got some upside delta there. What do they want to do? $5 wide put spread?
Yeah, they did a $5 wide put spread. So probably 30.25 or 32.27. Either way, somewhat of a chicken spread where you're collecting about half the width.
Mm-hmm.
Yeah, I like
could
it.
do that. Double my long delta here.
Why would a 50 basis point cut be bad for equities? Generally speaking, if you look at the history of 50 basis point cuts, it's
We're going
not
to do
great.
that for cherry picks
There you
next
go.
week. We're going to look at rate of the moves, day of, 1 week, and 30 days after the most recent rate cuts and hikes.
Yeah.
Just to give a little context of like.
Yeah. So usually 25 basis point cut is what you'll get because they want to make the smallest adjustments that they can and then see what happens after they make the adjustment, see what happens. If you're doing a 50 basis point cut, which is twice what you would normally see, that signals that they're making a catch-up cut.
Yeah.
Which signals that they read the situation wrong or the situation is moving too fast too soon, and they're making a cut to try and offset it. But either way, I don't see how a 50 basis point cut would send the market rallying. I think that would take a lot of people out of the market that's at all-time highs with the fear of things getting out of control.
Oh yeah, yeah, I agree.
So yeah, that's how we're looking at it, but we'll see what happens. Why aren't you doing UNH? Well, totally can't.
25.
I think it's going back to 600. So, but do you wait
aggressive.
for a pullback?
What about it? I mean, at 31 IV rank, maybe it's time to do like a little iron condor, something like that.
You could do a little like calendar spread up at the upper bound. Like the Septembers are getting juiced up today more than the Octobers from a ratio standpoint. But you could do like a 370, 360 calendar for a couple $100. If you get it continue to move higher, it'll appreciate. You'll make like $300 on that. But yeah, I think you can do a lot of different things in here, but I'm leaning bullish over being bearish. You got a little iron condor on? There you go.
I'm gonna try 250, see if we get filled here. I'm gonna let that sit at 250. 10 point wide, 390, 400, 300, 290. 10 points wide, either side.
How do you know when your position's too big? Do you look at buying power against Netlick? Yes. So 5% buying power against Netlick. That is the biggest that we would go. Keeping things small. Looking into placing 2 opposing zebras in TQQQ for September 19th.
TQQQ.
So just looking for a big move in either direction.
So I would probably just buy the straddle.
Yeah.
That's essentially what you're doing.
Yeah. Buying the straddle, $500. The double zebras are, let's see. Yeah, it depends on what you're doing.
It's just
But
going to
the
be a
double
lot more
zebra-
capital.
Yeah, the double zebras are way more than a couple $100.
Yeah.
So you might be paying a lot of extrinsic value there where you might as well just buy the straddle.
Yeah.
But yeah, certainly in play. You think there's going to be a bigger move than implied?
Yeah.
Long cattle? You're waiting?
I'm waiting. Yeah. Yeah, I think the sell-off, some profit takings here.
What about the hogs? Are the
hogs
hogs are short now?
Hogs I haven't looked at in a
Back
week
to
or
the
two.
high.
You know, they're doing pretty good. I mean, if you were trying to play live cattle or lean hogs to the upside, I'd probably do lean hogs at this point.
If I have 100 shares of UNH with a cost basis at 350, should I sell a 350 short call?
$1 question.
Um,
I think if you've been waiting,
Yeah.
this move, you just rode you got 60, 70 bucks in the last couple weeks. Probably time to consider something.
Yeah. If you're trying to exit, then sure. But you could also collar it off. You could do, in October, you could like buy the 330 put and sell the 360 call for a 95-cent credit. So you basically verticalize this trade. Lots you can do. But yeah, if you've been waiting for this move, great move for you. But yeah, if you're trying to get more out of it, I wouldn't sell the 350. I would sell something further out of the money. But if you're trying to exit, sure, the 350 in the weekly makes a lot of sense.
That it?
I think so.
Very nice.
Yeah.
Ended a minute early. I get to my little meeting.
You got these 12 o'clock meetings all the time.
They drive me nuts. If I was king, we would do all meetings via email. You send me an email,
That's the meeting.
And that's it.
There you go.
We used to do that.
Yeah.
Corporate.
All right. That's it for us. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. Thanks for the analysis. We've got the bearish TLT Zebra on. Looking for a hot number tomorrow or Thursday and hoping for a TLT sell-off. A little one, just a little baby. But yeah, we'll post those trades to the follow page. We got filled on a bunch of them during the hour. And yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like, people would say, like, going to college these days. I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what, my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We're back. It's still Tuesday, September 9th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Sir, how goes your Tuesday?
It's going well, my friend. How you doing?
Not too bad. Thinking about some things here today. Why my Mets look so pathetic last night in Philadelphia. No heart, no grit. I'm also wondering if the Fed's too late after this morning's on-farm payroll revisions. Should we spend the next hour talking Mets baseball or maybe something markets related?
Probably something markets related because I don't want to think about sports right now neither. Things didn't go well last night with the Bears.
I could have told you that days ago.
Yeah? Really? Based on what analysis, Chris?
Well, the fact that they're the Bears, just like the fact that they're my Jets.
That's right. Get rid of him right now. I got powerful friends in powerful places.
True. It's true. Most of them
this is
work
the
here.
Futures Power Hour show only featuring Jamal Chandler. No, I'm just kidding.
Another tree has fallen. Is the Fed too late? That's the question we're asking ourselves here today because we had the annual NFP revisions come out this morning and they were a doozy, 911,000 jobs. This chart comes from Neil Sashi over on Twitter with Inflation Insights LLC. Last year, we had 18,000 jobs revised lower initially for that to be pulled back to 598K. The initial reading this year is 911,000. So I do want to talk about this a little bit for what it means ultimately, because there's been some chatter around a 50 basis point rate cut next week, which I don't think is all that unreasonable. And you and I have kicked around the idea like they're either not going to do anything or they're going to go 50, somewhat tongue in cheek. But we've said numerous times that it feels a lot like last year where they're a little bit late and maybe that's what they're doing. But the BLS took the data from April 2024 through May 2025 and revised it down by 911,000 jobs. To put that in some perspective, employment gains over the 12-month stretch were essentially cut in half from about 1.8 million jobs to just 847,000. So what looked like an economy that was averaging 147,000 jobs per month during that window was only averaging closer to 70. This is the largest benchmark revision on record. So why do we care about this? Because we're seeing that some of the sectors that we thought were holding the economy up are actually not so strong. Leisure hospitality loses 176,000 jobs. Professional and businesses services down 158K. Retail off by 126K. Manufacturing off by 95,000 jobs. So what drove this? A few commentators have suggested that it's the birth-death model. According to the BLS itself, they've been pointing to survey response errors and non-response bias rates in the numbers. Granted, there's no BLS head right now. So firms that didn't reply to the monthly survey data tend to report lower employment. So there's a pretty decent discrepancy in the data for a reason. But it just shows that the labor market wasn't as strong as we previously thought. Growth was slower, momentum was weaker. And that's where we get before we even have any of the tariffs come into effect, because this data revision only runs through March 25, Jamal. And we've seen that the jobs growth in our labor market really fell off in, well, May, June, July, and August so far. It brings into question whether or not risk assets have been priced appropriately for the past year. For some context, as I get off my pedestal in a second, last August when this data was released, the S&P 500 closed up by about 0.4%. So it's not like it provoked a material downdraft. And I don't think we're seeing a material downdraft here today. But 50 basis points can't be rolled out for next week now, because that's the kind of revision that we saw last year that ultimately kicked the Fed over the edge into giving us 50 in September.
I don't know how these things come about, these revisions. I mean, I don't know why we do them. But I will say, if this is, this is currently happening, it does bring in, like you said, to question about the gains in the market. It does. What it really makes me think is that sooner or later the sentiment is going to turn negative towards this very thing, as we've talked about often, right? You and I particularly, about if the Fed is cutting, particularly if they're talking 50 basis points, it's not for a good reason. And I'm actually a little bit surprised that the media hasn't jumped all over that so far, pushing the market to the brink of starting to sell off to some degree. That's probably the biggest thing I'm worried about right now when you talk about positions. I mean, I'm still comfortable keeping the Russell on, but the NASDAQ in particular, I'm a little worried about that one. And so this is the one thing that it makes me think about when I see these revisions today, and it's showing the job market is weaker. It's not that much of a surprise. This is something that I would think these revisions would show this, considering how weak the job market has been more recently. But I think that's the biggest thing it makes me think about my longs, honestly. And do I need to move them further out, or is there going to be some selling in the medium term?
Do we need to move them out, or will there be selling? I mean, I'm reminded frequently about what happens when rate cuts occur. The context matters so much. Last year, we rounded into the idea that it was a maintenance cut because the economy was still growing north of 3%, unemployment was still heading lower, inflation was coming in. So when you're cutting rates against an aggressive backdrop, we've shared these slides before, this Excel spreadsheet before, right? Just this is how the sausage is made. The historical returns prior to this past year, the maintenance rate cuts were great for markets, average of a 13.3% a year later. So far, I marked this off this afternoon, since the September rate cuts that were maintenance ones, we're up by 15.7% in the S&P 500. Kind of in line with what's happened historically. But this begs the question, if the Fed is cutting rates right now, when inflation's going up and the labor market's actually weakening, and there are these risks to growth, is this still a maintenance cut? Or are we already talking about a recession cut? Because if it's a recession cut, forward returns for the market a month, 3 months, 6 months, 12 months later, at least since 1980, they haven't been good. Mm-hmm. And this really is the hinge upon which the entire market rally rests. As we said at the midpoint of the year, are we heading into recession, yes or no? First quarter, or going into the second quarter, right? First half of the year, the S&P 500 is down more than 8% at one point, only to finish the first half of the year positive. That's an exceedingly rare occurrence. As noted previously, it's happened like 7 times in history. The only 2 times in which the S&P didn't finish the year in positive territory were 2 years where recession resulted in the second half of those years. So the game right now is recession or bust. That's the only thing that matters for this market on the macro level, as far as I'm concerned.
Yeah, I mean, we've been talking about it every now and again for a while. It keeps creeping in, right? And there's a lot of different indicators that show that we should have had a recession sometime, whether it was we had a brief one in 2020. We probably should have considered one in 2022. Didn't happen somehow. But you're right. This could be the thing. Right? It's the jobs thing, right? That eventually could create that issue. Hopefully not, but we'll see.
Hopefully not. But the S&P 500 today, just kind of meandering around, or rather, let's just bump up the slide here first. Stocks somewhat pinned. S&P up by 0.09%, NASDAQ up by 0.2%. Yesterday on overtime, Mike Butler was selling the bona fides of a short iron condor on a 0 DTE and SPX. We put it on the show earlier today. That reached about 80% of profit. So took that off this morning, went in for a $1.30 credit, out for a 40-cent debit. Quick $90, Jamal, not bad. Thanks to Mike Butler for helping fill up the gas tank. But we're at 6513.25 right now. So the market is getting a little bit better posture here as the session's going on. And volatility is coming in, Jamal. I wouldn't call myself a scalper by any semblance of the imagination, but on this 1 hour time frame, this is kind of looking a little bit like we found a floor around 6490, 6500. And the market's wanting to turn up here in the second half of the day.
Yeah, it does seem that way. I mean, clearly we're waiting on inflation reports at this point in time, right? Which has been another piece of the story. It's been juxtaposed to the loss of jobs more recently. Is the inflation picture, right? Is still remaining. It's still a thing. I can't imagine the stock market moving higher as a result of that, but it very well could, based on what we've seen more recently, right? So I think you're right. The market is just kind of pinned right here. It's kind of sitting and waiting, and you can see it's waiting for news. We're actually kind of low on volume, right? 730K. It's been like that for the last couple of weeks, I feel. We've seen this kind of low volume, low volatility environment, and it almost seems right for rocking the boat. But I think it just really depends on sentiment, Chris. It really does, because when you look at the chart, realistically, like it could be a chart where you're looking for the market sort of pausing here before we get to higher gains. But this whole jobs picture that's hanging around, this whole inflation situation that just doesn't seem to go away, I think is kind of keeping a cap on markets right now, and they just haven't been able to get out of the 6,500 area.
You know, what's so interesting is that both in NASDAQ futures, S&P 500 futures, you're not looking at any sort of stretch positioning one way or the other. Longs in the NASDAQ the past 2 weeks have really come in. Z-scores over the past 20 years for speculative positioning within, below 1. If a Z-score is below 1, between 0 and 1, I don't care. Or 0 and -1, like, who cares? Move on. So there's no stretch positioning there right now. And it tells me it's a market that's kind of in a bit of a boring spot. The Russell is a different story, though. And obviously, it's the big loser today, down by 0.8%, 0.9% right now, rounding out for Josh. This does have a substantial short position on the market here, in excess of a -1 Z-score, about -1.4, according to my calculation. And this data goes back to 2017 in the Russell futures for what it's worth. So it's not a rolling 20 years. The point that I'm getting at, though, is that if we're looking for upside in the market, right, the Russell probably has the better potential, particularly if we can thread the needle and get to a place where the market convinces itself these rate cuts are for maintenance reasons. We've previously noted how when you get 150 basis points away from the top of the hikes, so the cut cycle is 150 basis points deep, that's when the window of small cap over large cap outperformance begins. And a 50 basis point cut from the Fed next week would put the Russell in that driver's seat, seeing as how we've already had 100 basis points of cuts since the Fed began last September. So I would feel more comfortable. I know today's an uglier day, and I know the Russell doesn't really serve as a place that provides much comfort in recent years. But the posture here, getting that 1 month moving average through the former swing highs in August, the pivot lows that we had here at the end of August and the beginning of September, this feels like the structure continues to generally improve. And it's not something that we should dismiss, where if we do get a pullback, have we seen a pullback back into the 1 month as it pulls into former highs, turns support? Yeah, that was mid-September here in the Russell. Breakout, pullback into the 1 month, former resistance turn support, breakout. Maybe we have that here. We got to pull back into our former highs, turn support, and that becomes a new point with which to express some long position. So I wouldn't put anything long here today, but give me 23.40 at some point this week, and it looks like an appealing endeavor to take a shot on the upside.
I still have call spreads in both the NASDAQ and the Russell. You just pointed out how great the Russell chart is looking. I mean, it's sitting around that 2 week moving average. Like I said, it's an interesting time because there is potential negative sentiment, right, that could turn around all of a sudden with this job situation. Oh my God, they're cutting for bad reasons because the job market is terrible. I mean, if you just listen to Chris and Jamal, you know that this sentiment is coming at some point in time. So I do still like my Russell position. I'm trying to figure out whether it's about time to move it further out. We're closing in on 52 days here. My thought process was always that I was at the end of October because it gives me the opportunity to ride the wave through the Fed meeting, through a couple of jobs reports, through a couple of inflation reports, right? Those are the things that have really been moving the market over the last several months. And I wasn't necessarily, again, this was kind of upside, so I wasn't necessarily going to succumb too much to the extrinsic value being in that 45-day window. But I mean, we're about a week away from the 45-day window, and that's when things start to change, particularly if you have a position that has a lot of extrinsic. So I might have to move this out another month to November. And maybe in doing that, I am able to survive some potential negative sentiment that I almost assuredly feel like is going to start happening soon.
Well, you can see here on the continuous contract, those highs we had in January of this year, we hit them as resistance in August, and we finally punched through. So you get your 1 month, you get your uptrend from the April and those early August swing lows coming into play there too. I'm just going to go out on a limb. 2340 is a very important line in the sand for the Russell. We have to hold above it through the middle of the month. And when does time meet that diagonal? That date says September 17th. Something happening on September 17th. Oh yeah, the Fed meeting. Funny how these charts line up, birth, price, and time sometimes.
Always.
Total coincidence, but almost a little too perfect. So file that one away for the simulation. NASDAQ here, 23,850. I don't know how anyone looks at this chart and says this is bearish, quite frankly. I see a market that's been consolidating above a former high, took a breather. Corrections can occur not just in price, but in time, because these are mathematical calculations for the indicators based on rates of change. So if a market moves sideways, it means momentum's lost. But if price isn't lost, think of it like sitting at a buffet, Jamal, and you're just digesting the meal. You haven't moved. You're just not hungry at this moment, but you're going to start eating again in the future, right? If the market loses momentum and then breaks down in price, that's you leaving the restaurant. That's you getting up from the buffet. No one got up here. So, I mean, color me shocked. Color anyone shocked. I'm going to say this looks pretty good right now to the upside. So your NASDAQ calls, as far as I'm concerned, IVR staying below 15, low volumes, positive technical drift. Inflation's going to have to really piss us off if this breakout attempt's going to fail.
Look, I like keeping it. And like I said, the only question is I need to just roll it further. It's not even a question. I actually need to roll it further out because as we sit here and I look and I just think ahead over the next, several days we got going on. Again, this is the quiet before the storm, people. When you look at the fact that we're starting inflation reports, you just mentioned the Fed meeting next week. Oh, yeah, there's also VIX expiration during that week. And there's also a quadruple witching expiration for that week. I'm pretty sure it's going to be quadruple witching because it's September. So that's a lot of volatility within a short time period. Or I shouldn't say volatility, but the potential chance for volatility in a short time period here. And it could kick off starting tomorrow, right? With PPI is first, right? Which is weird to me how they flip-flop those sometimes, PPI and CPI. But so there's a lot potentially to happen. And again, with my situation being 52 days at this point in time, a week from now it'll be 45 days. I want to roll further out just so I can withstand any potential pullback that we have.
So we have a NASDAQ that's eking up, an S&P 500 that's eking up. It's very, very small movement today, 753,000 contracts traded. The high-low range, we're talking about what, 34 points, barely 34 points. Do you play for a pin market? I mean, obviously the NASDAQ looks a little bit better. The Russell looks a bit weaker. If you're going to be directionally neutral anywhere, do you continue to play for a more pinned S&P 500 and let the other two do the bigger moves?
It depends on the time frame, I would say. I mean, I would say maybe over the next couple of days, but for the next, whatever the next time period is, I'm looking at this. If you're looking over the next 10 plus days, I don't necessarily know if it stays pinned the way it is now, but maybe for the rest of the week, I think it's possible.
Well, let's size up a potential trade here in that regard. I'm going to look at the range that was carved out on Friday. I'm going to get rid of some of these other Fibonacci things because we just don't need so much noise in the chart right now. I see a low that comes on Friday at 64.52. I see a 1 month moving average that comes in at 64.59. So 64.50 seems like a line in the sand. If we're going to do this the Butlerian way, which seemed to have worked, 64, maybe a callback to Dune, 64.75, 64.60 short put spread. I mean, that's priced at a 10-1. So maybe you got to go out and sell some upside here if you're going to go 25 points wide. The risk reward's not fantastic. So perhaps you pull it in, perhaps you go a little bit tighter. Okay. Now you're looking at a 1 to 4, 60% pop. We're not going to get the trigger, right? The trigger is Thursday. Maybe the PPI data moves the market a bit. But then again, if you trade it off of PPI and CPI expecting, hot PCE and the Fed to back off, you traded it wrong last month. So this process of continuing to look through inflation, as the Fed has indicated they seem to be doing, the market might be doing it too. Did you notice that this week we're only looking at 46 points through that CPI report?
Yeah.
That's less than the NFP reading. And that's less than Powell's speech at Jackson Hole. The market collectively has said that inflation is kind of passé.
Yeah, I noticed that. It's pretty low, honestly, when you look at it. I mean, I see for September 12th, I see on SPX, I see 57.50. And yesterday it was 63 points when I was sitting during the show talking to Josh on engineering the trade. So it's fairly low. I think another interesting marker to look back, and I was doing this yesterday as well, looking back at the last inflation report week, and I looked at it, I'm pretty sure it was the week of the 11th, August 11th, 117 points range, 117 point range on that week. And that's markedly low. I mean, the only thing that was lower was 2 weeks ago, the week of the 25th, 79 points. But last week was 172 points, and so far this week we've only moved 25 points, fairly low. So this could end up being a fairly quiet week. Again, like you said, it just really depends on inflation reports that have to really completely surprise us in some way. But I don't know how much they're going to surprise us. I mean, for the most part, the last several have shown that inflation still exists in the system. So I don't expect a huge surprise. And Iron Condor for the rest of the week just might be the best trade to do.
If we were taking a look at that here, let's just wipe away the previous one. The expected move down to 64.25. So let's go down 10 points wide. Let's go out again, just straddling that one standard deviation move. That gives you a 64% probability of profit, a little bit better than a 4-to-1. If we want to play inside that ever so slightly, we can get, start to go towards 3-to-1, but we're giving up some pop, not meaningfully. That would mean new all-time highs if we're wrong to the upside. It would mean clearing out Friday's low at 64.52 if we're wrong. So that's kind of the trading range right now at the chart. We've been trapped within Friday's price action. Will we stay there before inflation? Will we stay there after inflation? Right? I mean, I could paint the case that after all this weak jobs data, you get a really bad inflation report. Bad is like 0%, negative 0.1%. And it sends the market into a freak out that demand is just dropping away. It could also be like 0.5%. But if we're anywhere in between, does it materially shift the Fed's focus next week? Probably not. They're telling us they're looking through it. So softer inflation data, I think, bumps those 50 basis point cut odds. I don't know if it gets us out of the range. Butler, Chandler may be onto something here. The esteemed law firm of Butler Chandler LLC.
Yeah, it does sound like a law firm. And I would definitely keep it just to this week because, again, I think there's just too much going on next week to try and estimate what kind of range we'll be within. And again, this week is fairly simple to do. You really don't know what these reports are going to give us for market moves, but I think it's somewhat a fairly low risk to put an Iron Condor on, and it's really not too demanding on your portfolio overall.
Taking a quick last look at what's going on in this market here from the perspective of top performing sectors. I see that we have energy at the top of the heap today. We're going to talk about what's spurring that on in a little bit. Check your news flow for what's happening in Doha if you want to get ahead of the curve. Otherwise, utilities, telecom, semiconductors, financials at the top. Some nice names there as it pertains to growth. But on the downside, it's the housing names. The housing names look really, really unhealthy today. Those have been high flyers and all of a sudden looking like they're doing for a bit of a pullback. But the interest rate cuts, those help. Those are coming ultimately. And the technical posture, it's been these like 2 steps forward, 1 step back kind of situation for many weeks now. Mm-hmm. Anytime we get a little bit too far removed from our 1 month, the market comes in. So consistent with that, as long as home builders are up above 110 and ITB, really much ado about nothing, I guess, with today's action.
It's kind of been the same thing with banks too. It's definitely an area to watch. This whole bank area, this banks and housing. Given the changes that we're seeing right now in the economy and potential chance of changes for rate cuts, it's something to keep an eye on. And again, like you said, it's been kind of this little forward, a couple of steps back. It's one of the reasons why I think it's going to be one of the more interesting sectors. Both of those are going to be the more interesting sectors in months to come. Wait, you're on mute.
Sorry about that. These sneezes. We got into the market where, you look at banks, at least since the beginning of May, very much like what you saw in ITB. It's this rhythm where you're going up to the top of the channel, you pull back in towards trend. You move up to a new high, you pull back in towards trend. So we've hit the top of the channel last week, effectively, on Friday. We're pulling back in here, and this is, we're eyeballing it, more art than science, but you can make the case that we get back into this 21 50-day envelope like we did in August or June or May, and first blush, people are going to try to buy the dip. So NASDAQ breaking out, semis up.
And wait, and as you have that, again, we just did housing, we just did financials. So yeah, go ahead and just juxtapose the Russell now, right? And you'll basically see it's a similar chart. Now you can see why Chris and I are behind the idea of getting along the Russell.
Yeah, KRE is the one that sticks out most. This, again, where are we doing these steps? How are we walking forward as a market? Well, we just cleared the former highs. We set new local highs, pulling back in a little bit. 2 steps forward, 1 steps back. Uptrend is still in place. Okay, not so bad. Bonds are a different question, though, because if you thought that this was really bad news, that there's a lot less growth in the economy, so a lot less inflation pressure thanks to a weaker labor market, you're not looking at a bond market here today that exactly is cooperating with the idea that the news we saw is ultimately, well, a sign that lower rates are yet to come. I would point out to what's going on with the BLS revisions. So just quickly here, why are we focusing on the birth death model? You're going to see a lot of commentary about that today. It's basically an imputation tool. It estimates net job creation from businesses the monthly survey doesn't capture. So these are mostly new, smaller firms. The BLS looks at the historical patterns, runs a real-time series forecast, and then adds that to the survey's actual employment figures. So the problem here is that the model assumes business formation follows past trends, right? That's really true during periods of any economic stress, which we've seen over the past year or two, from the rate hikes, the 9% inflation in 2022, to the vibe session or whatever. And we haven't even gotten into the tariffs part of this revision window yet. But when we think about that, it means that if the model is using an old economic regime to base revisions, then it's going to be out of step. So there have been prominent people like Pantheon's Sam Toombs, who calls it too generous, which has been overstating jobs growth since COVID. RenMax Neil Dutta, who's a big name in the macro world, he calls the revisions unseemly, and they're both not shocked by what's happened here today. So if this isn't a measurement error, right, it's more of an adjustment error, then what can the Fed really do with that information? What do you do with that information as a trader? I mean, the market collectively today, Jamal has said you don't do much with it. That's why, well, stocks are barely budging and bonds are barely budging. Do you think this is still a good trade to the upside now that we're above 117?
I mean, I do. I'm still long bonds. I'm long ZN, but I do. I think just from the standpoint of how long the bond market has been in a bear market, if you will. I mean, I think for that reason alone, it just at some point or another, it does make sense to see bonds bounce. How sustainable the bounce is has always been the tough part, right? For the last few years, we've been playing bonds for a bounce, and at times it's really just been watching bonds stay in a range has been the best trade for them. But I just feel like at some point, again, rate cuts don't directly affect ZB. I mean, they affect ZN a little bit more than anything, and obviously ZT the most. But I would think that this environment eventually lends to bonds sort of bouncing at some point. It's just complicated, right? When you look at the situation with tariffs and a lot of the fiscal spending that's been going on with the government. That's what makes it harder, right? If you look at that story, it's difficult. But just from a pure trading standpoint, you figure it's been in a bear market for the last 3 years, and at some point it's going to bounce. So I want to be there when it does. I think the cheapest way to do it so far is upside in January, but time will tell.
Talk about the potential upside here. One of the charts that we've examined in recent weeks is the notion that notes, this is a monthly chart going back to the highs that we had during COVID. The downtrend in play here touches the high that you had in August 21, and then again here in April 21. If we're slicing the chart like this, you're going to see that last week we started to break out, and this week we're getting our follow through. Is this a major bottom? Granted, we've seen charts like this in the past, really over the past 2 years, where depending upon the slope of the downtrend, you can make the argument that notes were bottoming. But you know what? If you've been trading notes like they've been bottoming, that you haven't been getting too aggressive on the downside, you've been selling puts, you've been fading weakness, it's worked out for better or for worse the past 2 years. Now, upside convexity hasn't been great, but saying that like the lows were in hindsight, that meaningful potential. There is one thing that marked off the lows in October 23, which I think is worth noting. We set record highs in bond volumes back-to-back weeks here at the high in March 2020. And the only other time that we've seen volumes, trading volumes, approach the COVID levels was here in October 2023, back-to-back weeks, north of, I think it was what, 5 million contracts traded in ZB futures.
I don't even remember. What was the deal behind that?
That's when the Fed said that they were basically, we're going ahead and start cutting.
Oh, yeah.
Like cutting.
Let me rally to the end of the year. Yeah.
Right. And then you get your pullback going into May. And then May 1st, the Fed comes out last year and says, like, there was a 0.3% chance of a Fed hike last May 1st through the end of the year. And Powell came out and said, no, the bar to hike rates is very, very high. Directionally, we're done hiking. Don't worry about the hikes. And then the market unclenched again. So 113, 12.5 here in notes. It's a bit of a pullback right now. It's not substantial. Technically speaking, Jamal, we could get a move back into the 112.5 area and this thing still be in breakout territory. So what happens the next few days matters a lot, but both ZN and ZB right now, structurally speaking, it would behoove one to think about these, how the longer term charts are unfolding and how it looks like there may be a little bit more longer term upside bias coming into play at present time.
That's what it feels like, and that's really what I'm playing for right now. So, and I misspoke earlier. I'm not January. I have the December contract, which is really using the H or March future, and I'm taking a cheap upside play right now. The 115 call, 108 days out, runs about $700. It's a little bit cheaper today, of course, since bonds are down, but that's the way I'm choosing to express an opinion in it right now, and giving it some time, much further out. This has been kind of like my trade going the last, in a couple of different things more recently over the last couple of weeks.
And ZB here, just drawing it from the highs that you have in August 2020, thinking about the highs that you had in ZN in August 2020, the most recent swing high here in April. You can just see on the weekly chart, we're clearing out the recent local highs and pushing through. Hard to be bearish from that view, Jamal. Very hard to be bearish.
It is, but when you pull this chart out and you look at, when was it? That was last year, October-ish, and then of course this year, early the year, they can look like head fakes a little bit, and that's what I don't like to see.
No, you're absolutely right, and that's why it's more art than science, because depending upon how you draw your chart, you could make the case a number of different ways. But weaker growth, weaker inflation potentially down the pipeline. Recessions serve the long end of the curve very, very well. Top performing asset class since 1980, only alongside our favorite friend in gold, which is having an uglier day. I say uglier because it's not screaming to the upside. And quite frankly, I have some serious FOMO here because I have not been in for basically the last $90, and that hurts my heart. Nevertheless, there's a pin bar, maybe a little bit of a shooting star up there. And silver, where I am currently riding the rails, that has a steeper pullback of 1.45%. So like contextualizing this, Jamal, stronger dollar, stronger yields, and we're seeing weaker metals prices. Volatility is collapsing. 12.8 IVR in silver, 29.7 in gold. It's off the highs that we've seen established during the rallies. Is this it? Should we pack it in?
What do you want me to say?
Please say no.
Gold doesn't look that good. I will say this like you said, this shooting star to the down, it doesn't look good. This pullback a little bit, but gold hasn't really let us down in that way for most of this year, such that we haven't seen these pullbacks followed by big drawdowns. So that's the green shoots there. Silver, I will say, although this is a little bit more painful, I'm in both of them, but I'm actually in the silver future contract for a call spread, and the 44-46 call spread in God, what month do I have that? I have it in October, so October 28th, Z contract. This one looks more like consolidation, to be honest with you. Even though this is a little bit of a deeper pullback compared to gold today, this one looks more like consolidation. And look, for both of them, I mean, this is what you need to some degree for higher prices. Otherwise, you just get it all in one day, and it's a huge move to the upside, but then there's no real follow-through. I'm looking for more follow-through out of both of these. And so in order for that to happen, I feel there needs to be days like this where we sort of either tread sideways or somewhat pull back, but not huge drawdown, right? So to that end, I still think silver and gold are in play. I still think the thesis holds well, especially if we're going to be cutting rates. It's going to be good for both of these going forward. I'm staying long, and I'm not changing my position. I probably, if this consolidation takes a while in silver, that's going to be very challenging, and that's part of the hard thing about trading sometimes, right, is just having the patience. For the most part, when we talk about it on Tasty, we're usually selling vol, and we're looking for vol to get bid really fast. It's very obvious that it's time to sell it, and then you just watch paint dry, but it's usually a little bit faster when we're looking at things that are 30 IVR, 40 IVR. In this case, when you're playing for a move or a breakout, where the breakout has happened to some degree and you're waiting for the next level of breakout, that requires a different level of patience as well. So that's essentially what I think we're both doing right. Well, I'm doing right now. I forgot you're not in the gold. You're still in the silver, but you're doing it with silver. I'm doing it with gold and silver. Again, the pops attracted me, and now there's going to probably be some sideways consolidation before the next move. I hope that next big move is up.
I would point to what's going on in terms of the characteristics of these markets, right? Technicals themselves and indicators are meaningless. They're to help provide context about what's going on in price action. So the context I draw our attention to here, something we've discussed in recent days, is this 1 week moving average. We get our bullish engulfing bar here on the 22nd, a new low relative to the prior day. We close above the prior day high. And ever since then, we've closed every single session back above this 1 week moving average. A few days ago, when we got a little bit too far from it, we actually didn't have a touch on that day. The following day, we had a pullback into it. The next day, we bounce off of it. Today, we haven't had a touch of that 5. We got a little bit removed, and now we're pulling back in. So if I'm staying long gold and riding the rails, I know Ilya here has been scalping this to the upside and holding it long. Something like a daily close below that 1 week, 36, what we'll call that 36.43 right now.
Mm-hmm.
That would indicate that the tone of this rally has evolved. And you're seeing that in silver, because silver, likewise, we talk about the bottoming that goes into play right around here. You get our move back through our 1 week on August 21st. Today, we would close below it for the first time since the rally began, and that would be an indication that momentum's weakened. So I have a line here, 4-hour chart looking at $41 an ounce in silver. It seems to be a potential line of support where if this is a double top, that would be a line that, hey, you know what? I don't care if I'm long and I have enough duration. I don't want to ride this out to the downside. This is a pullback that could scale what? We're talking about $1.50 effectively.
Yeah.
So revisit me at $39.50, which $39.50, Jamal, well, that's where this market bounced and had a big breakout. So that seems to be a reasonable place where dip buyers may come into effect. First, a local high here on the 22nd, and then ultimately the springboard on the 29th as we move back above 40. So a little bit of a game plan here. Below 41, out on longs, maybe in on bears. On the short side, ride it to 39.50, flip back to long, look for the rally into 42, 44, end of October.
It can't be understated, and you alluded to it earlier, how a lot of these setups are sort of pausing at this time when we're heading into this big data week, if you will, and big potential moves coming around, but volatility expiring, volatility futures expiring, and the end of the cycle for September options expiration, which is going to be a big one. So it's interesting how this is all happening at this crucial time as we're coming up on the Fed meeting as well. And I don't think it's any accident. I just think we're seeing a little bit less of the big players, if you will, sort of pushing things higher. They're going to slow down and wait to see how this next batch of data treats the market.
So there's your range, right? Measured move would kick you down here, Jamal. I think you're spot on. Like, if inflation data comes in really, really soft this week, the Fed's cutting, but is that good for silver? I mean, I can make an argument that it's not. And I think the market, given the technical setup here, is arguing that maybe the thrust of the data here is like rate cuts for wrong reasons. You want silver and gold because they're inflation hedges. But if the economy is so weak that it doesn't generate inflation, then why are you going to hold something growth sensitive and inflation hedgy like silver? It certainly draws things into question for me. But gold, I missed this rally. I haven't been a part of the last $90, as I said. I really would like to get an opportunity to buy back in. I see that 1 month here at 35.21 and some recent highs near that 35.35 level. So a picture perfect world, we can get long down there. Otherwise, it may just be scalping against the 5 EMA. And I will say tomorrow, first blush, when we run into it, if we run into it, I'm going to be long against there until we get a close below, because that's been the point to watch. And until the market tells us the rhythm higher is wrapped up, not going to fix what's not broken.
So I was in my oldest kid's. There's this thing that we gave him when he was younger, and it's one of those things that shows you like things that were going on the year you were born. He's born in 2003. Just looking back, gold was $376 in 2003, bro. Really?
Did you give him
crazy.
gold?
Yeah. How about it?
Yeah, things changed, right? Gold was range bound for a number of years, like kind of slightly edging up in the 80s and 90s. And then you get into the housing crisis and just, it hasn't looked back. And it went through a few years there in the 2010s where it meandered around, but it never went back to the pre-GFC lows, right? And we never went back to the pre-COVID lows.
No. 22 years, and it's times 10 now. And so it's interesting. I say that because we look at, again, sometimes, we're up on, right up on it. We're looking at something so close. Sometimes you got to pull back and look and see, where it potentially is going. And so again, that has to do with our trading time frames as well. But it's been strong for some time, and it's really been strong, particularly over the last year and a half. And until I see a huge drawback where I'm just like, at that point, I'm just like, I'm completely done. Until I see it not responding the way I think it should be for a bullish moving instrument, I'm going to keep playing to the upside.
I saw an excellent chart earlier today comparing the returns of the of gold and here it is from Mike Zaccardi. This guy always posts a bunch of great charts.
Oh, yeah, he does.
Gold and the NASDAQ are about to flip. Since the tech bull market began in the lows of 2023, the NASDAQ's returned 126% as of 8:51 Eastern this morning. Gold's up 123% over that time frame. That's wild to think about. That given how strong the NASDAQ's been and how overinflated the Mag 7 names are, an AI bubble, and what does that say about gold? Is it too far, too fast? Yikes. Well, we're going to keep playing the upside, Jamal. It served us well. And we're pretty loyal folks around here, so we're not going to abandon our friend. Oil rattled by this Israeli strike in Doha. Hamas mediators were meeting in Doha, Qatar, in order to come to some sort of ceasefire agreement. And Israel decided to bomb the establishment where this meeting was taking place. Oil prices jumped up more significantly earlier because, for some context here, Qatar is the home of one of our largest air bases in the Middle East. And so if Israel is hitting Qatar, then does that mean the United States knew about it? Were we in on it? How come we didn't tell one of our supposed allies about it? The US and Israel have denied any sort of US knowledge beforehand or agreement in the planning. And since those headlines came out, oil prices have backed off a little bit here today. So while they're still up by 0.8%, it is not the rally that it once was when we're up near 63, 67. We're basically $1 off the Hydra Mall. And the volatility, did it get going today? No, it never got going. So thinking about this as a potential geopolitical risk play right now, maybe that's gearing up. Vol is lower today than it was at its highs yesterday before this airstrike. So I don't know what to make of this, anything other than oil must be really weak. Right? Like, that's not great that it can't hold on, even with these kind of headlines.
Yeah, oil remains pretty quiet. You would expect a headline like this to give you probably 2 to 3% pop, and I don't know what that was at the high today, but it doesn't look like it was more than 1.6 or something like that percent maybe. Oil is quiet, and I think you just have to treat it as such. And about the only trade that has been worthy of oil more recently is the iron condor trade, honestly. I mean, there's really not much else that you would want to do. I guess you could do a strangle for those who are bigger players, but selling vol, what little vol there is the trade of the day.
Trade of the day, trade of the week, trade of the last 3 months since June 12th, right? When, or June 12th, June 23rd, technically is when we're on. June 12th is when it starts. But when the Ayatollah, Jamal, it's so funny. When the Ayatollah released that video of an Iranian missile hitting the Statue of Liberty, and it was aired on Iranian state TV to say that revenge had been exacted against the U.S. and Israel for attacking their nuclear facilities, I'm like, we know the Statue of Liberty wasn't actually bombed. That was a pretty clear signal that they were trying to tell their domestic audience this tit for tat was over. And I know it's ridiculous to think that money's been made watching Iranian state television over the past few years, but it has, just by watching. It's a sentiment check, right? It's a sentiment check.
Yeah.
And so this market's been in a sideways move ever since then. It has done absolutely nothing since we come off the board. The 23rd is the Monday after we bomb the Iranian reactor and facilities. The 24th is when we get the flush, and we are, Jamal, we closed the 25th at 62.35. We're at 62.72. Talk about trading this market sideways efficaciously since late June. There's nothing else to do here. There's no reason to be a directional hero right now.
No, not at all. I mean, because again, you'd just be doing it on a hope and a prayer that some unfortunate circumstance will be pushing oil higher, and even then, you have no idea when those occur. So, you either they're doing a strangle, an iron condor, or nothing at all.
What about natural gas? Natural gas in your 29.8 IVR, that seems kind of low for something that demands a little bit more vol if you're actually going to try to collect some premium in this market. Tom said earlier this week on First Call that he was just taking directional bets here, selling put spreads around the local lows that were carved out in late August. Have you done anything here? Are you doing anything here right now?
Nothing in natural gas. I know that we last discussed it. It seemed like it was bouncing and had more to go. It seemed like it's kind of stalled out, though, at this point. And I think that's why vol has kind of come in, because I think it was about 40 the last time we looked. Now the IVR is 29.8. So things seem to be stalling out in natural gas. I could maybe be convinced to take a directional play and sell a put spread. I mean, I think that would be in order. But I have yet to do anything.
Just looking around those local lows, kind of straddling 2.70, basically risking 5.5 to make one.
Therein lies
5 2/3. There is your problem. That's just not a great risk to reward. So not that natural gas responds to technical levels all that well. It's the honey badger. Even so, like selling the 2.83 put spread right now, 57% pop, risking 3 to make one. Perhaps you could work with that. You have this pin bar from the 2nd of September, right? First trading day of the month. That low is 2.869. So if you want to trade around the monthly low, they're actually, all right, let's send it.
Send it. Send it in, Jerome.
No, I'm not saying send it in, Jerome. I'm just saying that. Just saying that we need something to do here. And because it's mostly managing positions otherwise today, which is if it's a trend day, and we've been trending markets, right? Gold has been higher, silver's higher, bonds have been breaking out, and you're getting these counter trend moves. It's either take profit on existing positions or roll them out or just sit on your hands. So trying to do something new here on Futures Power Hour. NG X5, 49 DTE, 283, hoping the September low holds. Risking 3 to make one.
It is. It's kind of one of those days where, I mean, again, this is certainly worthy of trade since it's almost 30 IVR. The other things we talked about earlier, whether it was the Russell or NASDAQ in my case for those call spreads, it's probably going to be a risk management, probably roll further out. I do like the trades, but it is one of those trade days where it's a little hard to put on edge, right? Because things are kind of quiet.
Kind of quiet. Has 280 been important before? Seen 285 or so. August support, bounce, you break through. Okay. Punch through it again, support, bounce. that's a level to trade around. Maybe it works. Hopefully it works. We don't want to put natural gas back in the timeout box, Jamal, because it did not help us in July or August. We round this out with a conversation around the dollar, which is enjoying those stronger yields today. So I pull up DXY first, technically punched down to a new low for the week and the month, but we're rallying back and we've almost covered the weekly losses so far. We opened up at 97.79. We're in at 97.73 right now. The yen here has been a big mover today. There were rumors afoot that the Bank of Japan could be considering a rate hike at the next meeting. Where do we find our beloved Japanese yen? I don't have a position right now, but you can see there's this little zone. Ooh, triangle tool. Let's mark you off. There's this little zone in here, Jamal, that seems like it would be a bit of a resistance band given where former lows are carved out or former highs were reached. I still strongly dislike the yen, but the positioning here has been cleared out. You're no longer looking at Z-scores in the mid twos or low threes. You're back getting closer to 1. And the trajectory has been a steady squeeze out of the yen longs without much of a significant correction downward in price. So that trade rationale is increasingly outdated. I would look elsewhere, though, where you have a euro that tried to break out yesterday and is failing and falling back in today, a Canadian dollar that is basically sitting right near the monthly lows again. This thing's a real dog, and it has an 88.6 IVR. So while volumes are thin, if there's something to do here, looking at the recent swing highs, you can get better than a 3-to-1 risk to reward, effectively saying that the highs we had here in June don't break. If we want to be more aggressive, we could. We can pull it in and get a little bit better. You're giving up some pop, but you're saying that the highs that we've had now here since August, right? The August highs don't break. I'm at 24 DTE. I'm going to be rolling this out. This is almost 1-to-1. That's, I think, very appealing right now. So I'm not there yet because I still have a few more days to go, but I'm going to be looking to roll out the short call spread exposure, at least in the Canadian dollar. Continues to work, and it has not been able to rally back against the dollar like everything else.
That one has a decent amount of vol in it too, 88 IVR. So nice job there with that one, with that short. For me, it's all been about being long the dollar. I've kind of pounded the table on this for the last couple of weeks here, and that's the trade in which I find myself. And it's expressed via the euro. I'm long put spread in there, so short delta. And like you said, there was a little bit of a bounce yesterday, which kind of annoyed me, but I'm glad to see things have returned to normal today. I just I feel like being long the dollar. I'm you know, it's crazy. I mean, I'm long equities. I'm long gold. I'm long the dollar. I'm long bonds. I'm looking for something to happen. I'm looking for some big macro event to happen, and at some point or another, maybe I'll get it.
We often say around here that when you break out of a consolidation only to return into it, you typically trade to the other side. Jamal, if that were to be the case, then we could be looking at a retest of 116 here. You can see how right around 116 resistance in early August and then support effectively the rest of the month. So failing pulls us back into 116. You mentioned being long put spreads, looking something like long the 116.5, short the 116 at 59 days. Better than 2-to-1 in terms of reward to risk. So that's nice. But if we wanted to think about something more short term to play for this week, you can get something in the neighborhood closer to like 3.5, 3.7-to-1 on a risk to reward, expecting a return to the downside of the range. And you could play for that on a short term time horizon. And there is an opportunity there. It's a 29.1 IVR. So if we wanted to do this in a more traditional tasty way and go back out to the 59 days and sell above recent local highs. So we'll call that 118 or so. Selling the 118, 119 call spread, that would yield a 54% pop. Better than, again, 2-to-1, risking less than 2 to make 1. And the bet there is effectively that we will not be punching through the yearly highs in the euro, that the dollar has effectively bottomed. That's it, that the losses are stopping. It's not going to maybe rally the dollar, but it's not going to sell off meaningfully moving forward. And we do have the positioning data with us, which while the yen is off the board, Jamal, this is still the most hated trade on the planet. No one wants to be long dollars right now.
I know, right? It really is. It really is. I actually just adjusted my trade a little bit. So I've been long the 118, 115 put spread, and I still have that. but I just turned it into basically a put butterfly. I sold the 115, 112 put spread. So again, I'm looking for a dollar move to the downside, but I don't expect one. I don't expect the dollar. I'm looking for a euro move to the downside, at least to 115. I don't expect it to breach 115 in such a way that it goes to 112. But we'll see. But I mean, again, that would be a huge move, obviously, from 118 to 112, and by January, that would be enormous.
That would be big. But it's been a big year for the dollar. So who's to say that couldn't occur? Certainly not your typical year, and worst year on record since the dollar began the era of free floating exchange rates. Tomorrow, you mentioned that we're looking at potential figures coming in for inflation, PPI arriving before CPI this month, which is unusual. It happens time and again. You can see PPI last month up 0.9% month over month, which is why the red flags were going off of, oh gosh, are we going to look at a blowout for PCE, which ultimately never materialized. But retrenchment in PPI, pullbacks here. Let's see what's going on. Is it going to get passed on to the consumer in the CPI report? Fun times. Maybe matters a little bit more than last month when it came after CPI, so the main mover was done. This has been a week where we haven't had a lot to work with on the data side, on the earnings calendar, on the macro calendar. The 3-year note auction today, Jamal, did we even talk about it? No. So it's not like Treasury has been up to anything of interest. And the Fed's in a blackout window. So my goodness, I would say that tomorrow morning you actually could get a little bit of movement around PPI. Don't overlook it as some potential binary event risk in the morning. Of course, though, you and I are done here for now. You and I are going to take a quick break. You're back with Engineering the Trade in about 47 minutes time. I'll be back in overtime with a healthy Dylan Radigan and Ilya Spivak at 4 Eastern, 3 Central right after last call. So for Jamal Chandler, I've been Chris Vecchio. Good luck trading. Stick around, though. Take a brief break because Tasty Live is continuing next with more Dr. Jim Schultz with From Theory to Practice. See you there.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the Tuesday edition of what it is that we are trying to do, man. Welcome to the broadcast. I just appreciate you guys. I appreciate you guys so much because we cannot do what it is that we do without you guys doing what it is that you do. So thank you guys so much for being a part of the network. If you're watching over on the Tasty Live network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with our brethren who are also watching the program. Man, you can celebrate if you're a bull or a bear. You can commiserate if you're a bull or a bear. You can do whatever you want. The only people that are really in pain this morning are Bears fans. And so welcome to the show, John. Bring us into the market. Ooh, I just had to do it to you guys, man. He's up 10. Looking pretty good. You got the risk-free instrument, also known as the NASDAQ futures, extremely high risk product, up 40 on the day. You've got the boomers up 193. That was a brutal game last night. I mean, I didn't watch really much of the game, but I saw some of the clips and I was following along with what was going on. And it looked like they had them. Like it looked like they had them. And then they didn't really have anything. And so it's the same old Bears, kind of like the same old Dolphins. So apparently we're kind of two peas in a pod when it comes to that. But anyway, I digress. You got the Russell 2000 down 14 on the day. And you got the bonds down 8. You got the notes down 5. You got oil up 40 cents. You got the multifocals working pretty hard today, doing a pretty good job, I would say. You got UB40 down 13 ticks. You got the gold. Shifty's up 4 points today. Got the Hunt Brothers. Hunt Brothers down 60 cents. Ooh. Got a mixed market in the metals. That's, that hasn't really been the case really any day the last couple of weeks. It's essentially just been both metals up 1 to 3% every single day, just rinse and repeat, kind of Groundhog Day, kind of let's just do the same thing that we've been doing. But today, gold is hanging in there while silver is taking it on the chin. I don't know what that means, and I don't think anyone else does either. But nevertheless, it at least bought us a minute's worth of content. You got the British pound down 28 bips. Got the euro down 51 bips. Got volatility even down a little bit. Volatility futures, I should say, down a little bit. And then, which is, yeah, that makes sense with the market up a little bit. You got the Bitcoin bros now 700. And you got spot volatility, the old VIX. Let's give it a look. Is it still in business? Barely. Down a penny. Down 2 pennies, I should say. Down to 15.09. So that is kind of brutal. That is kind of brutal indeed. And guys, listen. If you needed any more evidence, if you needed any more support, any more proof that it's all just made up, man. It's all just made up. It's all just imaginary. It's all just whatever they want it to be. They revised the jobs numbers down by almost 1 million jobs today. That's 1 million jobs. Like they didn't miss by like a couple thousand jobs. They didn't miss by like, we missed the mark a little bit, 3,500 jobs, 5,000 jobs. No, they missed 1 million jobs. Guys, it's all made up. I promise. It's all fake. None of it matters. Well, it actually maybe matters quite a bit, especially the PPI print in the morning. I've actually never seen an economic data print that matters as much as this one. But the jobs numbers, man, that stuff is totally made up. And I don't care what side of the aisle you're on. It's made up on both sides. It is equal. We can all shake hands and be bipartisan on the simple fact that it is all completely fake. And so the jobs numbers, the market didn't really care. I mean, market kind of, it kind of digested the number and it went up and it went down and it did what markets do. And I mean, I think the metals move on the print. What was the print? Was it 10 o'clock? I think it was 10 o'clock. So hold on. Let's see. If I go to, let me see here. Let me go to, no, I don't want to look at SPY. Forget about SPY. Let's go to GC. Let me unlock my Errol Coleman settings. Let me do a 1 minute because I want to see. It was right at 10 o'clock, right? 10 o'clock Eastern. Obviously, I have my chart in Eastern because I am in the Eastern time zone. You guys might have it in the Central time zone if you are indeed in Chicago. And so let's see, 10 o'clock. Where is this? Right here? Yeah. So, okay. So the original, the initial move was higher, obviously, on the number. And so that sort of makes sense because, I mean, you would think, right, the narrative that the powers that be are trying to tell us that the way that things are, right, powers that be, this would be the they in all of the times that we say they, so Sazon's, Batistas, Sheridan's, Malmets, etc. They want us to believe, right, that a 50 basis point cut, this is what, next week or whatever? Like, that's going to send the metals to the moon. That's going to send these things on a rocket ship, never to be seen again. But apparently, maybe not. Apparently, maybe nobody knows because look at what gold did right after, kind of running up there, grabbing all the stops, right? A quick little liquidity draw for all my ICT fans that are out there. And then boom, they just sent it lower, man. There you go. Silver, I think, did pretty much the exact same thing. Silver at 10 o'clock. I think it did. I mean, yeah, there you go. Basically the same, the same song and dance, right? They ripped it up. Did they rip it over 42? Almost 42, so 41.91, and then they sent it lower, and then it's just been kind of drifting off into the ether ever since then. The market did, I don't know, what did the market do? I don't remember actually. I was watching the metals, but I wasn't watching the actual equity response. So the equity markets, yeah, look, they didn't really do much. They moved around. Obviously, you can see quite a lot of movement today, but there wasn't anything pronounced one way or another. The metals move appeared to be a bit more pronounced than even the equity move. Although this one kind of followed a similar framework. Although the equities have since recovered and they've rallied. I mean, why wouldn't they rally, right? So what? We missed the mark by 1 million jobs. So what? All-time highs. So what? Send it. Send it to all-time highs. NASDAQ, 24,000, right? Give me that extra 25 basis points on the cut. Let's go. And so NASDAQ, right back to basically the daily highs. I'm sure EMEA S&Ps are doing the same thing. Yeah, pretty much the same type of deal. So anyway, there's your market commentary. But again, if you needed any more support, I can't give it to you. There's nothing more I can give you. This is it. It's over, right? It's over, Johnny. This is it. And so there you go. And so, all right, let's go into it. I see you guys in the chat, man. Man, I see you guys. See Ahmad's in the house. Man, Ash Finn's in the house. Man, look at you guys. Big Deal Donuts in the house. Raul's in the house. Just snuck in there at the end. Man, how about that? You got Grumpy Mike's in the house. You know it's going to be a good day when Grumpy Mike's in the house. Sam L, Andrew Cortado, Joel James, and Joe's in the house. And Wolf is in the house, man. That's hard to say live. It's very hard to say live. Sergio's in the house, man. Trader Ice snuck into the chat. Theta Trader's even here. Man, what a day. What a day. So, all right, let's go in here, though. So, a couple of comments. So, number one, it's like clockwork, man. Like, number one, look at this gold trade. We sold the call spread. We're already underwater, right? We got short gold yesterday. Boom, already underwater. So, again, if you took the opposite, as you should be doing, as I've suggested many, many, many times before, you would be making money after only one day, not even 24 hours. Like, I don't even think it's been a full 24 hours. You'd be up a few pennies. And so again, if you need more evidence, I can't give it to you. I am not your guy. We have exhausted all the evidence that I can possibly give you on this front as well. And so gold, short call spread, not looking too great, but we do have some time. We have some time. We have 38 days to go. And so again, remember, in all seriousness, when you have a defined risk strategy on short call spread, short put spread, long call spread, long put spread, iron condors would also be a good one to toss in this bucket right here. Iron flies, for my iron fly bros that might be out there watching the show. One of the huge benefits here is you control your size on entry, and then you don't have to necessarily do a lot to the strategy after that. It's very much just kind of a set it and forget it. It's very much just kind of a, just a take and bake, man. Like, yes, you could make the Betty Crocker chocolate chip cookie recipe from scratch if you wanted to. Like, you can break out the book, you can hop on the internet, you're obviously scrolling Pinterest. Like, you can do all those things, right? But you could also just go to the store and let Toll House do all the work for you. Like, let them do it all for you. And then you bring it home, you crack it open, you toss it in the oven, you're ready to go. It probably is going to taste a whole lot better than what you could do on your own. At least it's going to taste a whole lot better than what I could do on my own. And so same type of idea here with defined risk. You set it, you forget it. It's a take and bake type of strategy. And so that's what we're going to do here with GLD. We're not going to do anything with this guy. So GLD, we sit tight. And those are all the reasons why. GDX, similar type of situation, although it's a very different strategy. This is an undefined risk strategy. So you've got a 62.70 strangle with the stock at 66 or 67. And we're actually up a little bit on the trade. Again, this is a far more strategic strategy. You're selling premium on both sides. I'm taking a directional stance, so I don't need to fade myself or anything like that. I can just let the power of the strategy do the work. Now, this is not going to be a take and make. This is going to be kind of like, all right, have the recipe book handy, just in case you need to consult kind of where to go next and what to do with the next adjustment or the next step, because this is not going to be a set it and forget it type of thing. Like, it's undefined risk. You want to have an eye on it pretty much, most of the time or whenever you're checking your portfolio, which I would say for most of you that are watching this show today, Like if you're brand new to the network, man, welcome aboard. If you want to take an active approach with your portfolio, you are in the right spot. But for those of you that have kind of been inside of the Tasty ecosystem for any length of time, even more than just a couple of weeks, you're probably checking your portfolio once a day, I would say, for most of you, or at least 3-4 times a week, I would say. Many of you are obviously doing it multiple times throughout the day. And some of you are like, Jim, I spend less time, more time, less time. I'm spending most of my time in my portfolio, actually, if I'm being perfectly honest with you all. If I'm being perfectly Frankie Walsh with you all, that would be the truth. But with GDX, it's an undefined risk strategy, so we're going to sit tight and not do anything yet. But we are aware that it may require some action on our part here in the near future. And of course, Best Buy getting hammered, not going to talk about it. Chipotle getting hammered, not going to talk about it. Right? Obviously, you got Hims, you got IWM, you got Meta, got your Oscar, got Starbucks. Starbucks up 7 cents, of course, because why wouldn't it be up 7 cents? And then Palo Alto, this is a trade. Where are my receipts at? Hang on a second. Is this a Sam L trade? Oh yeah, this is Sam L trade. So it's working out, Sam L. And you may have taken it off many moons ago, but we have decided to hold on to this trade for a wee bit longer. And right now, it's still inside the strikes. You know, I don't like to adjust until I get hit on the strikes, and so I'm gonna sit tight for now, and we'll just kind of see where the wind blows us on this guy. But we're still doing okay. We're still hanging in there. But what I want to do today, though, because again, guys, listen. So the NFP stuff, it's all fake. It's all made up, right? Most of the economic numbers are all fake. They're all made up, right? They obviously mean a lot in a not really kind of way. Tomorrow morning, though, guys, this is not good. So tomorrow morning, there's a PPI print that's coming our way. First of all, PPI is coming before CPI. That doesn't make any sense. That doesn't make any sense at all. Again, we talked about this yesterday. That's like doing back on Monday and chest on Tuesday. That's like doing arms on Friday, but you do triceps first. Nobody does triceps first. That doesn't make any sense. Can you do it? Yes. Should you do it? Of course not. Right? So PPI coming before CPI in a given week, already things are a little bit off kilter. Already we should all kind of be on kind of orange alert now because it's like, okay, something's not quite right with the way that this is setting up. And listen, I've been studying the markets for almost 20 years now. I have never seen an economic data print that has the potential to do more damage to your way of life than tomorrow morning's made up imaginary PPI print. That's going to be 8:30 Eastern time. I would be at your terminals. Like if you're normally working like at your job at 8:30, you're calling in tomorrow, man. You need at least a half day, probably the whole day. So I would go ahead and just kind of foreshadow it out into the future. Just call it off for the entire day. You're going to need all of those 9 hours to go ahead and kind of pick up the pieces from the rubble after 8:30. So right around 8:31 or 8:32, when the apocalypse has officially arrived, guys, that's not going to be good. But just in case we make it to the other side, let's go ahead and trade it. Let's get in here and let's go ahead and do. So let's go to SPX. So what I wanted to do for tomorrow, this is not going to surprise a single person that's watching the show. We are going to do the patented expected move butterfly. But I wanted to point something out that I haven't really drawn our attention to at any time in the recent past, I don't think. This is something I've probably alluded to before or something that we just kind of like, you know, we kind of mention on the outskirts or like in a tertiary way in terms of it being an element of butterfly pricing. But I wanted to spend a couple of minutes and kind of really draw it out today because I think it's a very interesting observation when it comes to butterflies. So normally, if I was going to do a butterfly for a binary event like tomorrow morning's PPI, I would do the 1 day cycle. So I would do, you know, obviously today is almost over, so I'm not going to do this 0 DTE, right? That doesn't make any sense. I would choose the 1 DTE. But then I got to thinking, I was like, well, you know, tomorrow I'm with Arrow for today's assignment because it's Wednesday, of course. So there is no from theory to practice. But I was like, all right, normally I would do the 1 DT, but I kind of want this trade to have a chance to be on during the one of my shows or, you know, the Thursday show, the Friday show, whatever. And so then it got me thinking, well, maybe we just go ahead and do the 3-day cycle. Now, if you've seen the show for any length of time, like going back to, let's say, the beginning of the year, like, you know that normally with butterfly spreads, I really like Thursday butterfly spreads because they go into Friday. You have the potential to wake up on third base. You know, if it really works out, there's not a lot of time left. It can be a really, really great trade. It's a very, very different trade if you do a Monday or Tuesday. Today's a Tuesday, of course. If you do a Monday or a Tuesday butterfly, because you don't have that same waking up on third base potential that you have Thursday going into Friday. And so I didn't really like Monday or Tuesday butterflies prior to maybe just a few months ago. But now I've since kind of seen the light. And I don't know if it's just the multifocals because everything is a bit brighter. and not in a great way, but it's like, man, wow, that light's really coming in. And so maybe it's a, a testament to the multifocals. I'm not sure. But now that we've seen the light here, the Monday, Tuesday butterflies, they've got some potential in a very, very different way. That other way that we've talked about the last, I'm going to say 2 to 4 months maybe, is you have more chances to hit a base hit, right? If you do a Thursday going into Friday butterfly, that's amazing if it works because, that's all you needed was that one day. But in the event that it doesn't work, which, admittedly, that happens from time to time here on the program. If that were to happen, though, now I've got multiple chances for this thing to be right. Now I've got multiple chances for this thing to work out. And so that's a real big benefit. But you have to just understand that you're not going to hit the home run. You're probably not going to hit a triple into the triangle. You're probably looking at single, maybe a double. But you just got to scale down your expectations. Well, as I was getting ready for the show today, and I was looking at different SPX butterflies and kind of comparing and contrasting, another thing kind of popped on my radar that I really haven't spent as much time on. And it's this. So if I go into, like the 1-day cycle, the September 10th cycle, and I want to play a butterfly to the downside, right? Obviously, we're going to play to the downside because, again, guys, listen, it's not good, right? Tomorrow, catastrophe is on the horizon. Tomorrow, disaster is on the horizon, which essentially that means that S&P 500 will be up another 30 to 50 points. But the way that I see it, we're going to play this thing to the downside. So if I was doing the 1-day cycle, if I bought a 6505 and I sold a 6480, I don't really, let's do 6475 because I don't really like the 25 points wide. 30 points wide is even a little bit tight. But just for the purposes of where I want to take this, this will be fine. This may not be the actual strike selection that we settle on at the end of the, the trade execution here, but it'll work for the point that I want to make. So 6505, 6475, 6445 for my audio only crowd out there. I know that you guys are numerous. I know that each one of you is rolling like 6 to 10 deep, and you guys are bringing your friends. You're bringing your family members. Like, it's amazing what you guys are doing. So I thank you guys so much. I mean, you're most likely, walking around the block. You could be on the can right now. You just could be by yourself listening to the show. I know that's how I access a lot of my own audio only content. So I just had to be real with you guys. So 6505, 6475, 6445. So this is what you could be doing in the 1-day cycle, 30 points wide. Now look at the cost of this butterfly. $9.40. Okay. What if, let's clear this away. What if I choose the same strikes, right? Again, this may not be the strikes that we choose, but it's going to make the point that I want to make. What if I choose the same strikes, so the same strategy, but I do it for the Friday cycle? So again, we're not talking about a big difference. I'm talking about 1 day versus 3 days. Like, again, we're only talking about an additional 48 hours here. So 6505, 6475, 6445. Those are the strikes. So let's clear this away. Let's clear away the trade. Let's go into the 3-day cycle. If I buy a 6505 and I sell a 6475 and I buy the 6445, look at how different that is. This is only a $3 butterfly. Actually, wait a second. Hold on. I think in the previous one, did I forget to double up? I think I forgot to double up the 1 day. Hold on. Let me go back in here. 6505, 6475. I'm back in the 1 day. 6505, 6475, 6445. And then we double up in the guts. Yeah. That didn't feel right when I went to the 3-day. So in the 1-day cycle, so forget what I said 2 minutes ago. In the 1-day cycle, it's about $5. It's $4.80. So this is what I would have to pay for a 30-point wide butterfly in the 1-day cycle. That's not bad. Like, that's a decent price. But look at what happens if I go to the 3-day cycle. So let me delete all of that. Let's go to the September 12th expiration. Same trade. 6505, 6475, 6445. Double up on the 6475s. Now it's only $3.50. So it's like 30% less. It is on a 30% sale, right? If you buy today, if we can go to business with you today, I can save you 30%. Like, that's what I can do for you because I like you, because you're part of the family now. What's really going on though here? So with a butterfly, remember, it's so valuable to be at the end of the expiration cycle. This is why I like the Thursdays going into Fridays. Well, the market knows this. Like the pricing, mechanism of the marketplace obviously has that all factored in to the strategy. So interestingly, it actually costs you less if you extend the duration of a butterfly. Right? I mean, think about a lot of other strategies where you paid for them. I mean, think about just a standard long call or a long put, right? If you buy a call with 7 days to go, and then you compare that call with a call with 37 days to go, like which one is going to cost more? It's always the 37-day option relative to the 7-day. Just like a 40-day option would cost a lot more than a 4-day, and so on and so forth. And so when you look at this should kind of feel a bit odd to you. It was kind of how I felt when I did check on the scores last night and the Bears were actually ahead. I'm like, this is a bit odd. But again, by the end of the game, everything came home to roost the way that it should be. But here, with a butterfly spread, $3.40 in the 3-day cycle, $4.80 in the 1-day cycle. So you actually have a savings if you're going out further in time. Now, why is this happening? What is the rationale? Well, there's a couple different ways that we could actually dissect this. I think the easiest one is the following. Right? Just look at the probability of profit. If I choose a 3-day cycle, it's only 24%. Now, with these strikes already selected, there's an easier way for me to go back to the 1-day. All I have to do is tick down my expirations, hit this little time minus, like 1 and then 2. And it's the same strategy, right? I think it's the same strategy. Oh, you know what? I only have one option highlighted. Okay, so I wanted to do that, but it messed me all up. So let's go back. We'll have to do it the long way. Trying to take shortcuts, man. Brutal. Let's go back to September 10th. So remember, September 12th was 24%. But if we go to September 10th, which is tomorrow, the sky is going to be, the probability of profit is 34%. So again, I mean, these are, low numbers. That's what a butterfly spread is. Again, remember, you're buying, you're risking 1 to make 3, or you're risking 1 to make 2.5 or 4.5 or whatever. And so you have to understand what you're signing up for. Again, of course, we say that every single day. But again, it's a lower probability trade the longer in time you go, so it's going to cost you less. Whereas right now, it's a 34% probability profit for tomorrow's cycle. And so when you're thinking about your butterfly strategies, whether it be for a PPI, whether it be for a CPI, whether it be for just, some other reason, some other earnings call, or just a regular standard trade or whatever, just understand if you're actually willing to extend the duration, it's going to lead to a cheaper trade. It's going to lead to a lower cost entry. And so let me see here. If I go to, so I actually do want to do the 3-day cycle because it is going to give us a few more opportunities to be right. And it allows us to potentially talk about the trade on Thursday, talk about the trade on Friday, which is good, of course, because that content's not going to make itself. Like that content's not just going to create itself out of thin air. And so now we've got a little something. Like now we've got at least 17 minutes of commentary for each day on the same strategy. So 3 days, let's do, I don't want to do the one that we had for that. I want to go a little bit wider, I think. Let's do a 6505. And let's do a 6500 just to make it a bit more feng shui. 6,500, 6,460, 6,420. Is this going to be less than $6? $4.80. Wow. Man. Now that's really, really, really cheap, right? I mean, a $40 wide butterfly for less than $5. I mean, they literally are just giving it away. But there's a reason why that's happening. Again, we've got PPI tomorrow. Are we going to make it? Most likely not. But let's say that we do. Got CPI on Thursday. You think we make it through that one too? Not a chance. And so the fact that they're selling this so cheaply makes a ton of sense to me. And so $4.80, $4.90 on this butterfly. In the event that we do make it through, but end up a little bit lower, this butterfly is going to be a solid, solid trade. So this is going to be the stack of cash that we have chosen to light on fire for the remaining days in this week. And so how do you play the opposite of this? It's pretty obvious. Anything to the upside in the market should be a great trade for you. So 6,500, 6,460, 6,420 is going to be our expecting move butterfly. The intention here is playing PPI, but if we have to, I mean, we'll play CPI too. And if we have to, we'll play the Canadian, durable goods revision print forecast estimate that I think comes out on Thursday as well. So 495. We should get all right. We got Phil. Ooh, look at that. We got some crazy fills in there. But we got the fill that we were after all along. So 495. So there you go. All right. So in SPX, I've given you my market commentary. It's all made up. Don't worry about it. It's gonna be fine. Now I want to get to you guys, man. Where are you guys at? Man, look at you guys. I see you guys, man. Man, look at this. Can I go ahead and let me see. Let me go ahead and try to man, where are we at? Let me try to surprise and delight somebody in the chat. Oh, this is so funny. Bill Buchanan says Apple product updates are so sad that I'd rather watch Jim lose money. I don't know if that's good or bad. That sounds like a pretty solid compliment right there, Bill. So very nice job, my friend. The Apple event is happening right now, is it not? Aren't they coming out and saying, "Ooh, like the new iPhone 17 it's 6 grams lighter than the iPhone 16." Ooh, let's talk about that for 90 minutes, right? I'm sure that that's what they're going on. We got a brand new color, like we had silver, we had gray, now we've got metallic, right? It's like, ooh, yeah, that's some good stuff, man. I gotta have that. And so, yeah, those are your Apple updates. Basically, I just gave you everything that I think you need to know. But that's pretty funny, Bill. That's some really, really funny stuff. Let's see. No username. There's a blank username, which that's kind of a power. I don't even know how you get that, but I've got blank username, which looks like it's a couple of spaces only. Says Dr. Jim, it's better to align your portfolio. You need a Lululemon position on there. It will fit in well with everything that's there. Yes, no, I don't think so. I think we're all done with Lululemon. Now, some woo woo women, I will consider that, which we've talked about that before on the program, because that is the brand of yoga pant that my wife likes to buy. She doesn't get Lululemon because it's too expensive. She gets a woo woo women, which is about 85% off of the Lulu stuff. And so let's see where we at. And then lastly, I'm going to surprise and delight one more person. Ahmad says, Dr. Jimbo, baby, you better open something in UNH. Man, I'm ready. Let's go. And by ready, I mean, I haven't looked at this stock in months. So UNH, wow, up $27. How about that? So this is, oh wait, I don't want to see a 1 minute chart. Let me see a daily chart. Let me see a daily chart going back like 6 months. Yeah, this thing has been, wow. Well, look at that. Interesting. Very, very interesting. So you've got, I don't even know what this is. Is this like the Captain, like the Captain Hook pattern? Like, look at that, man. There's a little something there. Like that looks like the old Captain Hook pattern. I'm not sure what that means. I would think that would mean bearish. But I'll tell you what, as a short-term contrarian trader, I am kind of looking at this. I mean, what happened with the United Healthcare? Somebody let me know in the chat. Obviously, something came out with the stock or with the company. And so this type of reaction in the market doesn't normally happen organically. Usually there's something manufactured there. There's something a little bit man-made when it comes to that. This is not going to be something that just came up from the earth. Like this is going to require, big pharma, kind of big artificial sweetener. Like you need something in there that's kind of aiding the natural growth process of the stock. So let me know what that might be. But I'm thinking, man, I don't know. Let's just get in here. You've got earnings on October 21st. Maybe we could sneak in right before earnings. I don't want to do anything after earnings. Obviously, I'll trade earnings for earnings' sake. But what if we go in here? What if I just sell a call spread? Man, I could sell a 360, 370. Yeah, that's not too bad. I could even go right at the money if I wanted to. I actually think I'm going to sell an at the money. So let's do something a little crazy. Let's do a little something. UNH. Doesn't Oracle have earnings tonight too? Oh, we got to do something in there. I want to get to more of you guys. I'm going to do this UNH. Thank you for bringing this to my attention, Ahmad. We'll go ahead and do this. Hang on. Let me write this down. UNH. Ahmad. Got it. All right, Ahmad, you're in. You're in the little black book of secrets, which is who I call out if the trades don't work out. I call you out. I send you an invoice. You just have to absorb like 80 to 85% of the cost. That's not that big of a deal. And so 350, 360 is going to be the strike selection on the short call spread in UNH. Let's do it. And then I want to do something for Oracle, man. Oracle owes me so much money, like so much money. It's always so funny when I hear people say like, you shouldn't revenge trade. Like, you shouldn't worry about, what the stocks owe you or whatever. It's like, nobody actually trades that way though. It's like, yeah, sure, we can all pretend like we're robots, but we're not yet. We're all just human, right? The humanoids are coming, probably, May or June of 2027. But for now, being fully human, you gotta do a little revenge trading from time to time. But let me get this UNH trade on. It looks like maybe 418. The markets are not that great in UNH. All right, so we got Phil. We got Phil at 428. How about that? All right, let's go to Oracle. I think they have earnings tonight, right? Let me just double check really quick. Man, I kind of want to. Yeah, it's tonight. Guys. So let's just go into the 3 days. I kind of want to sell an out of the money call. I kind of want to go naked call on Oracle, but we'll do it in like the 38-day cycle. Yeah, that's a little crazy. Maybe I don't even think I can do it from a buying power standpoint. If I sell a 35 delta call, that's going to be yeah, it's about 9% of the account. We could actually do it if we went ahead and kind of stretched the upper boundaries of the position sizing range where we like to live. Just give it a little bit of a stretch. It's a very, very temporary thing. But it's only Tuesday. I try to keep things somewhat on the rails Monday, Tuesday, and then they start to shake and they start to rattle. And by Friday, we're completely off the reservation and we just kind of do whatever we want. So I'm not going to do this trade, but I do want the world to know that this guy was on my radar. But we are going to play it to the downside, of course, because we have to get back some of the money that Oracle does owe me. Let's go into the 3-day cycle, though. Believe it or not, but I'm not going to do a butterfly. I am actually going to do, let's buy a 245 and sell a 235. So let's just do a very simple, straightforward risk one to make one in the 3-day cycle, a long put spread at the money, nothing crazy, no tomfoolery, pretty easy to follow, very simple trade, and very easy for you guys to fade, of course. And so I think this is going to be the trade. So let's go at 525. We'll try to get it filled. Can't get filled at 525. Let's try 528. See if we can get filled here really quick. Let's see. All right, filled at 520. All right, beautiful. So thank you guys so much. But I gotta get to the beginning now. Man, this is nuts. The show's almost over. That's crazy. And we didn't even have any educational stuff today, which we're gonna have some more next week, by the way. I'm not sure what that's gonna be on yet, but I'll figure it out. And so let's see. Joe's in the house. What's going on there, Joe? I see you guys before I put my comment in. I see Scramble, everything's in the house. Grumpy Mike in the house. Brian Dowdy's in the house. Joe says that UNH is killing me. Yeah, I think a lot of people are probably getting hurt on the big rally in little old UNH. Let's see. Andrew Cortado says Pixel is fine, but you don't have the A17 chip. Yeah, I don't know what that means. So I'm going to pass on that one. Theta Trader's in the house. Dr. Jim, this is the place where I would normally place a question. Well, thank you, man. Thank you for being there. And you know what? You didn't ask a question, but we still win. Like you win because you're here. I win because I'm here too. But we all win because now that you put that comment in there, the algorithm thinks that this is a better show than it actually is. And so thank you very much for putting that very plain vanilla comment in there. But again, the algorithm doesn't know. They don't know at all. And so let's see. Oh, you guys are still talking about the Apple event. Scramble everything. Samuel, happy Taco Tuesday, Doc. Markets are spicy. Yes, they are. Gyms are packed. And macros are definitely getting tracked. Yes, that's correct. Are we chasing gains or just extra salsa on the P&L, bro? I'm not a salsa guy. Right? I'm more of an applesauce guy. As you guys know, I'm more of a tuna fish and applesauce guy. Not a big salsa guy, but I'll do it from time to time. But let's see. Samuel goes on to say, Samuel says, Doc, he says, I love the tuna and applesauce story. Well, thank you, my friend. Totally relatable. Back in the day, I used to mix cottage cheese and canned tuna. That's what I'm saying. No seasoning, no sauce, nothing, just pure shredded gains, suffering. And then Samuel goes on to say, is this the Oracle revenge trade? So how much are we planning to recover from the last earnings bruising? Or are we just here to chase our losses in style? I think we're kind of doing both together. So you've got the Oracle earnings trade, but let me make one quick comment about the cottage cheese and the tuna. So I'm assuming based on your comments and what I've gotten to know about you, Samuel, what I've learned about you being part of the core position, you were going with chunk light tuna, right? You weren't going with the albacore stuff because that stuff actually tastes pretty good, right? Especially if you go like albacore, like in oil, that's a completely different conversation. Like we're talking chunk light, smells like, basically, cat food, right? Like wet cat food, basically is wet cat food in water, right? They packed it back in 1984 and there it is on the shelf for your consumption, 2025. Like there you go, 100%. Or when you did this back in the day, 2006 or whatever, right? Cottage cheese and tuna fish, that's a power move, man. That is a 100% power move because with the tuna fish and applesauce, I took the tuna, which is a huge gotcha, and I lay around some applesauce, unsweetened applesauce, which is a slight to mild gimme, right? Now, the end result was still a pretty significant gotcha, but I was able to, it's kind of like, it's kind of like when you have a long stock position and you sell some premium against it, you just take the edge off a little bit, right? Like when I was putting applesauce on top of the tuna fish, I was just taking the edge off a little bit. I was just reducing my directional risk on the overall tuna. When you go in with cottage cheese plus tuna, like you are doubling up on your directional risk. There is nowhere to hide. There is no lessening of the risk. This is now a much, much bigger position. Like you have levered up to a point where you probably should not be levered up. And so I just have mad respect for you, my friend. Like mad, mad, mad respect for you. And so, but let's see, where are we at? Trader Ice in the house. What's going on there, Trader Ice? Sergio's in the house. What's going on there, Sergio? I appreciate you, my friend. Joe says, I'm ready to see what Dr. Jim has for the Oracle Revenge trade. There you go. I'll probably still do the call, Broken Wing Butterfly. Dr. Data sent out today, though. Yeah, that's what I would be doing, man. You need to be fading Dr. Jim and tailing Dr. Data. Like, that's how you kind of divvy up the doctors that are on the network here. And so, yeah, he sent out a really, really great looking trade for Oracle earnings tonight. But let's see. Scramble Everything says, Dr. Jim, this is an interesting Oracle Nemesis trade. In the front weekly, a 9-12, a short put ratio spread, 2x2, and then paired with a call calendar at 255. Short the 9-12 and the long the 9-19. Whew, man, yeah, that's a lot going on there. I'd have to really unpack that, and I want to try to get to a few more questions, so I'm not going to do that now. But it does look like a pretty interesting. Is it bearish? It must be bearish. Let me think. If you sell 2 210s and you buy 1 200, so that's a standard ratio spread, put ratio spread, paired with a call calendar at 255. Yeah, you're probably. I mean, I don't know if you're a net credit on that or a net debit. I'd have to look at the debit on the call and the debit on the calendar and the credit on the ratio spread. But that is a pretty interesting strategy where I think you'd have a lot of ways to potentially make money on that. If because yeah, Oracle's at 240. Yeah, basically anything down to the expected move or up to the expected move could potentially be really good for you. And so it's an interesting looking trade that you have there, my friend. Joel James, Dr. Jim, tuna and Greek yogurt, the Faye stuff, only 5% fat, a game changer and protein bomb. What do we do with this UNH move? Get a trade on or wait and see how it plays out. And so number one, on the Faye combination, Faye is some pretty nasty stuff on its own. So nice job, my friend. Again, a power move in its own right. But as far as UNH, I am definitely fading it. We've already done that here with the short call spread. And so there is your UNH trade of the day. And then let's see. Joe says, I had an iron condor that blew through my strikes to the upside. I rolled the call side down like a dummy. Nah, man, hey. Take it easy. Go easy on yourself. Right? Go easy on yourself. Like, this is hard stuff. I know we joke about it. We try to, have fun with it and do whatever, but this is difficult stuff, right? Like, it's always easy from the sideline. It's always easy from either A, the sideline, or B, before the trade, or C, after the trade. Any one of those three scenarios is easy money. Man, it's easy peasy, lemon squeezy, right? You don't have to worry about a thing. It's all going to work out. But once you're in it and you actually have to make real-time decisions, it's a completely different ballgame. And so, yeah, maybe you made a move that in hindsight you would not make a move and you would not make that move. And I'm probably with you. I don't know that I would have necessarily made that adjustment. But hey, we've all been there. I've been there many, many times. You've probably been there before. You're going to be there again, right? And so I think the most important thing is just to recognize when you've done something that's probably not the best adjustment and just try to learn from it and improve. Try to learn from that and move on and try to just, maybe make a better adjustment next time. And so that's what I would say as it relates to that. But let's see. Oh, Andrew Cortado says, Grumpy Mike, if you had the new iPhone, maybe you wouldn't be so grumpy. I mean, maybe it is those extra 6 grams that have just pushed him over the edge. I mean, that could be what Apple is tapping into. That very well might be the case. And so Sam L says, the Holy Trinity, rice, chicken, and broccoli. Of course, the Jim Bro trifecta every time. That's 100% right. In fact, that's what I'm actually making for dinner tonight. So that's so funny that you brought that up. So tonight, my wife is like, she's going to Costco and she's doing a bunch of different things. And so she was just telling me this morning, she's like, hey, I need you to be on dinner duty tonight. I said, I got you. She was like, well, let's do breakfast for dinner. I'm like, we're not doing breakfast for dinner. Cause I'm going to make some fresh Daddy's chicken tonight. So I'm like, here's what we're going to have. We're going to have Daddy's chicken. We're going to have rice and we're going to have broccoli. And so my kids all love rice. My kids all love Daddy's chicken. Obviously they ask for it almost every single day. And then, the broccoli is the broccoli. The broccoli's fine. And so that's actually 100% what we're having for dinner tonight there, Samuel. And so that is some pretty funny stuff. Let's see. Oh, he'd be known as Furious Mike. That's pretty funny. Let's see. Wolf says, Dr. J, what muscle group did you hit today? I actually today was an off day for me. I'm doing a weird split right now, and I'm trying to recover from this like rhomboid scapula type of injury. And so I'm kind of taking it easy right now, only training like every other day for now. And so today ended up being the off day. And then let me think. Tomorrow, I'm not sure what I'm gonna do tomorrow because Friday is setting up to be a chest day. And so I don't know what I'm going to do tomorrow. I did legs yesterday. Tomorrow could be back, but it's like I got to be a little careful with my injury. And so tomorrow may end up being like, I may train like serratus tomorrow. Tomorrow might be like serratus and forearms, right? Or like forearms and calves or something like that. It's going to be something kind of weird. But let's see. Emmett's in the house. What's going on there, Emmett? I appreciate you, my friend. Thank you for being here. Let's see. Scramble everything. He hit the medulla oblongata. Yes, that was, what movie was that from? Was that Billy Madison? I want to say Billy Madison, but that doesn't feel right now that I'm saying it. But that might be right, actually. Yeah, I'm not sure. Not sure at all. Jared Kramer says it's time for Jim. Crack the ghost for my boy today, man. That's what I'm saying. I'll tell you what, though. I actually found a flavor of ghost that, guys, it's actually pretty bad. And we got to keep this just between us. Like, don't let the ghost powers that be know, because again, we're still working pretty hard on this sponsorship. So the sour green apple, amazing. The sour pink lemonade, amazing. Like, everything is pretty amazing, but those two are obviously number 1 and number 2. But they have a flavor in there. I saw it in the case at Vitamin Shop like a week ago. I hadn't seen it before. It's called Straw Bango. So Straw Bango, guys, it's bad. It is bad. Like, so bad, I may not even finish the can. Like, so bad, like I made it through like a third of the can. I'm like, this is bad. And so do not get the Straw Bango. Just double up. Just double up on the sour green apple. Just double up on the sour pink lemonade. That's going to be a much, much stronger play for you from a ghost standpoint. So let me know, Jared, in the chat, what flavor you went with. I'll scroll down after the show. I'll see what it was. Let's see. Raul's in the house. What's going on there, Raul? I appreciate you. And then, Grumpy Mike says, did I miss the time machine feature on the new Apple iPhone? No. You get metallic. That's your new color, and you better be happy with that. And so let's see. Theta Trader says, no, I don't have a follow-up, but I'm curious if Chris Vecchio stole your salmon-colored polo shirt. If so, he was flaunting it on air today. Man, I'll tell you what. I mean, that's just, it's just it's a solid, the magenta. The magenta is a crowd pleaser, man. Like, the magenta, like, it's open for anybody. It's open for everybody. I do not have a patent on the magenta. Now, Magenta Mondays, obviously, that's ours. Like, nobody needs to be taking that. But the magenta shirt, the salmon colored shirt, like, yeah, 100% go for it. Let's see, where are we at? See, Small Trades Often in the house. What's going on there, Small Trades Often? Appreciate you. Andy B's in the house. What's up? Big Deal Donuts. Hey, Dr. Jim, I like this nice shirt. I like the color. Man, thank you so much, Big Deal Donuts. Appreciate you so very much. And then let's see, who else? Oh, David Martinez. I made it for Dr. Jim. Man, look at you. I appreciate you so much. So very much. And wow, we're like out of time. We're totally out of time. It's crazy. Raul says 1 trillion jobs. Yeah, it might as well have been. It doesn't even matter. It's so funny. It's just so funny. And it's bipartisan, guys. This is not a shot at the left. This is not a shot at the right. It happens every which way from Sunday. It's so funny that it just makes me laugh. But anyway, I have to go. And so, guys, I appreciate you. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny rocks, boomer shiny rocks.
What does the Sharpe ratio measure?
Return relative to risk.
That is correct. What is a credit default swap?
It's a credit that originates somewhere else, and it's traded for different amounts across many different parties.
That is correct. It's not gonna exactly match what they have on screen here.
No, you know, come on. I'm not the smartest guy here.
For all the marbles, for the PB&J, what is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that, because I want to see a peanut butter and jelly sandwich get made.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny.
What is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that, because I want to see a peanut butter and jelly sandwich get made.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade, and I'm your host, Jamal Chandler, and he's back. You guys loved the show. You guys asked me about him. You sent me emails, all kind of messages. Matt Cashman, Principal Investor Education at OIC. Sir, how you doing?
I'm doing great, man. I'm doing great. Thank you for having me back.
For sure,
always
man.
a pleasure.
For sure,
It's always
man.
good to sit in the seat and talk to you.
For sure, man. I got a lot of emails, dude, asking me, they were like, great
that's
show,
nice.
great talking to you, great. They loved it, so you had to come back.
I love it. I love it. Well, I'm happy to be here.
What's shaking in the world of options? You've been doing a lot of stuff. You've been doing a lot of different posts on LinkedIn. You've been all over the place from what I've seen, really.
Yeah, I spend a good amount of time doing what I think people call thought leadership in this business. Most of it is talking about options, but some of it's talking about, I have a lot of interest in the cryptocurrency space and, digital assets and things of that nature. So I talk a lot about that too. And there's been some really interesting stuff going on there as well. You know,
There has been. Yeah, you're right. There's been like, I almost want to call it like interesting deals going down, different names with crypto. Crypto treasury is getting thrown around a lot.
Oh yeah,
right.
There's a lot of that going on, which is really interesting about how.
Yeah, what do you think about that? Like, I actually don't know what to think of it, to be honest with you. I'm just, for me, I don't know. At the end of the day, I'm still an engineer in some way, and I'm still a scientist, and I need like multiple data points.
Yeah.
I can't just see one data point of somebody using crypto treasury and kind of surmise like what I think of it. I need, it's interesting though.
Well, there's so many parts of it that are pretty complicated. It's very similar to like an options landscape where you don't, just by looking at one point, like you're saying, you're not necessarily going to be able to see exactly what's going on because of how the tokenomics and all of that stuff works as far as how those, how those deals are structured. And
good word, by the way.
Yeah, it's a good one.
Be a book.
It should be a book. You're right. Maybe we should write it.
I know, right?
But yeah, that's a really interesting space, and there's some interesting things going on there that are somewhat problematic in some situations, but we'll see how they play out more broadly.
Yeah.
But it's an interesting space for sure.
Let's start tiny bit with the macro and work our way into options. Macro being, I don't do super macro, but there's no way to deny what's been moving the market more recently. It was tariffs for a while there. Markets seem to have calmed down from that. It's been a lot more Fed focused, right? Rate cuts. What's going on with that? I guess it really kind of kicked off on the 22nd, so it's about 3 weeks ago. Man, time is flying. And Powell came out and essentially said, their dual mandate was being challenged. Everybody knows inflation reports have still been coming in, hot-ish, if you will.
Yeah.
That started back in 2021. We can go all the way back to stim checks and all that, right? And then fast forward, inflation's still here in the system. And then we have a situation where these job reports, they just haven't been looking that great. Now, most people would expect the stock market to probably be burning a little bit. Most people would expect volatility.
You might expect that. That's one way you could think about it.
What do you think about it? Somebody who's been in trading for, we can keep the platform up. I'm going to go back to that. Who's been trading for well over 20 years, who's traded vol at a high level. What do you think about this environment?
I think it's an interesting environment. Some of the things that you're talking about are obviously interesting for lots of different reasons. One of them is, if you look at it in the context of the broader marketplace and like where vol is generally, that's something that, I get a lot of questions. People ask me a lot of questions about the VIX and where that is and where, where I think it's going to go. And obviously I can't talk about where I think it's going to go, but the thing that I always like to build in when I talk about that is never forget what that thing is, right? Which is really just a measure of the 30-day option in the SPX, right? And it's a measure of the implied volatility of the 30-day option in the SPX. And so I always, when I'm looking at macro things, I always look at it through the lens of the vol trader, because that's what I was for so long. But I also think that there's a really interesting part about that, where when we're talking about, like what I've said is I talk so much about the options and where the kind of rotation of the options flow has gone, and we're seeing so much of it in the short-dated options. There's a whole crew of people that are talking about whether or not the VIX is even that relevant anymore, right? Because of, right, if you think about it, it's a 30-day vol measure, and everything kind of in that space is built around that, right, as a benchmark. But I do think it's an interesting idea to talk about whether or not that's really where, is that the best measure for the marketplace? But from a
versus
macro,
like VIX 1D, like 1 day VIX, which is 8 right now.
Yeah, exactly, right? That's one of those things that whenever people ask me questions like that, I always say, don't ever forget exactly what you are actually looking at, right? Don't just take it at face value for what people tell you it is. What is that thing? What is it actually measuring? What does it mean for, those data points that you're talking about? You're looking at a 30-day implied vol of the S&P. That's what you're looking at. So don't ever forget that when you're talking about it. But as far as the Fed and situations like that, one thing we were talking about beforehand that I think is really important for people to understand is that when the Fed moves rates, they're moving rates in the very front of the curve, right? That's what they're actually doing. And that's the rate at which the banks lend to each other, right? Essentially. And there's kind of like people are tying together some things that don't necessarily have, right? It's the causality and all of that, where they're talking about like, your mortgage is too high and lowering rates, the Fed lowering rates is going to lower your mortgage rate. Well, it might lower some mortgage rates, but you're talking about a 30-year bond out there, right? That's where that is set. And we're talking about moving rates around in the 2-year space. There's a huge difference between those two things, and they don't always move together. In many cases, they move in opposite directions. So again, right, don't ever forget about what, like someone is telling you that those two things are linked. Think about what those two things actually are.
Yeah.
Right?
No, that's a very good point. Yeah. For sure. And when we talk about vol, I was just looking, SPX straddle, for the rest of this week, 55 points, 0.8%.
Okay.
For 3 months out to December, 6% expected move in either direction. It's always important to mention either direction for both.
Yeah.
What does that tell you when you hear, less than a % move for the rest of this week with these inflation reports coming? And again, 6% 3 months out it's relative, right? It's all relative. I mean, nobody knows what's going to happen between now and December, but
of course.
What is that, compared to historical times? What do you think about that when you hear that?
Well, compared to historical, I think it's it's one of those things where it's like
you got a lot of historical.
Yeah, exactly. There's a lot of historical.
I know, same.
Here's what I think. When someone tells me that, my first instinct as a trader is to look at it and say, the last time I traded an environment like that, I was long everything on the board. And as a market maker, right? Like, because you are the person who is providing liquidity in that space. And, inevitably what ends up happening is that the overwhelming trade is to sell options in that space, right? And so you are just there like buying and lowering and buying and lowering and buying and lowering.
Yeah.
And it hurts, obviously, from a P&L perspective.
Yeah.
But that's the first thing that I think about when you say 6%. I'm just kind of like, well, I mean, those guys must be real long.
It's funny you say this, and this is why I love talking to you, because it always triggers stuff that I remember.
Yeah.
2007, and I'm at Peak 6, and one of the guys who was actually on a partner track, late 07, he was buying a lot of oil vol. That was his. So at the time, the groups are broken down into quadrants, and there were certain things that you could only trade. They weren't letting everybody trade everything. Only the partners were. But this dude had a quadrant of like oil and gas, and then consumer staples and whatever.
Okay.
He was long oil. I mean, super long, like late in the year.
Like real long.
Real long. It just kept getting longer through the beginning of next year, and they laid him off in April of 08.
Wait.
Well, you know what happened after that?
Oh. Oh my God.
So yeah, to your point, I mean, we know plenty of times where like vol is so low, right, that the overwhelming trade is to buy, and I think sometimes it's about patience too, right? Like, I mean, it's different from what we're talking, for retail versus market maker. Obviously, you know that. I'm just telling the crowd that like, when you're a market maker, you're paid to take on edge, right? I mean, that's what it is. Versus retail, you should probably like just maybe do a couple and then just kind of wait and see, because you don't have endless funds. And it's a little different.
Yeah, it's a limited, you have a limited bankroll, right? Yeah. I mean, that was the thing when I was trading for a big book, is there was a process by which once you got to a certain level, and usually it was either a premium over parity amount or an amount of just contracts on any one line or any one month. And they were big numbers, but once you got to that, then it was like you had to write up a level 1 risk report, which was, it takes you through this process of like, why do you have this on? Where did you start putting it on? Where is it now? What's the P&L of it? What's the delivered vol? What's the historical vol? Where is it relative to where it has been? Yeah. What's your plan for if it, et cetera? And then there was like level 2. And then there was like level 3, right? And level 3 was
means you got to close.
Yeah. Level 3 was one of those situations where it's like, you better have a good reason to even request the PDF of the level 3 to get started, because things are probably real bad if you had to do that. But sometimes those positions would get really, really big. And I'm someone who, right, I'm a type A person. I like to be right.
Yeah.
And so it's hard when you're like level 1, level 2, thinking about level 3, and people are still selling it to you, and you're like, are we really going to buy 5,000 more straddles, guys? And you're saying that out loud to the desk, and the desk is like, and everyone knows, right, that like you probably should if you have the unlimited bankroll, but it's still hard. Even when you're doing it with someone else's money, it's still hard. Right?
Yeah, and I love that, like, to be right, because I know everybody in our chat feels the same way, and I do too. And that's the thing, right? Like, in those situations where you're getting super long, but then you're convinced somehow to sell a little something against it, and your actual idea works, and you're so pissed off that you sold something against it, right? Like, fighting those instincts at times. I mean, when you're on a trade desk, is totally different. It really depends on seniority level, but just fighting those instincts at times, right? To go against what you feel, it's tough. It really is. It's tough.
Yeah, and I think you always have to remind yourself that you're making the best decision that you can with the amount of information that you have in front of you at this moment. And second guessing yourself in that regard doesn't really do anyone any good. I said that I did an event with the University of Chicago last week where it was 150 FinMath, like financial engineering students that were on like day 2 of their, program, of their 15-month-long program. And I moderated a panel, and our chief risk officer did a presentation, or he spoke. And I remember just talking to them about so much of this process, right? Just this, and saying, one of my mentors when I first started out trading said to me, and this was like on day 5 or something, said to me, trading is a job that will make you more truthful about yourself than anything else in the entire world. Because what you're forced to do is constantly get up and look in the mirror and be like, especially trading options, right? This position is yours. And you had the opportunity to take it off yesterday if you wanted to. There's always a price, right?
Yep.
But when you wake up and you have that position on, you are choosing to have that position, right? It's a little bit like being married in some ways, right? You wake up and like, I choose you, you choose me. Every day when we go forward, we're doing the same thing. But it forces you to be really truthful with yourself about, like, why do I have this on? Can I stomach this? Can I handle this risk? Is this something that I'm willing to do? And when I've got like 18-year-old kids asking me, like, should I go into trading? And I'm just like, I don't know, man. You got to like be really honest with yourself and truthful with yourself and think about whether or not this is something you really want to do. It can be amazing. It can also be absolutely heinous, right? Like, it's one of those things where it has, and oftentimes if you stay in it long enough, you get both sides of that barbell, right?
100%.
And so, I don't know. I think it's one of those things where you just have to be, you got to, like, every day you got to clean the mirror and, like, re-look at yourself again and decide whether or not you're going to do it all over again.
Trading it definitely causes you to be truthful to yourself. And I always talk to people about the wins and losses. You got to learn how to deal with both. I mean, what you said can apply to wins and losses for sure.
Oh, yeah.
And I always thought one of the best traders I ever traded with was a guy who every single day he came in was a different day. I don't know how he always did that, but I've tried it at times. I tried to be like that at times. A lot of times I've gotten a whole lot better than I used to be, but every day was a different day. There was days where he lost $1 million, he made $1 million. You wouldn't know the difference between the 2 days because he was kind of laugh, joke, different ways. Where he was serious at times when he was trying to get a trade on. Mm-hmm. Other times, it was never based off of what was going on that day. Yeah, sure, during the day, sure, he was in it, but once the trading day was over, that was it. I was like, I don't know how the hell he did that. But
it's the goldfish memory thing, right? I mean, you and I have talked about this before. You give it a sports reference, right? It's like the quarterback with the goldfish memory.
Yeah.
You throw 6 picks in a row, right? You still got to go in. If they're going to put you back in, you still got to go in and toss the rock, right? That's all there is to it.
Speaking of memory,
Yes.
I say that related to silver. When I I say that related to silver. The last time we saw silver doing something like this was 2010, 2011.
Oh my God! Look at where this is.
I know.
This is amazing.
There we go. So this is 2011 when it was up there.
I remember it well.
What do you think about silver these days?
We were talking a little bit about gold and silver beforehand. I always thought about this when I was for background, I traded a relatively small relative value book between gold and silver. And
like a pairs trade.
Like a pairs trade, but in the option vol space. And so we were trading the relative value of the straddles versus each other, essentially. It was a very lumpy P&L, obviously.
Long gold, short silver? Or just not the whole time?
No, I mean, no, it was, we would trade it based on where the ratio of the vols were and what the ratio of the delivereds were. Okay. And it was automated. We wrote it so that it was automated. So the thing would just like trade during the day and then, right, it would spit out these numbers as to like, you've got this much on at this ratio. Like, what do you know, and then it would stop and we would like say, okay, like, what do we think about this? And the thing that I eventually the reason why I stopped trading it was because in some ways I started thinking about gold as it's kind of a commodity, but it's also kind of a currency, right? And if you look at it, like think about where currency vol usually is, right? How much do currencies move? Not that much.
Not much at all. It's
right?
In the teens. And gold, and that's why I suggested the potential pair trade because, again, like to your point, gold is typically lower in an absolute vol, right? It's usually like teens, right? Versus
yes.
Silver is like somewhere like 30s, 40s.
Absolutely. And so when I started like researching this thing, I wanted to figure out a way to kind of think about it in those broad terms. And that's kind of where I ended up landing, is that gold is a commodity, but it's also a currency. And so it's going to have elements of the commodity vol space and the currency vol space in it. Sometimes people trade it because they want it as a commodity. Sometimes they trade it because they're treating it kind of like a currency and it moves around in that way. And so the vol and the forwards are going to kind of have, mixed aspects of those two things. Silver, not so much, right? Silver has like strong commodity vibes.
Yes.
Right? And you can see that kind of like in the chart. When it goes parabolic, it gets real funky real fast, right? And that's kind of like where I remember, and I was running the, like right where your cursor is, and that 2010s right before that, right? It was amazing, an amazing run up, but
it was.
That's the way I always think about it, and I always thought about, I always kind of thought about Eurodollars the same way, because there were times when it would act like a currency, the Eurodollar option space, and it was very sticky and very kind of like. Strike specific. And then there were times, especially when it got crazy, that it would trade like a commodity.
That's what I heard about Eurodollars. Yeah.
The Eurodollars would take on it would go like, it would move. And it wasn't like a binary straight move. It would move like it was the soybeans or something, it would move.
I don't want to get too deep in the weeds, but I'm genuinely curious. I really don't know that much of the difference between the Eurodollar and the euro. Was there like a calculation or something? Or
no, so the Eurodollar and the vol on the Eurodollar is the actual overnight London lending rate.
Oh, like LIBOR?
Yes.
Okay.
And so now it's really
right,
SOFR.
Yeah, that's right.
Right? Because they switched over to SOFR after the LIBOR crisis and all of that. And then the euro currency is its own thing, right? Like that's the actual currency that they spend in Europe. And so the euro dollars would, like I said, they would have some very strong kind of currency vibes to it. But then when it went, it would go, and it was like, okay, now we're trading a commodity, right? And it's like, and so I always thought about it in those kind of two ways whenever I was trading it. Particularly, it would turn into a commodity when things got really weird, right? When no one knew what was going on, and that's when you have to kind of switch your mindset and say, okay, we're trading a commodity now. This is all about like, what is this person willing to pay for this thing, right? And that's all that matters. So I think that's really interesting when you're trading something like that.
So is that kind of happening with gold a little bit?
I mean,
Kinda
you would
like
think that is what's explaining the chart that's right in front of you.
One of the other personalities on our network, Chris Vecchio, and we do the show Futures Power Hour, and he actually came up with a pretty interesting term last year when gold was beginning to moon. Narrative flexibility.
Oh,
yeah, and I don't know if I hadn't really heard that, but it totally made sense because sometimes gold is moving up, and it just didn't really make sense how we're moving up in an environment where interest rates were higher, and then now it's starting to move up again because they're going to cut interest rates, right? Like that's so strange. And so to your point, the fact that it moves like that at a time it's choosing to be more of a commodity than a currency is very fascinating. And for that reason, look, we at Tasty, we're always telling people, we're mostly talking about selling vol. We're trying to find the best ways to do it that make sense, that don't blow people up, of course. But with gold and silver, I always tell them, look, this is not is not. It doesn't trade like a lot of the things that we talk about with this IVRs. That's probably more for equities, not so much gold and silver, especially at times like this.
Agreed.
You don't want to be selling upsides or, when it's going the way it is, hoping for a pullback. You just don't know because it is moving more like a commodity than anything. So just be careful. We always tell people that.
I think that's a perfect segue into talking about how the actual optionality part of this is important, right? The defined risk part of how you might trade something like that.
Yeah.
And instead of just going full YOLO and just like selling a bunch of calls or something, right? Like you keep your, I always hesitate to like say this in a strong way, but it's important when you're dealing with something that's moving around like that to keep your unit risk under control. And that's where something like defined spreads come into play, right? Call spreads, call 1x2s, call butterflies, things of that nature. Those are great trades for a situation in which you might not want to take on open-ended risk in a market that's doing something like that. And that's a great place to go looking for things like that, right?
And ETF too. I mean, honestly, this is one of the times where trading GLD versus trading, GC is probably a little bit easier for a lot of people, for those who can't do it. But, I typically don't love ETFs, but
why not?
Some are pretty, I don't know. I don't get, it depends. For a situation, for something that I want a momentum play on, that's why, I just don't think I'm going to get the momentum move that I would like. However, that being the case, the ETF I just mentioned will do that at times. It'll definitely do that, and so will the silver one. So I shouldn't, it's more of a broad thing about ETFs versus just specific ones.
Yeah,
the specific ones I may trade more than anything.
Yeah, no, that makes sense.
But the commodity, again, like it is, GC is a big contract, man. And I think, people should understand. Same thing with SI, even bigger. To some.
Yeah, silver's a real big contract, man. Those are really big. They're not. It's no joke. The tick size is no joke in those things.
Yeah.
And that was one of the things that. Well, I remember once we created that trade, and then I spoke to someone who worked at a different firm, who I was like, yeah, we're doing this gold and silver kind of like vol pairs kind of relative value thing, and he was like, are you trading the actual GC and SI options? And I was like, yeah. He's like, those are really big options, dude. And I was like, yeah, they are. And then I went back and looked at it, and I completely glossed over the fact that I could essentially trade the same kind of thing in a totally different space without trading the full commodities. But I happened to be working at a firm where we traded mostly commodities at the time, and so it was just a natural fit to go do it. But it was, they're big contracts. Like, make no mistake, they're large contracts.
Oh, man, it always sucks. We're at the end of the time, but it just means you got to plan to come back again.
Time flies.
It does.
Yeah. No, I'll come back again. I appreciate it. It does. It really does. Like it's like
I know.
It just goes by so fast.
Time flies when you're having fun. Matt, thanks for coming on. I'll see you again soon, buddy.
Yeah, thanks.
Folks, thanks for watching this show. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock, if you value when opening and closing positions. This adds up over time. That is why liquidity is so important.
Hello, everybody. Well, not much happening, is there? It's another quiet day. Bit of a mixed bag. The ES and NQ were up, not even 1/5%. And the small caps are down about 2/3%. Most of my shorts are down, which is cool. My only kind of stinky trade right now is my diamond puts. They've got about 5 weeks left or so. 5 or 6. So we'll see how that turns out. But otherwise, things are looking pretty good. I've got my charts all ready and loaded, so let's jump on in and see what's going on out there. We begin with a spider. And I guess maybe everyone's just waiting for the CPI on Thursday. Today's bar is pretty much the same as yesterday's, just kind of hanging out in a pretty small range. We're up a little bitty bit at the moment. And the lifetime high on an intraday basis remains back on Friday. The diamonds are up about 1/3%, getting dangerously close to what could be a breakout. I've actually trimmed that put position almost by half because I'm getting a little nervous about this one. In fairness, this is a fairly bullish setup. And if we cross above that line, I'm just going to throw my arms up and be done with it. So I'm about half out as it is, just kind of seeing and hoping how the rest works out. But that lifetime high from Friday is kind of the stop loss for me. The cubes are up modestly, about 1/5%. The lifetime high from back on the 13th remains. And, today's big tech event was Apple, and it was cool, but it didn't really budge the stock too much in any given direction. As we look, for example, at Apple itself, it was actually down. Okay, it was. I guess people just kind of rolled their eyes when it was all done. But yeah, we're down about 1.5% on this. Way far away from lifetime highs, unlike a lot of stocks. Apple's own lifetime high was way back last Thanksgiving. And we have gone from the vicinity of around 260 to around 234 now. Not calamitous, but about 10% shy of the lifetime high. And certainly today's product launch not really moving the dial except to the down direction. On the other hand, Google, Alphabet, is zipping higher, lifetime high on this one. Conversations with folks around here from months ago, they suggested people don't understand just how far ahead Google is in AI, how much assets they have related to AI. All the attention has been to the likes of OpenAI, but Google's got some cool stuff too, it seems, and I think the market's kind of waking up to that. So we are zipping to a lifetime high on Google. China pushed higher again, and at the moment we are mashed right up against this lifetime trend line, which had been support, now it's resistance. In the past, it got close to it, but fell away here and here and here and here. This time, we were all the way up to it. This is the most proximal we've been to this thing since 3 years ago. It's been over 3 years since we've had this kind of relationship to the trend line that we do right now. I'm giving it another go. Small short position on that one, but boy, China is really strong lately. One in particular, Chinese stock, which is quite good looking, is Alibaba, BABA, and it down here completed this bullish setup and has augmented that with another leg higher here, like so. So we might as well, let's just inch that higher. There's a new gap there, anchored to yesterday's high. Let's make that a more appropriate color of green. So yeah, Alibaba is looking quite good. How's the volume on that? Yeah, pretty agreeable, but nothing really special. Closer to home, another big winner today is United Healthcare. This thing bottomed out not that long ago. It hit the bottom back just last month, August 1st. Got down to 234. We are over $100 higher than that now. About a 40 to 50% gain in 5-6 weeks time. Very impressive. Of course, it had been just ravaged earlier. It could still keep pushing, but there's major resistance right here at this price gap, 374.18. But yeah, United Healthcare shareholders having a good day. Okay, the precious metals positions continues here. Let's talk about that. Gold is down a little. The front month at the moment is down just a couple of dollars. On an intraday basis, hit another lifetime high. And my usual disclaimer, I love gold. I wish it well. I want it to thrive. I want to see it at $5,000 an ounce, et cetera, et cetera. But it really seems time for a breather. Honestly, it's gone very, very far. And this has happened in the past. I mean, look at these. Here's this beautiful setup, inverted head and shoulders. Blasts higher, ease back for a few weeks, then do it again. Set up a bullish setup, blast higher, ease back for a couple of weeks. And then we've had this most recent one, very well formed, right triangle pattern, doing, and finally pushing above right here, escaping this right triangle and zipping higher. And maybe it'll keep going. You know, we haven't been rallying that long. We've had 1, 2, 3, 4, 5. This is 6 trading days that we've rallied after that setup. And you know, sometimes it goes on for weeks. But it would be very appealing on the buy side if it could ease back down to that gap for whatever reason. Of course, everyone's waiting for 8 days from now, the FOMC, see how big the interest rate cut's going to be. I mean, almost to the minute, in 8 days, we're going to experience the post-Powell press conference, whatever it is, up or down. Maybe that'll drive gold lower. If it does, that sure would be an interesting place to get in. Silver is actually down right now, more than gold. And as I've mentioned, we have hit our targets. It's done. So we've done that, mission accomplished. And it would make plenty of sense to get some subsidence in these values. You can see this reflected in PSLV as well, the Physical Silver Trust. This was the target. And as we zoom in, lovely, hit it. And a few pennies to spare, just for the heck of it. So my point is that I am very short term, bearish, not wildly so, but on precious metals. And the only thing I've done about that is shorted GDX. For no particular reason, actually for no logical, no, actually there's plenty of good reasons. I couldn't take it anymore. I've bought palladium again. Palladium, I don't think it necessarily has to be aligned with whatever gold is doing. Maybe I'm wrong. Long term, the chart is just too compelling for me to sit out anymore. So earlier today, I got back into PALL. If all precious metals plunge, well, shame on me. But so I've got a bearish and a bullish position. So the bullish one is palladium, and the bearish one is this one, the GDX. And at the moment, we've got a bearish engulfing pattern on this. Candlesticks aren't that powerful. It's just a little bit of an indication of exhaustion in the rally. And earlier today, we had a lifetime high on GDX, but it's down at the moment. So we'll see if that does anything interesting. The juniors, same deal. GDXJ down about 1.25%. And one of the individual miners that we've featured here many times is actually up again, DRD, like so, a beautiful push. But again, I would be inclined to take profits, just from my point of view. So as I mentioned, still got all kinds of shorts going on. Most of them are down. Overall, it's a more down day than an up day as far as that universe of 20 positions. Here's a few, aren't necessarily down, but some featured items here. Accenture, ACN, this is like the third day in the row I've mentioned this, and I just really like this chart. I really like this setup. And it's moving down nicely, 1.58% to the negative. Here's a new one, Caterpillar. From this distance, you can see just how lofty this is. We're going to zoom in, and you can see that the lifetime high on this was back on the last day of July. And we've been just kind of meandering for months here, month after month. Pretty tight stop on this one, just above that dashed line. So got to stop at 425 on that. Cracker Barrel, once again, dropping. This one being a very good performer for the bears, like so. Just a little bit of a fight back here, but on the whole, a good direction. Carvana is up a little bit, rather speculative, not really a pattern here to speak of, but exceptionally expensive from a fundamental standpoint. XHB finally behaving itself. I was really drumming my fingers, getting impatient with this one, but finally flipped almost 3% negative. And good. Appreciate that. So yeah, XHB breaking down. And an individual one within that, which looks pretty good, and I'm sure it is DR Horton, DHI. Zooming in here, this one closed its gap and then a little bit more. The gap itself was just a little bit below where that dashed red line is, but we pushed all the way to it, and then now we're starting to slip away. So that's DHI. Dollar General, I've mentioned this one hand in hand with Dollar Tree. This is the one I'm actually short, and I was belly aching that Dollar Tree was weaker. Well, for a change, DG's doing its thing, so that's good. DG's down about 3.75%. That's moving the right way. Whereas its compatriot, DLTR, is down almost that much, but as I said, is a better performer for the bears, really breaking down more steadfastly. XLB has also gotten its act together. On the downside, we've looked at this analog a number of times, and I've tightened up the stop on this one, but we're on a nice little tumble on this, 1.75 down on XLB. So just to wrap up with a couple of last symbols, here's an odd one we look at on occasion. This is a chart of the percentage of stocks above their 200-day moving average, and obviously that can be from 0 to 100. It really doesn't go to those extremes, but those are the theoretical limits. And at the moment, it is hanging out around, looks to be about 64 or so. And so you can see here, this long period of stability, and obviously that broke down hard with the tariffs and the Liberation Day and all that, and it recovered, but it's really, the breadth of that rally is kind of stalled out at this zone. So it's pretty, very much healed, as you can see from that April mayhem. And even though we're not in earnings season per se, there is one notable item which is going to be announcing after the close today, which is Oracle, ORCL. Oracle was at its own lifetime high just on the last day of July, and we have slipped somewhat, bounced strong recently, but not a lot of dynamism here. But this would be one of the very, very few items with corporate data coming out this week, so that'll be worth a glance. So tomorrow is the PPI. Don't know how much influence that'll have on the market. We'll see. But I will see you then. And thanks for coming by. See you on Wednesday. Bye-bye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
Do you remember Gilligan's Island?
It's near and dear to my heart. Every day I come home from school, what do you want to know? Let's sit right down and hear a tale of a fateful trip that started from a tropic port aboard this tiny ship. 5-6 passengers set sail that day for a 3-hour tour. See, you didn't think you were going to kill Gilligan's Island.
3-hour tour. Which one was Bob Denver? was it this here? Which one was Bob Denver?
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move. The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we're back, my friend, and you know what that means. Time for a little bit more Tasty Live with the closing bell, my friend. What a closing bell it is. Even the S&P is trading 940,000 cars, up $12.25. This is the worst down day ever, Sosnoff. NASDAQ up 58, Russell down 17, and the Dow up 154. Volatility only in by 4 cents. Been strong all day at the lows. I'm trying to talk here. At the lows.
I'm sorry.
Of 1630. Bonds down 11, 117.03. Bitcoin down 800 after being over 113. That's 113,000, flirting with 114. It's 111.6 right now. Ethereum basically unchanged, down small on the cash, up on the futures by $7. Oil up 44 cents, and gold decisively red by $2.50.
Well, it was up like $30 this morning.
Yes, it was. A big mover to the downside. AVGO down 7 and change. Crowd down 5. Apple down 360. Can Apple even innovate anymore? Do they know how to innovate?
It was so funny. You know, they bid Apple up in anticipation of that conference, and then it's been down like, you know, whatever, $5 or $6 straight since the conference. Yeah, I mean, they just continually disappoint. But some stocks had huge moves today. I mean, here's the crazy thing is Bitcoin was up like $700-800 this morning when we did the show.
Yeah.
And as Bitcoin starts selling off, I'm watching Coinbase. Now, the IV rank is really low in Coinbase, so I didn't really do anything.
It's up $16.
I know. I'm saying it's up $16 as Bitcoin got killed. So that was weird. Also, the big one today was UNH. Oof, I got hurt in there.
Up $27. Hard to defend that.
No, not good for the good kids. And we also did not do well in Google today, up $6. And we've had a little bit of a short Google position here.
You had a short Apple position too, though. So let's,
No, I didn't have Apple today. I covered that Friday.
Oh, I told you not to cover that. I mean, you're unbelievable. You never listen.
Oh, I feel so bad.
You should.
Yeah, I mean, I scalped a little bit today, but I didn't really do that much. Had a couple stocks that hurt us today.
Palantir up $5 and change. You talk about crypto and stuff like that.
Yeah, but Palantir's got another one with low IVR.
They're all low IVR.
I know the only one that really hurt me today was UNH. Although Google didn't help. But Google was self-inflicted. UNH was short premium. Russell's super weak today. Everything else was pretty strong. S&Ps, I've been leaning on the short side all day long. I think I sold them 8 or 9 different times today in the ES. I'm short them now. I was betting on a down move into the close because they goosed them the last 2 or 3 days into the close. So we'll see.
So that's like black on the.
It's called the gambler's fallacy, Mr. Batista, and I'm betting on the gambler's fallacy because everybody likes a gambler's fallacy. It might not work, and you might not believe in it, but it's the best thing we've got sometimes.
You're just trying to be popular. That's why you're doing it.
That's right. I just want to be popular.
I get it.
And then you have a little Oracle for earnings tonight.
Oracle and Chewy also, right?
Yeah, well, Chewy, you can do whatever you want. I couldn't care less.
Oh, wow.
I mean, Chewy, look, good luck.
Friends now.
You tell me find your trade in Chewy and tell me what it is.
Chewy, IV rank of 46.
Yeah.
Stock in nowhere land. $3 and let's call it a $4 expected move over the next 3 days. Stock's 42. Let's call it. Nothing to do in there, Sadnov.
I told you that. I could have saved you a trip. Nothing to do in there unless you want to do a 30-cent option. And the other one where there's also nothing to do is GameStop.
And GME, the once mighty GME.
Now, I haven't traded GME today, but I have to give an interview tomorrow on GME. For some reason, somebody thinks I'm a meme stock expert, which I question that. But happy to do
it's not a crowded space anymore, Sosnoff, so you can be
It's not a crowded space, and I love to rip on Ryan Cohn.
A couple of years ago, when it was a crowded space, we could not call you an expert. But now that all the experts have left and gone to crypto, we can now call you an expert. You're the best available expert we have, Sosnoff.
I also love dissing on Ryan Cohn. But if you take a look at
low IV rank in here of 20 with a $2 expected move.
Yep, you have a $2.50 expected move. The stock's trading, let's say 23.5. You look at the 21 puts, they are 39 cents. And if you go, it's going to have a little bit of call skew in here, of course. But if you go 23.5 to 26, the calls are 50 cents. So if
you're not looking at the 3 days, you're looking at the 10 days.
Oh, shoot. Oh, yeah, it's even worse than I thought. Oh yeah,
I could, ladies and gentlemen, I could read minds now. Like when he's making a mistake, my little bat senses start going a little haywire, saying, "You know what? He's off. He's like a man who went out 5 days in a row."
The expected move strangle is crapple at about 76 cents. So if you want a better,
you gotta be directional in either one of these. I don't have a directional.
If you want a better play,
sure. This I gotta hear.
Well, you can go at the expected move in GameStop and collect 76 cents, or you can go 2 times the expected move in Oracle.
ORCL
for 93 cents.
Oh, I'd rather do that with 3 days to go.
Yeah. I sold.
Well, I mean, you're talking about a $200 stock versus a $20 stock. Also,
No, I know, but you can go 2 times the expected move.
I get it. I heard you the first time.
And the 200, 295.
The 200, 295.
Yes.
103 mid price.
It's exploded just now at premium. Literally exploded.
Literally.
I just sold that a couple minutes ago at 93
cents.
Now I'm selling it. This is how crazy this market is.
At
Now I'm
102.
selling, what? 102, 103?
102.
Yeah.
Same strike. 200, 295.
They just bid up these cheap out of the money options like there's no tomorrow. Yeah. So I'm going to do something.
203, they had to have it.
Yeah. I mean, look, I'm telling you, it's unbelievable. They just had these things at
10 cents lower. Yeah, I get it.
Actually, what am I doing this for? I could just hit both bids. I'd do better.
Ladies and gentlemen, watch my friend mess up here. It reminds me of the movie Scarface. Or when he says, take a look at my friend. Watch my friend. Watch my friend. He's going to make a fool of himself.
Watch my friend. I
look at my friend. He's going to make a fool of himself. That's my best Cuban accent, by the way.
That's pretty good.
Go ahead. You got your puts at 54 cents.
And he missed the calls. Almost missed them, but I guess
you got a partial. You got a partial.
I know. It's way better to do it as a spread. That's all I'm going to tell you.
Wait a minute! You just told me I could do it better if I just do it piecemeal.
I did tell you that, and I was obviously wrong. Obviously wrong. I was.
Oh, you better go down a penny on the rest just so you can do this at 103, maybe.
You can't do 103. Good luck.
But you already did the 54.
It's way easier to do it as a spread.
Almost filled at 102 or something like that. I don't know.
I got what I want. I'm all good. I got a couple more spreads to sell, but I think this is the best trade on the board. I mean, Oracle was way outside the expected move last time. I don't think it can do it again. Maybe it can.
$23 expected move over the next 3 days or so.
Yeah. $23 expected move. It's 2 times expected move. 295, 200. Stock's 242. Perfect.
Free money, as they say in the world of you highfalutin guys.
Highfalutin. ES up $10. This has been the worst ES trading day. It's been down 2, up 12. Didn't we say this morning it had like a $17 expected move? Best trade I made all day was on the opening. Pre-market selling the ES Strangle. That thing never even saw the light of day.
This is true.
It was like $3 an hour, a half hour later, and then it was $2, $1. Now it's $0. That was probably the best trade. I wish I stuck with it. I just wanted to prove a point. Bonds week all day. We did buy some notes at something and sold them at 11.5. I think I bought them at 6.5. Sold them at 11.5. That was a good trade today, but if they get cheap,
very good trade. That was one of your best.
Yeah, if they get cheap again, we'll buy them. Man, there's a lot of stocks though. I mean, Nasdaq's only up 46, and there is a lot of stocks that that are green on my screen, and it's the same. Let's be very clear. It's the same cast of characters.
Yeah, I think the team came out with, and many people come out with how it's not as broad based as you would think, that the top 10 stocks have really been controlling what the market does.
Yeah, there's nothing new to that.
Aside enough, how do you feel about the Bears president? That's the Chicago Bears president. After the way they played last night, coming out and saying that they're setting their sights on Arlington Heights for a new fixed roof stadium.
Setting our sights on Arlington Heights. That sounds like it's a made-up rhyme. We're setting our sights on Arlington Heights. Yeah, the only problem is you're going to have to write the check for $4.5 billion.
No. Arlington Heights is doing it with the Chicago Bears. Super Bowl of 2023. Sosnoff, what do you think of that?
Well,
Coming to the suburbs, just like the rest of the
people. You're talking about 2033?
2031.
Oh, 2031. Okay.
Yeah.
I cannot believe. I really hope that Chicago does not make the same mistake they made in San Francisco, or LA for that matter. They built these stadiums in horrible locations outside the city in the suburbs, and I just hope that this
Arlington Heights is 20 some odd miles out of the city.
Arlington Heights is Iowa. And I really hope that this is a mistake and that they don't do it.
I think it's a beautiful plan myself, to be honest with you.
I hate it. I hate everything about it.
26 miles, Sosnoff.
26 miles and 2.5 hours in traffic if you're lucky.
It's not 2.5 hours in the city traffic because you people are fixing everything everywhere because you didn't fix anything under other administrations, but that's neither here nor there. It's 26 miles.
It's 26 miles in 2.5 hours. I would rather, I would chop my fingers off. And and those poor season ticket holders, they are going to get so screwed because they're going to have to buy the PSLs for like 200 grand a piece. It's going to be ugly.
Pete Klink better start saving his bratwurst. He better be making only 3 brats for the next.
He's already out.
Games.
He said he's not driving to Arlington Heights.
He'll probably take the PJ.
He'll take a helicopter. Yeah. All right. Let's see what we got here. As we got
even the S&Ps of 12. So I don't know if you made your bet in Oracle. You got filled on all your stuff. Probably about 102-ish as an average.
Oracle, yeah. I mean, the premium in there is, where are these things now? $1, yeah. The premium there has moved all over the place. I mean, it's really rare that you see a spread. I had trouble filling it at 93 cents, and the next trade was $1.02.
Yeah, dollar spreads don't move 10 cents that have no delta to them.
That's right.
That's all volatility, right?
That's all volatility.
Right.
Yeah,
I mean, the spread has one negative delta, not even. Yeah, not even. It has 0.3 negative delta to it.
Yeah,
not even one.
Yeah, it's
all volatility related.
Yep, I agree. And like if you're wondering who buys this crap with 10 minutes to go in the day, it's everybody who's short the at the money stuff.
Sure. Looking to use less buying power, define the risk, take units in, that kind of thing.
Yeah. Yep. Yeah. If I was short at the money straddles and Oracle, I'd be buying this crappy wings too. The at the money straddle in there, just so you know, with 3 days to go, what do you think it's trading for? Expected move of $23.60.
$23. What's it trading at? 26?
No, almost 25.
Okay, well, I mean, listen,
I'm just saying.
I mean, I didn't say 20. I didn't say 22. Or 23.
It's all I'm saying is it's pretty rich. Who knows?
Yeah.
So if I sell a $25 straddle, I'll buy the wings too.
Sure, would make sense. And as your risk manager, I would demand it.
All right, looking around today, stocks that we're not happy with their performance. Reddit up $8.50 after being down. Remember, Reddit was down 10 yesterday. Coinbase up 17, Amazon up 3, Palantir up 5.5. Oof. Meta up 13, Nvidia up 170. Oof.
This is your market, Sadnov.
Apple down 4. That's weird. UAL down 2.5. How's Baidu down and Baba's up huge? ABGO's down 9.
Yeah, Baidu's been on a little bit of a tear lately too. Take a little breather.
And let's see, CRWV, which was moving a lot this morning. No, it's only up $7.50 now. Anyway, that's where we are. So the question,
Sadnov, did you have any of this QMM stock?
No, I did not. Thank you.
Oh, I'm surprised because it looks like, as you said yesterday, it looks like, what did they discover? Cancer or something like that? It's up 2,000%.
What is 2,000% from $1 to $3?
No, from $2 to $252.
$2 to $252. That seems reasonable in a day. In one day.
Yeah.
Nice.
Seems reasonable.
Yeah.
What was? I'm serious. Like the last 5 days, what's going on with all these stocks?
I don't know.
Seems a little bubblicious to me. All right. Anyway, cherry picks. Talk to me.
I mean, when a stock goes from $2 to $250, you think that's a bubbly?
I think it has been in the past. Now, the past is not indicative of what the future will bring. But cherry picks, gold and silver.
Yeah, but they're gold and silver. You know, they've already reversed today. I think what's more interesting is that the S&Ps are 65.20. This is what we talked about yesterday. They could get up towards, you know, this number 65.20 to 65.30, and they're right at 65.20 right now. I think it's a big number. This is they failed at 65.40 the other day and dropped, you know, almost 100 points. This is where the longs chomped, and I think they might chomp again here.
Time will tell. God bless you.
We actually, if they rally them up on the close today, it would be the 4th straight day where they goose them into the close.
And does that mean anything in the world of trade?
I don't really know if that means anything.
Okay.
But the real takeaway I have from this is almost never sell a dull market.
Yep. Yeah. Agreed. Never sell a
Because
paper.
I don't really, the only thing I can think of today is that this is just a dull market.
Yeah, and I think today we had volatility up for most of the day. I know it's down 5 cents right now. I thought we were going to get a little bit of a reversal. I could have saw us down 30, 40 handles today, but they quickly stopped that.
Yeah, I made about 45 trades today. I wasn't that busy. I didn't feel that busy. But we'll see. I'm surprised by this rally. I sold some futures a couple handles ago at 65.17, and I thought it was a good spot. And I'm reluctantly holding off until the close to sell a few more because I just feel like this has been pretty. This is after the move back earlier this week. You know, what did we make a low? Was it 2 days ago, but then really 5 days ago, right? We opened down 50 or something, 50 or was it 100? I think it was 100.
Yeah, 100, right.
It was 100 and then rallied back, closed down 50, and then we've been straight up since then. So since that low, 63.75 to 65.21. Okay, so basically 150 points.
Yeah, without a down tick.
150 points without a down tick. I mean, I guess that's normal.
In today's market.
150 points without a down tick. It's almost 3%. 2.5, but no down ticks. Yep. And bonds are kind of the same price. And
well, how about you say hello to my little friends from overtime? You want to do that?
Yeah, sure. Let's go.
Let's go. Bring them in.
Extraordinary lack of enthusiasm from the man in a beret. He said, yeah, sure, whatever. Do whatever you need to do. Whatever we got to do. Let's just get this over with. Okay, let's just come on.
No. That was not a lack of enthusiasm. That was just, I was tempering my excitement, Dylan.
Oh, yeah, okay. Because I'm a cable news professional, and I come from a school. You have to amplify. You have to exaggerate your emotion. And so, like, please come back after this commercial break. You can't be like, oh yeah, maybe come back if you want. Maybe.
That's the beautiful thing about digital. Like when you're on a cable news network, you're basically totally conflicted because you're being bought out by some some poor sucker who subscribed, who has to pay $6 a month or $10 a month into his Comcast subscription just to watch you cable news hosts ramble on because of a bad deal that was made 25 years ago.
They got jacked into a monopoly from the 1980s.
That's right. I just wish those cable news networks for one day had to go fend for themselves without being, without a sweetheart deal where these poor bastards, like, it really bothers me that I have to spend $10 a month to support Bloomberg and CNBC. I don't want to, but I can't get rid of them from my cable package.
Just so you can pay Joe Kernan $10 million a year to annoy people?
Well, Joe Kernan doesn't bother me. The reason that Joe Kernan doesn't bother me as much as other hosts, because at least he speaks his mind. I don't have to agree with him, but at least he speaks his mind.
But at least you know what you're dealing with.
Yeah, at least you know what you're dealing with. What bothers me the most is people that don't speak their mind.
Like who?
I'm not going to name man. Come on, man. Don't give me.
That was good, Dylan. That was good.
Mr. Speak His Mind will not speak his mind. Let the record show.
I do speak my mind, but I don't want to throw somebody under the bus or throw
fair
multiple
enough.
people.
Fair enough. We won't know. We don't throw people. We don't talk bad about individuals.
No.
We just talk about collective individuals.
Yeah,
that's fine.
My phone's listening to us right now, and it just asked me, would you like to see visual intelligence? I don't even know what that means, but it's asking me if I need visual intelligence.
That's a real hit because we're all on camera visually. So apparently none of this counts for visual intelligence.
Yeah.
Yeah. Skynet has decided we're worthless already.
It's listening and deciding if it should jump into the conversation.
One word: inference. Write it down, study it, know it, love it. Tagging is dead. Targeting is dead. All data through AI is now inferred.
It all is.
All right, boys. Well, before we kind of, before we really just
zoom into the close as the E-mini S&Ps were up.
I was going to say kind of just limp in. We're right at that $17 expected move for the whole afternoon, the whole day. This is the number yesterday, Ilya, that and Chris, that I said we needed to get up to was 65.20 to 65.30, and we're right there. This is where we failed from the other day. 65.40, I think, was the high. So we are right in that range.
Yep.
I think this is what you wait for, and this is maybe a good spot to enter from the short side. What do you guys think?
I'm short from about these levels just about a month ago. And I've been sitting near the top of this range, basically waiting for things to happen because the risk reward really hasn't changed. And so I'm still there. I like that the dollar came back today a little bit, despite the fact that you didn't really have any kind of a meaningful retreat in the bonds. You didn't have gold go very far, though it didn't rally again. And all of this seems to be setting up for the data tomorrow and the day after on inflation, and it seems to be setting up in a way that puts risk on the risk-off side of the ledger, let's say.
I think all this is setting up so that the number is going to be really good, and the market's going to try to rally, and it's going to and hopefully fail. Chris, what do you think?
Good as in low or good as in high?
I don't know what you're hoping for because I get confused by that stuff. So I don't know if a good number is a good number or if a bad number is a good number. For me, when the markets want to go higher, bad is good and good is good. And when the markets want to go lower, everything is bad. So I don't know that the number really matters. I think the market right now is very strong based on the last week. And I think that it needs to fail into strength. But Chris, we're going to run out of time here. So what do you think?
Well, to play off of Tony, Tom, you always know I tell the truth. Even when I lie, I tell the truth. Little Scarface for you. Yeah, I mean, the market's poised for upside still.
Don't you ever quote Scarface in front of Tony.
He started off the show with bringing us on with a quote.
But only he can do that. You don't have the right accent. He doesn't like when you're stealing.
Don't show me up, Chris.
We were in this together.
We're two shirts. Why two shirts? What does he need two shirts for? for? I don't.
We're the tree Italians, Tony. We're the tree Italians. We're supposed to stick together.
It's very good.
Dylan, that is a very good question. Why don't you ask him again?
Like, why two shirts? What is it about the second shirt why not wear one shirt? Are you in some sort of a laundry, like, is there some sort of laundry agenda? Like you're trying to use.
You got a quota, Chris? That's what he's trying to say?
You got a laundering quota?
We are living in the era of t-shirt and loose knit cotton shirt, linen shirt fabrics in the Vecchio household. And so we double up here on these 72-degree days when it's not quite warm enough for a t-shirt, but I don't need a sweatshirt.
So this is like a fashion positioning.
This is me looking like I'm getting dressed in the morning for work, Dylan. Okay. And I have to be a juxtaposition here. You got Tom shopping in the Richard Lewis collection from Target, and Tony's doing Miami Vice. I'm doing my best out here, man.
You know what? I'll let you win.
I don't understand the second shirt. I mean, I don't understand what's the second shirt. I don't understand it. I'm going to be honest.
Plead the fifth, Chris. Plead.
I mean, I don't like to do laundry as it is. If I had two shirts, it would be a disaster.
It's been lazy boomers.
Let these people go and figure this out on the next show, which is called Overtime. Peace.
Yeah, see ya.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks. Thank you, man. Thank you. I really appreciate it. Very kind word.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading.
Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at. When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We're teaching Dylan Italian here on Overtime. It's Tuesday, September 9th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. Here to take you through the rest of this hour as the futures market closes at 5 Eastern, 4 Central. If you're on the platform, Tasty Trade on the website, tastylive.com. Welcome. Tell us what you think in the chat on YouTube. We had the Apple event today, gentlemen. Dylan, we don't need to teach you Italian. Next generation AirPods will have live active translation in them. Oh, that sounds cool. So much for needing to be autodidacts in the future. We'll just have, those universal translators like in Star Trek. Cool. Either way, though, that's not the big news of the day, Dylan. The big news, of course, Ilya, the job revisions, birth-death model adjustments, an economy that's being overstated, 50 basis points of cuts coming next week. What a world of possibilities we entertain here. But whether or not those cuts come doesn't seem to be bothering the markets or bonds or gold, which if those cuts are coming, gold and silver certainly didn't get the message today. We have oil on the move thanks to Israel going after Hamas and Doha. Okay, that's a new wrinkle. Oil prices do come back in as the U.S. denies any involvement. And then the dollar here, quite frankly, firming up a little bit. Euro, pound, even the yen giving up its gains after rumors overnight that the Bank of Japan would hike rates at their next meeting. Volatility stays pinned lower. IVRs are dipping. I think first things first, Ilya. Yesterday on the show, we were talking with Mike Butler. We put on at least I put on the SPX Iron Condor trade, put it on, took it off, made a quick $90. Thanks, Mike Butler, for refilling my gas tank. So the market doesn't clear out the Friday high. It doesn't clear out the Friday low. We seem to be pinned here.
Yeah.
And tomorrow, perhaps, will PPI unpin us?
Maybe. I think very clearly the markets are waiting for that event risk. You see it today. Bonds don't go anywhere. Stocks don't go anywhere. Gold tries to go somewhere and ultimately ends up basically unched on the day. What's interesting, as you were saying, is that the dollar shrugged off what looked like might have tested its ranges, might have tested its bounds. The Swiss franc was the only one that had a meaningful move outside of norm ultimately in the wake of the soft jobs report on Friday. And you end up with a dollar that essentially resets, especially in the euro. The pound to some extent, but especially in the euro and also to a significant extent in the yen from that jobs report, much as stocks have now reset if you look at the S&P from that jobs report. So you have this thing now, it's a bit of a weird month in the sense that the PPI report is coming out first. Usually the CPI report, or at least in recent months it's been the case that the CPI report has come out first. It used to be some years back that the CPI report would always come in second. No more. Now it's kind of a mixed bag. This time the PPI is first, and so obviously that makes it more important because it makes for a more convincing lead-in for CPI, because that's the one that people really want to know. And if you get that one first, PPI kind of falls by the wayside oftentimes. Not this time and not recently, because the PPI data has been where we've seen the tariff inflation start to pass from wholesalers to consumers. Wholesalers were essentially defending consumers up through last month, up through July, that is, the last month of data. And in July, they pointedly stopped doing it. There was a 0.9% jump just in 1 month of PPI. Most of it was margin expansion for wholesalers, and that's them basically saying, you know what, we're going to take our cut back. We're not going to insulate consumers. You pay. And that's obviously the beginnings of the kind of thing the Fed is worried about, stagflation risk. So if this data is hot again, never mind this rate cut. That's going to happen. It is what it is. The markets know about it. It's priced in. The bigger question is what happens after. And the markets are expecting a very dovish Fed next year. Whereas if this data is hot, they're not going to get it. And your audio.
Sorry about that. Rate cuts, no rate cuts. You were talking in overtime about how the only thing that matters is inference. You seem to be locked in on the AI trade still, despite whatever else is going on in the market. What keeps you so focused on this, your eye on the prize? Is it the fact that we have a NASDAQ that's beginning to break out here again?
And horrifying capabilities that are implied by the ever-present listening and watching. The cameras and audio are in a permanent consumption of data of all of us at all times. The AI robots are now mastering the art of inference. So think of like the Netflix algorithm that recommends movies that it thinks you will like and how it actually does a pretty good job, or TikTok doing a good job of jacking you full of never-ending set of reels that are to your pleasure and liking. I believe this is that on times a million. And so I think that, we're basically in the process of surrendering any sense of sovereignty of human thought or behavior to the total domination of the fact that we are actually as predictable as rodents on a wheel or ants on a hill. And that the matching of NVIDIA GPUs with Google compute knowledge and Apple listening and camera devices offers a stunning value proposition for, like, if people thought that you could make a lot of money back in the day, meaning back in the day was probably like a week or two ago or maybe a month ago, but you could make money back in the day using targeting or tagging. Inference makes targeting and tagging look like a general broadcast ad buy in 1977. And so I think that the entire AI super stack, from the hardware through these data companies, from NVIDIA through Meta and Google, represents a value proposition relative to the sale of goods and services that is incomprehensible. Because the issue is there's always a never-ending list of goods and services. Mm-hmm. And then there is a never-ending list of human beings who may have an interest or an appetite to purchase those goods and services. And the only barrier between sales growth in those goods and services is the ability to efficiently match those goods and those services with those individuals at the time that they're looking for that thing or that service. And as the robots and inference takes on total dominance, it will know when you are going to think to yourself, my goodness, I've been wearing 2 shirts for weeks. I need more laundry detergent. And it will immediately know the moment when that thought crosses the mind of who the person is in your household who buys the laundry detergent at a level of efficiency, the likes of which the world has never known. And I think people will delight in it because they'll be like, the robots know what I want before I want it.
Yeah, I mean, Amazon's been doing that for a while, haven't they? I mean, I feel like I get
doing it. Everybody's been doing it. I just think that it's not about doing it. It's about the efficiency that the new technology allows. It's just the next layer of effectiveness of something that we've all been living with for a decade.
No, I noticed the efficiency in something like my Alexa, where it will send me a message every now and again, like, hey, you might be running low on paper towels. Would you like me to reorder you some? And it's like, what are you talking about? And then I go downstairs. It's like, oh, there's only 2 left in the closet. And because I've ordered enough on a certain frequency and a cadence, like, it kind of knows just to ask, which creeps me out.
The way inference works, and that's a great example, just linear, but the inference knows that human beings who allow their cell phone batteries to go to 0 and lose their charge have 100 other behavioral characteristics that have nothing to do with charging your phone. Like, they know that somebody who allows their phone battery to go to 0 also is somebody who's more likely to be delinquent on a credit card payment, also is somebody who's more likely to, I don't even think they have lists. It's the craziest thing I've ever seen. But it's not the linear correlations you would imagine, like, oh, they're counting the number of days since I bought toilet paper, or they're counting.
Let me plug in my phone then. You're making me self-conscious. I don't want my credit score to drop.
I'm just telling you, inference will tell you as a matter of fact that if you are an individual who will allow your phone battery to lose its charge, that indicates 100 different behavioral characteristics that are entirely predictable. And it's doing that at every angle of every touch point of everything. And it's not just like, oh, it knows when I swipe my credit card, or it knows, when my Easy Pass goes through the Tappan Zee Bridge or whatever. The camera and the microphone on your phone are listening to you all the time. Every single thing that you say, every single thing that someone says near you, every location that you occupy, the time that you awake, the apps that you look at, it is horrifying and brilliant, and will be the greatest source of money in advertising base. It's just ad dollars, right? It's the same way it was advertising for William Randolph Hearst when he was a newspaper king, or for NBC in the heyday of the 1980s when they controlled broadcast, or ABC or whatever, or Meta obviously has been on it for, more than a decade. I just think, or Google, but this next level is going to be at a level the likes of which the world can't even comprehend.
Ilya, that Dylan saying that, it really contextualizes a text message he sent me the other day about the phones and the microphones and watching. He asked me, like, hey, can you delete my search history if something happens to me? And I didn't know what it was about, but now I understand his stress.
I mean,
doesn't matter.
you-
Even if he deletes his search history, it's already in the memory of the robots. The robots know. Doesn't matter.
Yeah, I mean, if you, I suppose if you have to live as though you are in the Soviet Union and the KGB is in the walls at all times, it would sort of the realization of that might get you to behave this way or that differently. Ultimately, for a simpleton market participant such as myself, all of this is kind of difficult to put a dollar value on, vis-a-vis sort of imagining what it means for price at the margin. I completely see and agree with a lot of what Dylan is saying. I mean, there's no question. I mean, that the phones are listening, that there's an incredible opportunity at the lowest hanging possible fruit with inference, just like there always is with any new technology. The first thing to happen is the easiest commercially viable application. And obviously there is a huge opportunity there in advertising. I mean, just scroll Instagram for 10 minutes. You'll immediately see that the thing is adapting to whatever it was that you were looking at recently, whatever you might have said recently, whatever you might have texted recently, in terms
Whoever
of
sent you a DM.
Yeah, in terms of the things that you've recently interacted with, you immediately see ads for adjacent things. This is not like pie in the sky stuff. But also, just like every technology now and for all time, it will alter human behavior. Human behavior will normalize. The opportunity will close in terms of its outsized potential. Like, all of these things happen and will take X number of decades to play out, whatever. The larger question for me from a trading perspective is none of this stuff is not in the market as it exists, and all of the really fancy stuff is unknowable in a publicly traded assets kind of sense until it starts to happen. And so the question for me is, which part of this is not, where is the incremental dollar in this story? Let's say over the next 45 days.
Google.
Okay, well, Oracle is out here today with their earnings, plus 21% here, which would be the best day that it's had in this millennium, which I think is a fun way of describing it. Yeah, I think so. Best since 2000. They're saying, the CEO, Safra Katz, says, we expect Oracle Cloud Infrastructure revenue to grow 77% to $18 billion this fiscal year, increase to $32 billion, $73 billion, $114 billion, and $144 billion over the subsequent 4 years. That's a pretty dang strong guidance here. So total revenues are up 12% in dollar terms, 11% in constant currency terms. Their cloud revenues are up 28% in dollar terms. Cloud infrastructure revenues up 55% in dollar terms. Yeah, I mean, this looks really strong. This would be the best performance that they've had this century, this millennia. Not too shabby.
No. But
Dylan.
again, this is that picks and shovels phase that we've been talking about, right? Like, we know this is happening. Take a look at.
How can you and Sosnoff talk about getting? How can you and Sosnoff talk about getting short in the face of the supernova?
Because it's priced. This thing that they're reporting is known news. We're just putting numbers on it, and that's why the stock is adjusting. But take a look at what. I mean, Chris has it up here. What are NASDAQ futures doing on this? I mean, if you go to a 5-minute chart, is the index noticing? Is this a?
Kind of.
I mean, kinda is right.
It's up 40 points, 30 points here after hours. I mean, this is the thing that Larry Ellison said here today. Multi-cloud database revenue from Amazon, Google, and Microsoft grew at the incredible rate of 1,529% in the first quarter. We expect multi-cloud revenue to substantially grow every quarter for several years as we deliver another 37 data centers to our 3 hyperscaler partners for a total of 71. And next month at Oracle AI World, we will introduce a new cloud infrastructure service called the Oracle AI Database that enables our customers to use the large language model of their choice, including Google's Gemini, OpenAI's ChatGPT, xAI's Grok, etc., directly on top of the Oracle database to easily access and analyze all of their existing database data. So if you've been a company effectively trying to build a bespoke AI system for your company internally, and you're an Oracle customer, you can now just have this exist for you as is. Obviously, the market's treating it nice, but this goes back and forth with the question we talked about AI adoption.
Is it treating it nice? Because again, look at NASDAQ futures here. They're at the top of their range going back to Friday. They're not even approaching their top from mid-August, where they set their high. Now, if they run, okay, Oracle, yes, it's responding. We also saw Meta jump to 12, 13%?
Yeah,
on its
13%.
earnings. And what did that do for the Mag?
We haven't done
What did
anything
it do
since.
for NASDAQ? Not a thing. So again, my question isn't about the validity of the progress or what it means for the individual companies. That the price action answers those questions. The markets would tell you if this is nonsense and if this isn't real. They're rallying. They're telling you it is.
Well, I think
What does this mean for the markets and not these individual names? And what the markets are telling us is it means nothing.
Well, could I point out here that reading off these numbers, I haven't mentioned the earnings or revenues relative to expectations. Oracle's EPS was only 147 against an expectation of 148. Revenues were 14.92 billion versus a projection of 15.9. So arguably both missed, and the stock is still up 20% plus after hours.
Well, this is the whole thing.
Because people care about what's coming down the pipeline. They don't care about what's in the rearview mirror if it means sunnier days are ahead.
But again,
and
they only care
business that's
for
gonna grow.
the name, for the individual company. It's not going to broader sentiment and hasn't gone to broader sentiment in a month.
Well, that may be changing here, Dylan. I'm looking at this chart and it kind of looks like it's edging up and out of a consolidation that it's been in over the past few weeks, which is better than you could say for most Septembers when the NASDAQ and the S&P usually take a step back. Perhaps you could opine on this, Dylan. Why isn't this September like it is usually for stocks, where people usually get spooked out? What's with the resiliency in the market this time around, given everything going on in the world, particularly in the United States right now?
Yeah, there is a lot going on and lots of sort of points of anxiety. You have the tariffs, you have the geopolitical shifting winds and tides and all those things, and you have sort of a tremendous amount of uncertainty regarding the number of rate cuts that shall follow the upcoming rate cut. We don't know what's going to happen with inflation. There's all sorts of questions about the labor market. There's just a tremendous amount of uncertainty everywhere, which should rationally create a much higher level of instability in the financial markets. I just think that you just have this one minor issue of the largest and most significant technological revolution in the history of all humanity, larger than the railroad, larger than electricity, larger than steel beams and skyscrapers and the internet and the telephone, or the combustion engine. You're dealing with the artificial intelligence supernova that no one fully comprehends. And as a result, it is powering an incredible upward momentum in all equity values, rationally or irrationally, and it renders any traditional analysis of underlying macroeconomic fundamental information as utterly irrelevant. in fact, a byproduct of the success of artificial intelligence shall be an incredible spike in unemployment and a wide variety of sort of outlier economic data as the entire infrastructure of the labor force is rearranged to eliminate all junior level computer programming, all junior level financial analysis, all junior level communications, all junior level marketing, a tremendous amount of junior level legal work, all as we speak is in the process of evaporating, the consequences for which the world does not yet know. But the short-term reality is that there is a buoyance and ebullience and effervescence, if you will, that expresses itself in equity pricing, and as such steamrolls those who are foolish enough to stand in their way with comments about jobs or inflation or tariffs or other things. And that is why this particular September, and I suspect October, shall be some of the best performing months of any September, any October that has ever been witnessed by man or woman at any time.
Oh, Ilya, we're going to hit Bank of America's target.
Interesting then that stocks haven't gone anywhere in a month.
It's a legendary hater.
It's early September, wise guy.
No, but it's, let's say Bank of America is right. We talked about their estimate for where the market will close in next year.
Mm-hmm.
We're talking 9,700, I think their target was.
Looking for 10 grand over here. They should ask this guy, 10 G's.
Well, that would just be unbelievable. You can't give a round number, right? It's like the 17 trillion, 2 on the nose.
Write it down.
It was 20.
Write it down.
Ilya, this all of a sudden is becoming a little bit of a different candle here as we go into the close, because all of a sudden the high for the day, 65.32, we're going to be closing effectively at the high. I see a NASDAQ and an S&P, though, that are still somewhat range bound. So if you're a bear, right, as a bear, where are your tap out levels if this market's about to rev up? That's it. Just keep it to 65.42, and then the NASDAQ 24,068.
Yeah, I mean, obviously support and resistance as such are never a level. They're usually kind of like a squiggly line drawn with a shaky highlighter. But give or take the highs. If you have a convincing break of the highs, then obviously the consolidation has been a correction in time, let us say, rather than a correction in price. The markets have digested. The next leg of the move is upon us. That move will ostensibly have legs if it occurs. In the meantime, the risk reward is unmistakably better being short. There's just no question about it. Vol is incredibly cheap. You have all the reason in the world to see asymmetric opportunity, because if you're short, then you're going to be wrong very fast. If in fact you are wrong, you're within spitting distance of the highs. And you haven't gone anywhere in a month. And in not going anywhere, you got 90%, 91% certainty that you're getting this rate cut. In fact, a little sprinkling of a possibility that you're going to get 50. The markets are convinced we're going to get 3 more cuts next year. Earnings out of these Mag 7 names that Dylan loves so dearly, they've been pretty good. In fact, not a one of them missed expectations. Tesla was the soggiest. It met on EPS guidance, but beat on revenue. Not a one of them missed. Meta essentially took the doors off the hinges with their report. And still, stocks have gone nowhere, but the rate story has only gotten better. Why can't this market rally? It has the good news. What's going on? All the indications, aside from jobs data, seem to suggest, in fact, that the economy is reheating. That economic growth is picking up. That seems to be the story in the ISM numbers, in the S&P Global PMI numbers. What is it that this market hates so much that it can't rally for a month straight? So in my mind, if it does decide, and maybe it's just that it discounted all of the imaginable AI hopium, and now it needs perhaps some confirmation from the Fed that for all the many unknowns that we can't fathom from here, there will be cheap money to make those unknowns digestible. Maybe that's what it is. And that will set the markets off on the next leg higher after this consolidation. It could be. Or it could be that all of the AI hopium is indeed priced in, and the Fed is going to look at this and say, you're not getting all the rate cuts that you think you're getting. And then the cheap money isn't coming. And then everybody has to worry about all of those uncertainties, including uncertainties suddenly around a Supreme Court case that might invalidate most of the tariff architecture that we've spent 5 months attempting to digest. And so then there's, of course, the situation with the Fed and whether it will credibly provide any kind of policy support that anybody can believe in if the fiscal side ends up getting its way and taking over, at least in spirit, if not in fact. And so you have all the architecture you would need for the markets to go, right, okay, we already know all of this pie in the sky AI stuff. In fact, the fact that we're talking about it here means the markets have discounted it ages ago. And so with that in mind, the risk reward is fantastic. So if you're wrong fast, and you flip over and you get long. And if you're right, the opportunity is many times over what the risk is.
I'm not sure if I like it, Chris. I don't know if I like it at all. I'm not sure I like the use of the word hopium. I feel like there's a little bit of sarcasm coming from.
There might be a soupçon of sarcasm.
I feel like listen, he was entitled to the monologue. I took mine. He was allowed his, but I would just like to comment that I felt like there's the use of the word hopium was had a touch of condescension.
Dylan, there's a position sitting here in the follow account that was initiated 100 ES points ago at 64.35 long, purely out of spite against Ilya's antics.
Yeah.
Do we keep it on, given his recent diatribe?
Double it up. Double it. Every time he says hopium, I want you to double it.
Yeah, I mean, I have the kind of capital allocation for me to go on broken record mode.
Yeah, I mean, I'm out of directionally neutral things in stocks. That was just a one-day thing for this morning, and quite frankly, the way volatility dipped this morning in the market after the revisions to the jobs report, where it kind of just got pinned around 6,500. I was at 80% plus target profit in the SPX short iron condor on the 0 DTE. So having mismanaged the reverse iron fly 0 DTE on Friday, when I was basically trying to get from 85 to 90% max profit on either side and ended up closing out a complete bust, I said, you know what, stick with the mechanics, got what I wanted, get out. And then this market rallied. So the only things that I had on today in the rally were the call spread in ES and then the MES long position here in the follow account. I'm totally comfortable sticking with them, although this feels kind of trappy if we're going to be forthright as we get ready for CPI on Thursday, because we haven't cleared the NFP high. The NASDAQ hasn't quite gotten, so it feels like we're going to make an attempt, right? The NASDAQ's going to make a drive for 24K. The S&P is going to try to spend some time above 6550. And if we can't hold there through the end of the week, is going into next week's non-farm payrolls report on a little bit of shakier footing. But in terms of the equity market move, right, we've now seen with these revisions, and I think this is the real story here, because it seems like we're 40 minutes in. I can't believe we haven't talked about this. How weak was the Biden economy last year? 911,000
fewer than expected.
911,000 fewer jobs in the April 24 to March 25 windows. This does not cover the Trump presidency, but it follows on last year when the initial revisions were 818,000 jobs lower, and then when we ultimately round out into the final form of that report, I believe it was 598,000 with a final revised lower. So between last year's final revision and then this year's ultimate preliminary revision thus far, we're talking about 1.5 million fewer jobs in the final 2 years of the Biden presidency. I think, again, that's really worth contextualizing here. What does that mean in terms of the run rate for inflation during this, run rate for jobs during this window? The prior jobs growth was 147,000 jobs per month based on the data that we had for that window, April 24 to March 25. Now, less than half, only 71,000. Ilya, if we think about all of the releases that we've had over the past year, okay, and you lob 71,000, if you lob off 76,000 jobs per month, which is what we effectively just did, okay, you're not talking about a Federal Reserve that may be considering cutting rates in September. You're talking about a Fed that should have been cutting in March, in June, in July. It should have been cutting.
And then
last
some
summer.
of us get guff for questioning the strength of the economy and the likelihood of recession risk. The markets and the economy are, of course, not the same thing. But this is exactly the kind of thing that you get in the anecdotal data, like the PMIs last year, that you don't get in the official data, that keeps the Fed from cutting and that gets the markets going. You need to get a move on here.
Get a move on here, though. We joke tongue-in-cheek over the summer that we're going to get 0 or we're going to get 50. And it feels like last summer deja vu all over again.
Yep.
The only question is whether or not it's a maintenance cut or a recession cut. Given what we've seen today, Ilya, do you think the market's gearing up for a recession cut or a maintenance cut when the Fed cuts next week by whatever degree it does?
I think that will depend very, very strongly on what shows up in the SEP. I think the markets care much more about the SEP than they care about the actual move. I think the move is priced in. The markets are, at this point, sitting at about 60 basis points for the year. So they're a little bit under 50-50 on a third cut. They know that, though, that the 50 basis points that the Fed's been telling them about since December of last year, they know that's coming. There's no controversy here. The question is, what's going to be in the SEP? And I think if what's in the SEP looks scary, it can look scary in two ways. If the Fed goes from seeing 1 cut in June to now seeing like 3, I think that would be scary. I think the markets would look at that and go, oh my God, they missed recession.
Okay, hold on a second. But if we get to 3 for next year,
yeah,
that is going to require.
Markets are already there.
Markets are there, but for the Fed to actually get there themselves, it's going to require 8 members. This comes from Rand Max Neil Dutta. It's going to take 8 members to lower their year-end projections for 2026 to 3%.
Which is why it's not going to happen.
But they could do that over 2 meetings.
They could. Well, the next update would be in December.
Okay, I'm saying they can do that over 2 meetings in which an SEP is produced. They could signal next year that they're at 2 to 2.5, and then in December they say that 3 is coming, and so the market says, okay, the Fed's not there yet, but directionally they're moving towards we are, so they get the picture.
And this is exactly what they want to see. I think what the markets want is for the Fed to go from 25 to 50. They want to see that there is movement in the direction of the market's forecast. But the other way that the Fed can spook the bejesus out of everybody is they stay at 25 basis points. And they say, well, actually, have you seen the PPI data? This inflation isn't going anywhere. Have you seen the second quarter GDP data? All of the things that were keeping tariff inflation at bay, the front running of them and the building of inventories, that's already going in reverse in the second quarter's GDP data. Never mind thereafter. The barrier that wholesalers decided to put on their back and insulate consumers, that disinflationary force, that's now spent as of July. So I think the Fed looks at this and goes, well, if we were worried about pass along inflation before, We're doubly concerned about it now because we can actually see it. Before then, it was hypothetical. Now, it's in front of our face. Are we going to commit to more rate cuts and encourage the markets to bake it in further? Would that be the thing we want to communicate? No. We want to tell the markets, hey, don't you dare build out inflation expectations. And so with that, they stay at 25 basis points and the markets go, but we want 75. And that's a rug pull.
I don't like his attitude one bit. Don't like it. Don't want to hear about it.
Guys, we have 15 minutes left here. Let's change our focus. I read a really interesting article on The Atlantic yesterday, Dylan, which I thought that would be interesting to discuss here because it's less about the short-term macro and more about this AI revolution. It comes from Annie Lowry. The job market's hell. Young people are using ChatGPT to write their applications. HR is using AI to read them, and no one is getting hired here. She's painting a paradox, right?
Exhibit A, sir. Exhibit A.
That's fantastic writing, by the way. Just
this AI wrote that article.
Okay, so let me give the background here because
kudos, Skynet.
You may not be able to get the full view, but basically she says on the surface, the U.S. economy looks healthy, 4.3% unemployment rate, wages have been ticking up, corporate profits are higher, wages in real terms, right, outstripping inflation. But when you look at this, hiring is stalled, young people in particular, the college unemployment rate this year or recent graduate unemployment rate is going to tick north of 5%. For context, where it was in pre-pandemic 2019, the unemployment rate for new college graduates was about 3.3%. Okay, so structurally it's a weaker market, and obviously new college graduates have a higher unemployment rate than the broader economy, which still sees a 4.3% unemployment rate. So I don't know. I mean, first off, I'm trying to figure out whether or not this is even, should companies even be using AI in screening, Dylan, like this? How are people going to get around this, though? Because if we are really in a world where young people are using ChatGPT,
there's no more people. It's all robots submitting and robots reading. The whole thing is now been reduced to human beings using AI to draft resumes and proposals that are then sent to other human beings using robots to evaluate those proposals. And I'm being a little bit sarcastic right now, but I really think that we're coming to a place, I believe we are very rapidly going to come to a place where face-to-face human interaction and human dynamics are going to be at an incredible premium, because I actually believe that we're going to see the value of digital or written, that basically non-physical interaction is going to move to a zero value proposition, because even if the resume or the proposal was not written by AI, or if the evaluation or contract award is not made by AI, it's going to be presumed that it is.
Welcome to the dark side, sir.
Sorry?
So
welcome to the dark side, sir.
Elliot,
I agree completely.
So I think you're going to see an incredible premium on, I need to sit in the same room with Ilya and talk to him and ask him, how is he going to navigate this chat? How is he going to help me, this company, this organization, this college, this institution, whatever it is, or whoever's on whichever side hiring a contract, awarding a contract, or pitching a contract or a job or whatever. It is, how is this individual going to help this institution solve this problem? And how are they going to use AI to do it?
So I have 5 questions here that I want to talk about and give you guys each a minute to respond as we wrap up the last 10 minutes.
I just believe that I just want to finish. I think young people are in the greatest peril. I just think that all those entry-level jobs, as I mentioned, finance, programming, communications, legal, marketing, are fucked.
Okay, so let's start there, though.
An entry-level job is going to become something else.
Right. So for younger workers facing these longer job searches and fewer stable career paths, how sustainable is the current system that we're dealing with here if this is going to be such a disruptive technology? Are we risking eroding generational trust in markets and capitalism itself if we're pointing to a labor market that no longer functions in service of the broader economy, Dylan?
Yes. Next question.
In the
Ilya, do
short
you-
term, yes. In the long term, no. This is exactly the same thing as what happened to the music industry with the advent of streaming. Eventually, whereas before you had to come see the man about a record contract, and the man would use the incredible resources of a record label and a media company to push things out there. And when streaming occurred, all of a sudden it disrupted that ecosystem tremendously. Outlays on artists fell away. All of a sudden, everything started to get worked down to the lowest common denominator of ringtone nonsense, until individual musicians figured out that you don't need the man, that you can make money as a solo entity, because
SoundCloud,
now
YouTube,
with
Spotify.
technology you have all the ways to market.
But isn't that an economic revolution? Isn't that an entirely new economy?
Of course it is. Of course it is. But but what happened to musicians in that transition is already happening to filmmakers that don't need studios,
for sure. Yeah.
and will increasingly happen for everyone, where I don't need.
What happens to the millions of young people that sort of paraded through the financial institutions, the big PR firms, the ad agencies?
Oh, there's going to be. So I say in the short term, I think you're absolutely right. But what that transitions into is any individual person doesn't need an entry-level job, because they're able to go from ideation to realization thanks to Skynet. And so the time when you have to go and you need
some hierarchy
the
of
man
an
for scale.
institution. I hear it. I got that.
There's a much different gap there. You can get a lot more done as an individual and go fully to market with your services, whatever they are. Because I think you're absolutely right. The premium is not on doing stuff, it's on thinking stuff. Because the base of doing stuff, Skynet will do for you.
All right, so if this article is an indication of where we're going, if workers, young or old, can't reliably connect with employers and supposedly a healthy economy with a 4.3% unemployment rate, is the labor market still functioning as a credible allocator of opportunity, or is it breaking down something closer to a lottery system, Dylan, or something worse like a neo-Gilded Age where power or proximity to power?
It is an irrelevant piece of data that exists only as a placeholder in the mind of a generation that will die off in the next 20 years, and it will go away. And there'll be different metrics. The labor market as it stands right now, as the way it is presently measured, is relevant only because it is institutionally habituated to my generation and those older than me, and even you guys' generation. But the generation beneath you guys, and certainly the generation beneath them, this measure of the labor market will be, there is going to be a compulsion for an entirely new set of economic metrics in order to have any indication of the health of the economy, because the old metrics will prove to be irrelevant.
Well, and you'll probably, as more and more people are able to generate value without being employed by anyone, and likely don't need to be employed by anyone for much longer until what they provide requires the scale of a larger organization where they couldn't get to market by themselves at that point, you're probably going to start to have to measure output, not necessarily in terms of employment as you are in terms of things like consumption, investment, and employment as an input. I mean, GDP is still GDP, but how you get to forecasting GDP probably starts being less about the increase in non-farm payrolls and the unemployment rate, and things like retail sales become very big numbers.
Thinking about the slowdown in the labor market, right? Last year, if we're talking about an economy growing at 70 100,000 jobs a month, 71,000, 72,000 jobs a month. That's basically frozen.
Yeah.
And that's more or less been the run rate this year so far. It's been very slow, sluggish. Again, no one is getting hired here. Dylan, I can't help but go back to this notion that if the private sector is going to remain in a low higher equilibrium status, and maybe Trump's deportations ultimately turn this around, right? We remove such a substantial supply of labor from the market. It's going to lift wages across the board. It pulls in workers off the sidelines who haven't otherwise, removed themselves from the labor force. Okay. But if the if the private sector remains in a low hiring equilibrium, should the government, or do you think will the government have to step in through an FDR stylized works progress administration or something more unique like UBI? And I can't keep shaking UBI as this conversation evolves over time.
Yeah, I mean, there's going to have to be institutional solutions, whether those happen at the village and city level, at the church and university and corporate level, at the state and county level, or the federal level. I have no idea. I have incredibly low confidence in I believe the gap between competence and awareness in the government and economic reality of a picture that Ilya portrays, I think, very well. I think Ilya's description is probably, somewhat imprecise, but generally correct, which is logical for any sort of future prognostication. But you're going to have, let's just say it's sort of the continued or even accelerated atomization of the economy, of all these individual single sole proprietorships that are using sort of some creative or some product or
it's like
service.
Adam Smith 2.0. Yeah. It's the wealth of nations 2.0.
And so how is that the transition? You're on the verge of one of the most powerful creative renaissances. I don't know if renaissances is a word. You're on the verge.
I like it and I'll take it.
On one of the most powerful creative renaissance in the history of mankind, and also maybe one of the greatest human catastrophes of lost potential because of the inability to help people adapt.
We hopefully have learned something from globalization, which was this level of transformative good. And I agree. The likelihood is we haven't learned.
When I say back in the day, and I joke and say back in the day 2 weeks ago, I'm not really joking. The rate of change is so much higher than the human ability to adapt. And in the free market, among the relatively highly engaged, highly read, highly active professional class, let's say, which is sort of the most adapted and the most resource independent and the most connected, and they're all behind. Everybody's behind. And so, if the leading edge of the most adaptable layer of the economy is behind, that means every other layer, whether it's older people, younger people, whatever the layer is less. And there's no layer that's more behind than the government, who's sitting in a delusional insanity of some institutional structure that has them completely detached from the reality of generations of 22-year-olds for whom millions of jobs are evaporating by the day.
I guess the question that I have isn't that any of those things are incorrect, because I think they are absolutely correct. I think the question is, when has it ever been otherwise? When you get a transformational thing like this,
the rate of change, just the rate of change. The rate of change.
Well, and you'd expect it to accumulate, right? You'd expect the rate of change to accumulate because each revolution builds upon itself, right? We couldn't have invented telecoms.
But we weren't ready for the horse and buggy to the car. We were, and that took, this rate of change is by the day. It's nuts.
All right. Well, we will get back to arguing about the rate of change around horses and buggies tomorrow, because overtime is out of time. We'll be back same time, same place, 4 p.m. Eastern, 3 Central, right after last call Interesting conversation here, guys, today.
I want to do a new podcast, Two Dirty Shirts.
I have no idea to which you're referring. For Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Two Shirts Vecchio in New York. After this, a brief break. More Tasty Live coming at you. Ilya Spivak with Macro Money up next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The markets mark time on Wall Street today, although there is a little bit of positive drift as we get ready for U.S. inflation data. The biggest piece of event risk this week, and ostensibly the last thing the markets need to see before they get hit over the head with a Fed policy announcement next week that they have been hoping and praying will restart rate cuts. What's coming up first? We're going to break it all down here on this first episode of our two-day inflation series. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And we'll begin with a conversation about the Producer Price Index, or PPI. That's the first part of this story this week. And we'll start off there, taking a look at, first of all, how the markets are setting up before the data, what the data might do, and why the markets are likely to care about it. And then how I, at least, am going to stay positioned in the markets for the data and what I'm looking to see with those trades that I have on. So let's start with what the markets did today. And of course, I took this snapshot a little bit through the post-close jostling and finalizing in the futures market. So don't hold me to the absolute second decimal spot for all of this. But this gives you a sense for what the markets did today. Some narrow gains for the S&P and the NASDAQ, relatively quiet overall. We get a move higher in yield, so bonds take a step back, but not a significant one. The explosive gains we saw coming out of last week still very much the dominant trajectory. Crude oil wiggles up a little bit, up 0.67%. That may or may not have anything to do with another round of shenanigans in the Middle East. There was, of course, an Israeli strike on Hamas leadership in Doha, Qatar. So it's certainly something to keep an eye on here. But at the overall sort of level, crude oil is relatively little changed and still, for the most part, stuck at the midpoint of a range that it's occupied since at least, it would seem, the beginning of the year. The top of the range somewhere in the vicinity of 74. And that's if you look at the extreme high, and the sort of upper 72, 73 area if you look at the closes. And on the downside, around 54. And the midpoint of that range, the place where things have increasingly anchored around, seems to be somewhere around 62 to 63. And we've been stuck with very little movement around that level, basically now, as a sort of oscillation point since, let's call it, the second half of April. It was first a kind of barrier on the upside, then we broke higher, and now it's a barrier on the downside, and we continue to oscillate within very little distance of that center line, and let's call it 54 to 74, the outer bounds. So yes, crude oil wiggled higher. No, it didn't really do anything particularly convincing or set any kind of a meaningful path in a clear direction. Gold down a little bit after hitting a record high off about 0.2%. So it looks like the very spirited momentum we've seen is cooling a little, at least in front of the data that's upcoming. And the U.S. dollar managing a relatively spirited recovery here, up almost 0.5% against the euro, and flat against the yen, having been down significantly overnight. Bitcoin down 0.77%. If we look at how all of this filters into the performance for the week, we can see here that there's a sort of recovery, at least in some parts of the architecture here relative to last week. We can see, of course, last week a significant decline in yields. Bonds went higher. Now we can see yields are correcting a little bit in the opposite direction as the markets digest. We can see gold is up on the week, so momentum continues there after what we saw last week. The dollar is a little bit better here, it seems, on the whole. So euro is a little bit lower, yen is a little bit lower. For the yen, this is continuation. For the euro, this is a little bit of a step back amid its attempt to recover, and stocks are seemingly finding a little bit more momentum as they correct, but as ever, we are stuck in the same range where we've been basically since mid-August, when that month's CPI data release wave gave us what we are now angling for: next month's rate, or next week's, I should say, rate cut. So as the markets wait, this is what they're waiting for. And the first episode here, as we say, is the producer price index, this. And then we're going to get the headline consumer inflation data on Thursday. So what is it that we're expecting here? We can see there was a massive surge in PPI in July, 0.9%. We're looking for a little bit of a cool down there. The core seen at a little bit of a lower level, from 3.7 down to 3.5, but the headline seen holding this 5-month high that it set in July at 3.3%. And here's July's data. You can see the 0.9% surge. It ends up being the largest jump in close to 3 years here. And that, of course, tells us first and foremost that whereas at the beginning of the year there was some concern around the tariffs, but companies were not prepared to make that concern the problem for consumers, because of course they didn't want to destroy demand until they saw what the architecture of policy would really look like. As of July, they stopped eating the tariff costs in margins and started to pass it on. Here's the year-on-year number, and here's that 5-month high that we're expected to hold at 3.3%. In July, that was the highest since February, and we're expected to hold this level. Going back to the month-on-month readings, you can see here is the overall margins data within July's release, and you can see here a sharp rise in margins. This final demand trade services component measures where the margins for wholesalers are, and you can see here they've expanded here rapidly. So you can see that they're increasing their prices as input costs change. If you go earlier in the supply chain, this is intermediate demand, whereas this is final demand. So this is the wholesalers that are closest to retail. This is the beginning of the supply chain and where tariff costs occur initially. You can see here there was a massive decline in margins because businesses basically said, we are going to take these costs upon ourselves and we're not going to pass them down to even wholesalers later in the supply chain, never mind to consumers. Now you can see there is a clear change. And while at the beginning of the year there was this attempt to insulate from tariffs, it looks like that's run out of road now. Moreover, at the same time, the GDP data for the second quarter tells us that the other major thing keeping consumers insulated from tariff inflation is also falling away. So in the first quarter, you can see here, there was a massive rise in imports. And since imports are something you subtract from overall GDP, GDP is consumption plus government spending plus investment plus net exports. Net exports is exports minus imports. So imports is something that you take away from GDP. So you can see that the fact that we have a big down bar here tells you there was a massive increase in imports, which ended up being a downdraft on GDP and gave us a negative reading in the first quarter. That was companies attempting to front run these tariffs. You can see that all of that ended up going into inventory. So there was a giant jump here, a jump like we haven't seen in a very long time here, clearly in inventories, because all of these imports didn't go to service immediate demand. They went to stockpiling so that companies could sell things at the pre-tariff rates longer. Well, look at the second quarter, and all of a sudden you see imports are a big up bar. That means they fell hard. Meanwhile, inventories come down. And exports, as you can see, continue to be essentially a non-factor. The fact that you have these imports collapsing here tells you companies are not restocking these inventories. They're spending them down. And so you're running out inherently of the supply of pre-tariff goods. That's another thing that was keeping consumers somewhat insulated, because there were these inventories at the lower costs, and those inventories are being pulled down already in the second quarter. Never mind what's already occurring in the third. So the concern here clearly is that as companies are passing on these costs, and as they run out of inventory to insulate consumers from these costs, you're going to get more inflation, and exactly the kind of thing that the Fed is concerned about. Weak jobs and inflation at the same time. And of course, we've heard time and time again from the Fed that yes, they're beginning to become increasingly concerned about the labor market, but also that they are not going to allow these tariffs to go from a one-off tariff shock to inflation to lasting inflation expectation gains. And so this, of course, is precisely the kind of stage setting that is critical for next week's Fed policy announcement. Now, that's not because a rate cut might get taken off the table. That much seems almost certainly not a viable possibility. We can see the likelihood of at least a 25 basis point cut at next week's meeting is now north of 90% and approaching 92%. And the edge case here isn't that rates will stay on hold, but that the Fed will actually cut by 50 basis points. The likelihood of that, 8.2%. The bigger issue is what happens thereafter. So we've pointed out before, the markets are betting on a lot more easing next year than the Fed has allowed for. So the market sees 77 basis points in rate cuts next year, whereas the Fed, in its latest forecasting, sees only 25 basis points. You can see here the move from 3.9 to 3.6 is a change of 0.3, or a rounded off 0.25. So The major issue here is that the markets and the Fed are at a meaningful disconnect for next year. And if this PPI data is going to give us more of this and more of this, well, then the expectation will be that consumer prices will go higher too. And it, of course, is helpful in that sense. It makes PPI that much more important this time that it comes before the CPI release. Whereas, for example, last month, CPI came first. And so here, the information that we see in the leading survey data becomes all the more pertinent. We can see here the spirited rise in the price index from the ISM report on services here is telling us just about what we would expect to see. There is about a 2-month lag between this and the major measures of consumer inflation, CPI and PCE. So we can see here, once we lag them 2 months, these things start to line up, and we can see that what seems to be foretold here coming up is an inflationary surge. And that will be exactly the kind of thing that you'd expect to see as tariff costs start to actually arrive for consumers after having been delayed by this eating of the margins for wholesalers, and of course by this front running of the tariffs and inventory build out. What does that mean from a practical trading perspective, and how do you position, or how at least am I positioned for this? Well, you can see here, as we've discussed before, the relationship between Fed policy expectations and stock markets. And it's not difficult to see what's going on here with the naked eye. You can see at the beginning of the year, right around February or so, where the markets start to see business confidence falling off, consumer confidence falling off around the rollout of the first batch of tariffs. You can see that stocks don't like it, and there's clearly a sense that what this will mean is something negative for the business cycle, because there is a shift significantly lower on policy expectations. And as a matter of fact, we end up by the bottom here in early April at 137 basis points in rate cuts being baked in, which, shock of shocks, right around where we are now. What's interesting, though, is that these things move in tandem until they don't. This, of course, is that Liberation Day shock, and ultimately a sentiment recovery. Because what happens is the president steps back once the markets hit a level of panic, and there's a 90-day pause, and there's a sense that the White House is, in fact, responsive to some degree of market discipline. But consider what then occurs. As sentiment recovers, there is a clawing back of some monetary stimulus, but it runs out of road right around here. That lines up with stocks recovering to here, which lines up very nicely with where the shock began in the first place, right there. And then when we look at what then occurs in markets, we then see this outlook become increasingly more dovish, just not for this year, for 2025, where things at this point anchor to where they started, back here. So the growth scare is fully reset. Here's where the growth scare is. Here's where the policy baseline is, down about 50 basis points. Everything resets. Stocks reset. Expectations for this year for the Fed reset. We end up right around where we were before. But what the markets then do is they start to bake in tons and tons of easing for 2026. And the Fed has not endorsed it. But the markets clearly think it's coming. Not surprisingly, that has been a very convincing lift on equities, which of course one might expect were one to look at an expansive, speculative easing cycle that the Fed is yet to make official, leaving, needless to say, room for that speculation to occur. Now, maybe the dollar has already sniffed out that we are unlikely to get quite so much easing, because we can see that the dollar stopped falling as early as the beginning of July and hasn't made a new low since, even as expectations have become more dovish. So perhaps the dollar reasoned that we're already at the place beyond which we will not go. And perhaps the dollar already found this out as recently as 2 months ago. And this is why it stopped falling, having fallen very clearly in line with this dovish shift in expectations. And so perhaps what we're setting up for, if in fact we're going to see something like this, is the markets having to work this back rather than the Fed having to mark this up. And so, needless to say, that puts all of what we saw here in danger. If in fact a significant portion of it owes to this dovish shift in expectations, which it most certainly seems to. So with that in mind, if the PPI data surprises on the upside here, and the pass-through of tariff costs starts to mount, well, then the expectation for the rate cut next week doesn't change. But the likelihood that the Fed goes the market's way in endorsing all of this starts to fall away. And perhaps so do stock markets. So from a positioning perspective here, I am still long the US dollar. This is short Aussie, short pound, short euro, short the Canadian dollar. And thankfully, that went a little bit more so my way at the start of the week here after that post-jobs data dollar pullback. I am likewise long gold because I think its move has been somewhat more linked with uncertainty and less with specific Fed policy outcomes, which is why I think it can hold up reasonably well here, even as the Fed outlook is revised. But I am short Bitcoin through IBIT, the ETF, essentially looking for a risk-off sort of outcome from here. And of course, that's likewise reflected in these put verticals in the Qs or NASDAQ and SPY, S&P 500, and still long at the long end of the yield curve, essentially expecting those rate cuts that the markets want so badly to get pushed further out in time and to keep yields at the long end capped, even as perhaps there is a dilution of dovish sentiment at the front end. With that, we have macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow for episode 2, CPI. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That would feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever?
Ever.
Forever?
Ever.
Oh, no. I mean, Tom has a hard job. He's got to wake up really early, but he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy, and I live here in Chicago, so yeah.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny rocks, boomer shiny rocks.
What does the Sharpe ratio measure?
Return relative to risk.
That is correct. What is a credit default swap?
It's a credit that originates somewhere else, and it's traded for different amounts across many different parties.
That is correct. It's not gonna exactly match what they have on screen here.
No, come on. I'm not the smartest guy here.
For all the marbles, for the PB&J, what is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that, because I want to see a peanut butter and jelly sandwich get made.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in-the-money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number, and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option. So rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
What is going on, everybody, and welcome back to Risk and Reward. Today is Tuesday, just before some PPI announcements, some CPI announcements later this week. I mean, we even had the Apple release today. But before we get into all that, Gus, my brother, how we doing?
Oh man, well, doing good as always. I am reporting to you live from my apartment, a short way from our studio right now, as I unfortunately have COVID. This is something that has just started today, but and I can't prove it, but I think Errol poisoned me because he likes my side of the desk in that studio better. So I'm pretty sure that Errol had some kind of hand in this.
I've been caught. I'm not gonna lie. Whenever I did hop on here after I was done speaking, I looked over to see if you were right there, and I was like, oh. Not even you said that already. Just already used to being face to face. But hope you're feeling better here soon, brother. But we're almost midday into the week, so we're almost there. We're almost there.
Yeah, we're getting through, and this Apple event gives us plenty to talk about today. Something of a somewhere between a nothing burger and a something burger. I don't know exactly where to place it on that spectrum, but I'm excited to get into it and talk some Apple.
I mean, I guess I'd put it into a little bit of a nothing burger today. What's going on, everybody else? Big deal. Data trader.
Well,
Bob
it's
Solid,
almost
everybody.
like we have to start moving the goalpost for what is a nothing burger for Apple, because I mean I've gone on record before, and I know that you share the same sentiment, saying that Apple really has stagnated. I feel like in terms of their innovation, this is not the Apple that we knew in the 90s and 2000s that was constantly doing something groundbreaking. But at the same time, I mean, in fairness to them, it's not like anybody has come and taken their market share. It's not like, I mean, they still are doing new things. They continue to update things. It's just we're kind of in a awkward spot. I don't know how they could innovate. It's why they've been great for so long, is because they can innovate in ways that I don't know how. But yeah, every time we do all this build up and run up to one of these events, and then they just say the phone is thinner and has more storage and the camera is better. It's kind of underwhelming.
It kind of feels like Apple, because I don't want to say it was disappointing. Like if I were to take the same perspective into every single Apple event, I'd probably be disappointed. Sometimes I think I'm a little bit more surprised, and I won't give away too much. We'll just go ahead and get into the slides here. The Apple hype continues. If you're not familiar, the Apple conference was today, where they released the new iPhone, some of the features for the new iPhone, and some of their plans moving forward. And they did that today, and today we're going to touch on some of the details as to what we can look forward to for Apple. So I know a lot of us are in the Apple ecosystem, but if you did watch today, I don't know if there was anything that stood out to you, but the main thing that stood out to me right off the bat, and we'll get into the details here, is no mention of AI. If I had to guess, there would have been a mention of AI. I probably would have. Apple seems really conservative when it comes to new ideas. I know even them stepping into the Vision Pro was like, yo, Apple, that's kind of like not a very solid floor you're stepping on there. But I was really surprised they didn't get into the AI part of things with Apple and what they might be doing over there. So before we get into the details, was there anything that you were hoping for them to touch on as a consumer, or would have been interested to hear from them, at least?
I mean, yeah, I think it's AI, and it's such a funny niche little thing, but man, it's Siri. We have got to improve Siri. I cannot believe how terrible Siri still is, how incapable she still is of very basic tasks, simple questions. And I cannot believe that we do not have an AI integration into Siri yet. I don't even need ChatGPT, man. Give me Claude.
No, keep going.
Give me Gemini. Put whatever you want in there. Partner with whoever you want. I guess if Google partnered with Apple these days, they'd pull out an antitrust suit on them. But it's just, I don't understand how Siri hasn't caught up. And this is such a small, little tiny hill to die on, but I will die on it. I need to be able to just ask my phone questions. I can't feel like I'm living in the future until I can say, Jarvis, tell me this. And then it happens. It doesn't work.
Yeah. I'm seeing here.
I'm excited for the new AirPods, though.
I'm very excited with the AirPods. The AirPods is probably one of Apple's, I think, the best product they've ever made. Not only that, I think they've dominated that niche. I have to give it a grain of salt. I haven't used other wireless headphones, so I bet there's some amazing ones out there. But for the AirPods, at least, I don't think it's a coincidence. That alone is like $1 billion market cap for Apple for a single product line.
I have used some other wireless headphones, and there's certainly ones that can hang, namely the Bose, I don't know exactly what they're called, but the Bose AirPod equivalent product are very good, but they just aren't quite there. The AirPods, I have no understanding of how they managed to create that type of noise cancellation with that small of a product. It is really nutty. If you haven't used a pair of AirPod Pro 2s before, it's very, very interesting, and they are very robust. They have the conversation detection thing so that you don't hear anything going on around you, but if someone walks up and starts talking right to you, they'll turn your volume down and take off the noise cancellation so you can hear that person. It's very interesting, and what I'm most excited about with the new ones that are coming is that I'm seeing that they have heartbeat sensors in them, which is interesting to me.
That is, so it's gonna try and get your pulse from the AirPods, is what it's gonna.
Which is interesting to me because I would kind of like to move away from my Apple Watch. I don't know if I would get a new one. I may continue wearing it, but I don't really think I get a particular ton of utility out of it. It's nice being able to check texts, with just a glance at my wrist, and it's nice for workouts. And the main reason that I've continued to keep it and use it as much as I do is for when I lift. They've made a good system with these rings, man. I really want to close my rings every day, and so that's kind of my only application for it now. But now, if we can do all of that through my AirPods in my ears and me tracking my heart rate and my workout and doing all those things that way, I might be able to move on from the watch, which would be cool. I could stop looking like a spy kid and get a real watch like a man.
All right, Ben 10. No, but last question before we shift gears here. With the Apple Watch, one thing I never liked was being in the gym or doing something athletic, especially lifting weights with the Apple Watch on my wrist as well. Is that kind of what you're referring to?
No, I don't really mind its presence on my wrist. I think it doesn't, weird first thing to go to, but it doesn't ever make sense in a fashion context. And then beyond that, I just don't get a ton of utility out of it. I was sitting there in the gym the other day actually going to start my workout, and I had a moment where I scrolled through all the apps on my watch, and I was like, I haven't even used 98% of my phone apps on my watch. Like, I just don't get that much utility out of it. It is, and like I said, it is nice to just be able to check a text without pulling your phone out of your pocket. Watch vibrates, check that. Do I need to respond right now or not?
A little haptic touch, convenient.
Yeah,
we'll give it
and
that.
And I'll tell you what too. That has a lot of utility if you're like with people or like in some kind of situation where it may be inappropriate to check your phone. Like weird one to pull out, but church. I stay informed. I stay informed while I'm in church because my watch has stuff popping up on it, which maybe that's not something I should be bragging about. Perhaps I should turn everything on
this
airplane
is confessions.
mode,
Go ahead, brother. Yeah. No. I did just see G-Shock being mentioned, and I just got a shout out Laid Back Trader, because if you're from the G-Shock era, you're just a real one, and that's all I got to say about that. That was the Rollies back in the day, the G-Shock. So
G-Shocks were fire. G-Shock still has some nice watches now.
G-Shocks are coming back around.
People like their G-Shocks.
They're coming back around.
G-Shock, I respect it. I think you could probably run over that thing with a semi-truck.
You know what?
This Apple Watch with a semi-truck, it wouldn't survive.
You know what kind of vibe G-Shocks give me? They kind of that and Richard Millie's. So either Richard Millie's give Ben 10 vibes or the other way around. But Richard Millie's always just seemed like such a toy watch kind of to me, and G-Shocks just always popped. Not that I have a Richard Millie and could like give personal experience as to my experience with one, but just based off my perception. That's what it is.
Yeah, in my experience, it's definitely much closer to a Richard Millie than it is a Rolex or an Audemars. That's just in my collection.
It's like, that's why I didn't like it. That's why I went with the G-Shock instead of the Richard Millie or the Rolex.
Yeah, it's like, why would I pay all this money for a Richard Millie? Maybe when I was a boy, but since I've grown, I've come to realize it's best not to spend your money on these frivolous things.
Yeah, exactly. Got to make the smart decisions here because we gotta be able to buy shares like Apple. But I don't know if you've seen, Speed was actually over here in Chicago the other day. And I bring that up because I don't know if the Wall Street of Einstein, you know who I'm talking about, the guy with the hair, Wall Street of Einstein, I'd seen a clip of him talking to Speed, talking about how, yo, if you would have, bought shares of Apple instead of buying the new iPhone after X amount of years, you would have ended up with X amount. And I actually thought that was pretty cool. Just a sidebar before we get into the info here. I thought that was kind of cool because obviously he's trying to put people on that are watching his stream, which is a lot of young individuals on Speed's stream.
Yeah. I hope that he
onto
has
Apple.
an excellent financial management team around him. I hope whoever he has managing his money is trustworthy.
Yeah.
Because there's a lot of it, and it would be very easy to flip his net worth from starting with an M to starting with a B if he plays his cards right over the next 20
Oh,
years.
are you talking Speed?
Yes.
Oh,
yes.
yeah. I mean, if we have some time at the end, we can touch on that. But I mean, just the ruckus Speed was calling, just pulling up to Chicago. Everyone just I just can't. I've never seen somebody have so much pull like Speed, unless it was like the A-list celebrities like 15 years ago.
It is
It's a different
very
vibe.
interesting, the ability that these streamers have to pull people, like more than many A-list celebrities.
Right.
I mean, take just about any NBA player not named LeBron James, and they go walking down the street, they are not going to pull the kind of crowd that Speed is pulling everywhere he goes, in China, in Thailand, you name it. He's doing this everywhere. It's pretty remarkable.
That's really valid. And when you brought that up, someone said the other day, a lot of professional athletes wouldn't be recognized if it wasn't like the star player on their team or whatever the case was. And I was like, I didn't even realize how many professional athletes that are in the NBA or in the NFL that I don't actually know by first or last name.
Oh yeah, I was at the casino one time here in Chicago playing roulette, and there was a couple of athletic-looking guys next to me, but I didn't think a thing of it. And then finally, like 2 hours in, I turned to these guys and I'm like, "So what do you guys do for work?" They're like, "Oh, we're on the Patriots." I was like, "Oh, word, that's fire."
And that's just how it is sometimes. I have a very similar story to a guy that was playing with the Bucks. He just sweats, slides. I was like, "You look like an athlete and look like you could eat me." I was like, "What do you do?" He's like, "I play football, high school down." No, Patriots. I'm like, Patriots, the Bucks. Very similar story.
It's interesting, and I mean, it's like Michael Jackson level stuff. I mean, if you guys watching right now think that I'm crazy or like being dramatic here, go search Speed in streets of China or pick literally any country, and he's probably been there and probably done this there. It is nuts. I mean, he's pulling like shutting down city centers because there's 10,000 people on the street. It's nuts.
I mean, I thought it was wild when he had went over to China. Some plane thing.
And it's really interesting too, because these streamers have such a way of like working their way into culture. Like, I have never watched 1 second of a Speed stream, an Aiden Ross stream, a Kai Cenat stream, but I am still incredibly aware of what they are all doing all the time. Like, not even by choice. I don't follow fan accounts. I don't try to keep up. It just comes to you. These guys are like, it's very interesting.
Can't get away. There's a little bit of our generation, a little bit of our culture we touched on there. We can go ahead and jump over to the platform here. I know we had some of the details with Apple there. I wasn't trading Apple this week. I know we had a couple guys put on some zebras to the downside on Apple, so I know that's doing really well for them at least. There was a pop right ahead of the announcement, and then when they started talking about a lot of the details on the iPhone 17 itself, other products they might be coming out with and future plans, then we kind of got like a sell the news kind of event. Were you watching this live time, or you kind of just had it on the side?
I was watching the share price, yes. I was not watching the Apple presentation, but yeah, and I don't know when we're going to stop doing this with Apple. I mean, it ties back to kind of what I was saying at the beginning of this, that I feel like we need to move the goalpost for what is and is not a slam dunk for Apple, because they're not, I mean, it's like we go into every single Apple event with the mentality that they're going to release a new product, like something we have not ever seen before, the way that it was in like 2000 through 2012 when they're a computer company and suddenly they're like, look at this phone. This is the most revolutionary thing you've ever seen.
You mean this iPod
in the middle of those two?
Oh, yeah, you're right. The iPhone first and iPod.
Yeah, they're ripping those things. So it's like, I feel like we can't be expecting that level of innovation, but the market continues to project as though that is kind of what we're expecting, and it's interesting.
You know what kind of same vibe or same type of evolution, I guess, for lack of a better phrase, that I've seen play out same way in like Call of Duty. That's the same behaviors I've experienced in myself, at least. It's like every year growing up as a kid, since maybe I was like 9 or 10, waiting for the new Call of Duty to drop every single October, every single November was like the coolest thing in the world. You go out to GameStop, you'd wait in the line. Sometimes it's really cold, but they would release a limited amount of video games at that location at midnight. So it was like a thing in the Call of Duty community to go line up at your local GameStop, to wait till sometimes 11, they might open the doors just because Eastern time. If you're in Colorado, they're gonna open the doors a little bit early for you, so some people don't get the game and hop on the servers before you. All those kind of things. It was like a tradition for the community.
Yeah, absolutely.
As-
That's
No,
one of the regrets of my life that I've never been to a Call of Duty midnight release. I was just too young when that was a thing that you did. Anyway, you can go
No,
on.
yeah,
Sorry.
and I barely was able to catch it if I didn't have my oldest brother, which he was like 13 years older than me. I wouldn't have ever even experienced it one time if it wasn't for him. So shout out to him, even getting me into Call of Duty. But with that being said, you would do that, and you would do that.
And you'd be rewarded. I mean, the hype was there. It was real every year.
Yeah,
and
right.
the game was that innovative. Yeah.
Right. You're excited. You're doing that every single year. And then after some years go by, you start to realize, I don't know if we're getting older as individuals, we like video games, or we take less interest in video games, or if as an adult life priorities get in the way. But it's like these games don't hit the same. And it's like the games don't hit the same, but also they haven't really been very innovative. And it was like year after year, it's like, okay, I'm going to buy this Call of Duty one last time. And if it's not hitting, I'm not going to get the next one. But the next year, it's like you get excited again. I don't know if it's just that nostalgia that is helping sell their next product year after year to their loyal customer base. But it's the same way I view the Apple products. It was like we always had such a good experience in the past with this company. So you always got excited. It was just like your body started to get conditioned to these yearly cycles of them dropping something and being excited for that. But it just got really dull. But I just experienced the same type of behaviors with something like Call of Duty and Apple. It's like there's no more innovation. It's a new product. Everything's new, fresh, new updates. But it's like after 5 years, it's getting a little old without any type of revamp.
Yeah, I think that Call of Duty is an excellent analogy because it also does line up. And much like Apple, at a point, you just run out of carrots and you run out of sticks. And what are you supposed to do? And in the case of a video game, the graphics can't get that much better every year. And then with Call of Duty too, yeah. I mean, in the beginning, you get zombies. That's this new innovative thing. And then zombies evolves more. We get perks. We get gobblegums. We get revelations. You get in multiplayer, we went to jetpacks. All of a sudden, that was like this whole new cool thing with Black Ops 3
I hated
with the
that. I
jetpacks.
hated that so much. I could not wait.
I liked the jetpacks.
But I thought it
That
was cool. I think it was just because it was gearing off of what I knew as Call of Duty. So I think I was just being a hater. Not that it was a bad game, but
Sure.
ahead.
That's valid for sure. But yeah, at a point, you just run out of rabbits you can pull out of the hat, and what are you supposed to do? And I think that Call of Duty and Apple both exist kind of in the same capacity, albeit one much smaller than the other, which is that even though the innovation has kind of left, you still continue buying it because you know that it's going to be a solid game. It's normal to you. It's what you're familiar with, and you still think that it's at least can hang in the market, and it makes more sense than changing. We're also at the time of year right now where everybody complains about the new 2K game. I think 2K26 just came out. I haven't bought one since like 21, but that is another one that is serious copy paste every year.
yeah, I mean, it was a very similar story with FIFA. I know we just seen Madden in the chat. If you want to get the work on Madden, let me know. It's not personal. FIFA, Madden, 2K. No, I'm just kidding. FIFA, Madden, 2K. 2K16 was one that was very popular and hasn't really been.
14 to 17 was like the golden age of that
that's
game.
what I'm saying, and I feel like it's fell off. And when you brought 2K21 up, I was like, oh my gosh, we're so far away from the 2K15, 2K16, 2K17 era. I didn't even realize. But
yeah, man, decade ago, we're getting old. I remember, getting all excited to get a PS4 so I could play, I think, 2K15 on it, something like that. That was when the PS4 was new.
That's insane. Don't even say that, Gus. Don't even say that. Don't even say that, brother. No. As we jump into the market here, we'll do a little quick tour to market. The market was a little boring today. The market started going on an extreme rally towards the end of the day. We're short a little bit of gold. We're up a little bit on that today. We're testing that call strike. Sold to 330, 350. Is anybody else in here trading gold too? Gold's been a wild one, Gus, too. Like, gold is one of those that when it moves, I mean, that thing can move. So going to be patient in that position. We got 38 days left till expiration, though.
Yeah, gold maybe kind of overextended on the year. I mean, gold isn't generally something you trade in favor of momentum too often, but this does feel like a spot where getting short may certainly have carry some weight. I was actually just thinking about that yesterday when I think Dr. Data sent us some cool numbers about gold and gold and silver both being kind of overextended, and I was like, man, I think Errol's going to catch this move.
Yeah. No, I got a little bit of a short position on there. Kind of. I think I heard Tom use on the dance floor maybe years ago whenever the stock price was in between the strike that you sold and the strike that you bought. So I'm going to use that term, kind of on the dance floor with that one right now. Got to be a little bit more patient, let it play out. But, we got a little time on there. I'm going to throw on the RSI, the relative strength index, to show when things are a little bit overbought, a little bit oversold. This isn't something I typically use. I've never been a big fan of the RSI. It was one of those things that I heard about when I was first getting into the market. I would throw it up there just to see, what it was looking like. But I mean, based off the RSI, if it's something that you like to use, we are hella overbought right now. So take that with a grain of salt. But I do have a position on in gold. And we got Google. This is an out-of-the-money call spread. We sold $5 wide. Still going to need a lot of patience on this one. Google absolutely ripping to the upside. Is everything ripping to the upside. NVIDIA tried to cool off a little bit more today. We had sold an out-of-the-money call spread on NVIDIA. We kind of just been chopping around since we put in the highs there. I'm going to be patient on that one, but sitting out of the money on those contracts. We sold a put spread in QQQ. That one's up a little bit more today just because the market's been going on a rally. That one was put on, I think, over the last few days, and then we have a longer term position on in QQQ, which is an out of the money call spread, and that one's right on the dance floor right now too. So 38 days, just gonna need to be patient in that one, but I'm gonna be managing that put spread that I sold on QQQ, hopefully by tomorrow, maybe before CPI. I think CPI is gonna be Thursday of this week, maybe try and get out before then. And then RKT, one of the risks of the week. I mean, this one's almost at a max loss, and we'll just go ahead and glaze over that one. And then SPY, sold an out-of-the-money call spread on SPY. I was able to collect about 274 on that one. 10 days left to expiration. This is one that I can manage a little bit earlier because we are sitting in the money right now. If the market doesn't sell off, this is going to be a good one to get Dr. Jim's thoughts on tomorrow, and I'm going to save it with him just so we can go back and forth on it a little bit. But I'm in a predicament because right now I can manage my losses. I can cut my loss because 10 days left to expiration. We're past the 21 days to expiration, and both of my strikes are sitting in the money, right? Things aren't looking too hot right now for this position. So with that being said, I'm going to ask Dr. Jin tomorrow, at least get his thoughts on what would you do? Would you lean to close the position, redeploy the capital elsewhere, or would you be a little bit patient since we're almost at expiration already and maybe get a little bit of a buzzer beater move if the market wants to sell off? But nothing too exciting over here, brother. I mean, Apple was one that I'm going to be interested in for the rest of the week, and a couple other names, but that's pretty much what has stood out so far.
Yeah, I think I would be remiss if we did not talk about UNH, which is it continues to recover quite nicely. This was certainly the highlight of my day today. As UNH, I am quite long calls, naked calls, quite long shares. Got me some UNH in the bag. But yeah, continue to make further legs up. There's just more and more big names that keep emerging, disclosing their positions in UNH right now. And this is, I think that's a great spot. I think that this could have a ton more upside. I mean, because this is all. UNH has had this outstanding lawsuit forever, and as soon as the DOJ acquits them of that lawsuit, which I think is the most likely outcome at this point, it's dragged on for a long time, or even if they put penalties on them, we can at least put that uncertainty in the past, and I think that would cause much more upside. So any upside movement we get before that decision is made feels like just bonus dollars to me. And beyond that, too, that's the only thing that's actually legitimately, fundamentally keeping the company down right now. I understand their CEO got assassinated, boo-hoo, but it's fundamentally that shouldn't change much. You can appoint a new CEO and things will be okay with the fundamentals of your company. So it's just a very interesting spot to me. I feel like that lawsuit is the only thing that's actually for real, apart from sentiment hanging over this thing's head. And once we clear that lawsuit, whether they beat it or not, I think that this has a lot more upside in the tank.
No, I mean, this is going to be a really exciting one. So we'll wrap back around to it. Keep an eye on it. We'll see how UNH digests in the market. I think the Buffett story came out a couple weeks ago. So now we're finally getting some volatility, some movement. Things were a little quiet over the last few weeks, but a really big pop today. That wasn't quiet. Anything else standing out to you before we close for today and we head into the next market day tomorrow?
No, I think that's it. I mean, it was a pretty quiet day for me, despite having numerous positions open. But UNH was the MVP.
We'll see what we get for tomorrow. We got PPI coming tomorrow, and then we got CPI on Thursday. So we'll be aware of that. But we will be back here on Thursday, 4:30 Central Time. Thanks for coming to take the time to hang out with us. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.